restriction was imposed on IOB. Now the balance sheet is quite good in contrast to the earlier years. As a PSU bank space, we like this space. We feel that this space is likely to perform going in the second half and even in the next fiscal year. Even the GST talks, if GST rationalization comes, then banks will be on the advantageous side. Not particular on IOB. I think it will take a lot of time to get his price.
In fact, and I think what Brijesh was pointed out was the near-term charts, because it's up about 5% over the course of the last week. But as Saurabh points out, you might have to wait for a while based on the fundamentals. Benson is calling us from Mumbai. Benson, very good morning to you. How can we help you today?
Hey, hi, very good morning. I called you because I just saw Manappuram Finance going up as soon as the market started.
Yeah.
I had purchased at a price around 254, and now it's around somewhere around 270, which has 273. So is it good to sell now, or can I wait? Can I expect some more uptick?
Okay, so there's quite a considerable amount of information that has come through on Manappuram over the course of the last weeks and months. But Benson, I guess the latest trigger, one can argue and one can never know exactly when, but the latest trigger could be the focus on gold prices, and gold prices are expected to move higher, especially because in the US you have yields that are expected to go down with a rate cut in the offing, and the dollar is expected to lose value, and in that context gold generally gets a leg up. That seems to be the initial reading on this up move. But I will get your view on the technical, since you asked for whether or not you should book profits. Brijesh, on the charts, what's the view on Manappuram?
I think it's extremely positive, and this since we are heading toward the expiry month, the rollover for the next series is extremely positive. So we have a sense that this can go back to 300 levels. So if he can take a risk and he can roll over the position, or maybe like he can just wait for little bit long time, I think he will see 300 on charts. So 300 is the level where the call writers have shifted the position. So I think more or less that close to 300, maybe 296, 300, that should be the immediate upside.
All right, so that's it with regards to where charts are concerned for Manappuram Finance. We've got our next question from Venkat Reddy, who's writing us from Hyderabad. His question is on Engineers India. He's bought 5,000 shares at 246 a piece and sitting on losses over 2,60,000 rupees. Wants to know if he can continue to hold from a short-term perspective or maybe average out. Brijesh, I'll come to you again on this one. What is the view with regards to where charts are concerned for Engineers India?
Engineers are back to the demand zone. This level of 190, 185 is a decent support. So more or less, if in the like for example in the coming session, if it sustains about 200, there is a chance that it can go another 15-20% on the higher side. So this is a demand. He should hold the longs with 185 as a stop loss.
Okay, all right. So that's with regards to where Engineers India is concerned. We've got our next caller. Anil is calling us from Jodhpur. Anil, hi, a very good morning to you. How can we help you today?
Yeah, hi. I have a question. Hello?
I can hear you, Anil. Yes, I can hear you loud and clear.
My question is, I'm holding GNFC, 4,000 stocks, and I want to know, is it a good time to sell it and book profit or hold on?
Okay, Anil, because you're sitting on handsome profits, just want to understand as to when you bought the stock, what was the thinking? Did you see the fundamentals of the company before buying?
Yeah, so I just want to book profit and put it in Reliance or some other blue chip company. So. Okay. Not sure whether is it a good time, and if it is a good time, should I sell all of them or only 50%?
Okay, Anil, I got your question, and I'll take this up with Saurabh then. Saurabh, he saw the fundamentals of the company, bought the counter, sitting on profits of over 5 lakh rupees. Would you recommend booking profits at this moment and maybe enter a blue chip counter? And if yes, what would that counter be?
As far as fertilizer space is considered, I think all these stocks are doing good. This year the monsoon is very good, and it is expected that the Rabi season will also be good for the fertilizer company. With respect to the GNFC, I do not know particularly what is happening with the chemical side of the business, and in that sense, I think it must not be put up a good show. That is why I think it is not gone up with respect to its peers. My sense is it is better to book profits, and if he wants to switch, maybe he can switch to both Reliance or ICICI Bank.
ICICI Bank, yeah. Reliance has been under tad bit of pressure, hasn't it, over the course of the last several weeks, though it has recovered quite a bit from the low point, trading at above 1400. Let's take the next question, and we've got Arjun, who's writing in from Bengaluru, asking about Waaree Energies or any other good stock in the energy sector, and he's not really specified his time frame, so I'm going to assume that he's interested in it based on the fundamentals and he's looking for a long-term view. Saurabh, renewables space, would you pick this? There's a little bit of uncertainty on the outward-facing front for Waaree Energies, if you can call it that, with this whole tariff uncertainty. But would you buy into this one or any other counter in the energy space?
Yes, of course, the tariff uncertainty is there, and that is why the stock has underperformed. 50% of its book is from the US only, and imposition of tariff will impact the company negatively. We like utilities, and especially the hydropower ones like the NHPC and SJVN. Lot of capacities which are there would be which these companies are building and would become streamlined, and some have started even operationalizing. And we expect that going in the next 1-2 years, there should be good revenue and profitability growth.
Since you mentioned SJVN, and only because we discussed it in the morning show, Brijesh, I want to come to you on this counter because another chartist, another technical analyst has looked at SJVN and says that the charts are looking positive and you should continue to add at these levels. Do you also see those patterns?
If I look at the weekly time frame, what it suggests there is some kind of accumulation which is coming to action. So one has to wait for the confirmation. 106 is the level where the confirmation will come. So as and when it closes above 106, that too with the volumes, I think we can see some pullback rally in this. So it is forming a base. So that kind of confirmation is there, but the breakout is yet to happen with the volumes.
All right. We've got our next caller from Bengaluru. Venkat is calling us. Venkat, very good morning to you. How can we help you today?
Good morning, Alex. Good morning to the panel.
Good morning.
So I am having Sri Renuka Sugars around 1100 shares at an average of 40 rupees.
Mm-hmm.
So I am holding it from 2.5 years.
Okay.
From 1 year before, I was in profits, but I did not book it because I thought the ethanol team may play very big. But again, it has come down to the lower levels again.
Yeah.
So around now 29 rupees, something like that. So shall I hold this or book losses and play with some other EV related stocks?
EV related. Okay, I got your question, and there's a lot of seasonality, as you know, Venkat, that plays into these sugar stocks. So, Saurabh, what would you say about booking out? The losses are at about 11,800 rupees or thereabouts. Should he book and move on?
I think it is better to book losses and move on because a lot of cyclicality is there, and plus what is happening to the ethanol, what kind of pricing will be there, how the sugar season will pan out for the companies. I think it is very difficult to take a call, and moreover, this company is still bleeding. Last quarter there was a loss, and I think the net worth is also negative. So it's not recommended to be in a space where the fundamentals, you cannot take calls on the fundamentals.
Okay, so that's with regards to where Sri Renuka Sugar stands. We've got our next question on Map My India. Mohammed from Dubai is asking this question. He's bought 1,000 shares at 1715 a piece of this counter and wants to know as to what should be the next course of action for him. Brijesh, I'll come to you on this one. Map My India on the charts. How is it faring?
On the immediate basis, there has been, I can see some sell-off. Previously, the support came from the level of 1600. So in the worst case scenario, it may go back to 1600 level. That is a demand zone. So my advice is to just stay cautious and around 1600. Then looking at the overall structure and the fundamentals, I think 1600 can be the level where re-entry can be made.
All right. Okay. So that's with regards to where Map My India or C Infosystem stands. We've got our next caller. Sriram is calling us from Chennai. Sriram, hi. A very good morning to you. How can we help you today?
Hi, very good morning.
Good morning.
All of you are fine, I hope. My question is regarding Lemon Tree Hotels.
Okay.
I've been looking at it. I'm a very novice, But I've been looking at the hotel industry picking up and upcoming vacation time. A lot of hotels will go through. So I was looking at Indian hotels. But Lemon Tree Hotels is more of a corporate-oriented one. And I see a lot of promise coming from that. So is it good time to invest in Lemon Tree Hotels?
Okay.
No, I don't have any shares yet.
Okay, Sriram, I got your question. I'll take this up with Saurabh. Saurabh, last week when we were speaking to the management of Lemon Tree, by the way, Sriram, if you want to hear that conversation, it will be available on our YouTube channel. It was a very interesting conversation that we had with the Lemon Tree management. Saurabh, he was talking about how, he is viewing tourism and hotel being one of the businesses that will go global from India. It was a very interesting conversation, and the kind of insights we got was that, there are big plans that the management has for the company. Your view with regards to if this is the right time to enter into something like a Lemon Tree Hotels, and if we were to play the theme, is Lemon Tree the right counter to play the theme?
I think hotel space is continuing to continue to do well, and I think, as I just mentioned, clearly the demand is in their favor with respect to the supply. Now, what is happening that people all of the year go on their birthday, anniversary, and any event in their life. Now the tourism is getting very much attraction after the COVID. With respect to the Lemon Tree, yes, it is more of the business class, and normally what happens there, the seasonality with respect to the festive season, especially in the October, November, December, is a kind of a lean period for especially for the Lemon Tree. So lot of corporate travels comes to a halt, and the occupancy generally dips sequentially. Now, if you look at the prices, the Lemon Tree was there quoting at around 135 to 140, and recently it has seen a good amount of run up. From the long term perspective, yes, it is a good stock to buy, but my sense is it is better to buy in a staggered manner, buy on dips.
Buy on dips is the strategy that you should employ for Lemon Tree Hotels. It's up quite considerably in the recent past, up about 2% in trade today as well. Prasad has got the next question, writing in from Bengaluru, and he has purchased 20 shares of Solar Industries at a price of 16,392. Elevated levels for this counter 2 months back. He's lost a little ground since then, but he's a long-term investor and he's not too perturbed by this near-term volatility, and so he's wondering what the prospects are for the period of 4 years from now. Saurabh, if you have coverage on Solar Industries, what should he watch out for?
The only thing is that the valuations have gained a lot in the stock has got re-rated, and the valuations are quite rich. And because of this, I think the stock has corrected from its highs. But 4 years period is a very long period, and the company has a good story and good future. So my sense, it is good to hold.
Okay, it's a good counter to continue to hold, is the view that Saurabh has on Solar Industries. We've got our next caller. Dheeraj is calling us from Hyderabad. Dheeraj, hi, a very good morning to you. How can we help you today?
Good morning, ma'am. My query is regarding Adani Green.
Okay.
I purchased 280 shares of Adani Green like on Friday at 965 rupees, ma'am.
Okay.
I would like to hold it for the next 6 months to 1 year. So actually, they posted good results, and Brokerage houses latest targets are around 1,200 rupees. So what sort of targets I could expect, and should I average it out at lower levels, and what might be the price points is my query, ma'am.
Okay, Dheeraj, I got your query. I'll take this up with Brijesh. Brijesh, your view on Adani Green where charts are concerned, and if he wants to average out, what will be the entry points? What will be the entry points?
So I think Adani over the next 6 months can go back to 1100 or maybe 1200 on the higher side. So that's a technical view, and the current level of this 950 is a decent support zone. So this is the spread. So 950, 960, this is the range, maximum 900. I don't see 900 coming, but then that is the maximum correction. So within this range, he can keep accumulating, and then over the next 6 to 8 months, 1200 plus can be the possible upside.
All right, standard disclaimer here, Adani Group is part of the Adani Green is part of the Adani Group, so is NDTV Profit through NDTV Group. MGL, Mahanagar Gas, is the name of the counter we're talking about, and 1,320 is a quantity that Chandan Jain from Hubli in Karnataka has bought at a price of 60 rupees per share. Is that right? No. I think the purchase price is... No. The purchase price is definitely wrong. I think it's 1320 is... 1320 is the buy price, 60 rupees is the quantity. See guys, you need to make it absolutely clear so that there is no confusion. 16 months is how long he'd like to hold it for, or the short term, and he's wondering what to do from here. Brijesh, on the charts, what's the view on MGL?
It's slightly, there has been distribution, some profit booking is happening, and recently during July there was a sharp sell-off, and that sell-off came from the level of 1400. So slightly cautious view, this can slip back to 1200, 1250, so that's a demand zone. So that is a lower end possibility, and after we see those kind of levels, if there is a volumes picking up, then we can figure it out. But on the immediate basis, maybe another 100 points kind of a correction can be possible.
Okay, all right. So that's with regards to where MGL stands. We've got our next question on Yes Bank. Rahul Shivni from Gurgaon is asking this question. He's bought 19,650 shares at the levels of 19.4 and wants to know as to what's the target, and now with the developments that are on the way for the counter. Saurabh, I'll come to you on this one. The stock is probably buzzing today with the news that SMBC is probably buying stake in Yes Bank, and that's the reason as to why the stock is buzzing today. Your view with regards to where Yes Bank stands and what should he do considering he is holding a significant amount of quantity?
Particularly on the level of the balance sheet and the numbers reported so far in the recent quarters, I think the stock price is reflecting. In my opinion, I think it is maybe a little higher than what it is expected. So I don't expect anything more to come in terms of valuation re-rating or the price up move. My sense is it is better to get out.
On the fundamentals, Brijesh, is that the view that you have on the technicals as well? I must point out that we asked about this before the market opened, and the view was that at any pop that you get, if you're holding, you should exit. Brijesh, do you hold that view as well?
Yeah, even I do agree. Maybe a maximum 2021 level. I think one should take that as an exit opportunity.
Got it. All right, let's take the next question. SC is the name of the counter we're talking about next, and Arjun from Kolkata is writing in. He's got a 7 to 8 month time frame, and from that perspective, is it the right value to get in? Brijesh, on the charts, 167, is that the right buy price?
Not very sure, because this can be the partial kind of a way where he can make a entry, because there is a further downside. 150, 145 is the level where it has got a very strong support. And on the way up, 175 is a resistance. So this is going to be in a very trading kind of a zone. Undertone is slightly cautious. So I will be waiting for 150 levels on the downside.
Okay, all right. So that's with regards to where CESE stands. We've got our next question from Meenu, who's writing us from Kerala. She's asking about HCL Technologies. She's holding 15 odd shares for more than a year now, and her buying price is 1478, and wants to know if she can continue to hold from a longer term perspective. So the stocks, overall been buzzing in trade today, and the entire IT pack is seeing gains today. Your view with regards to where HCL Tech stands, and should she continue to hold?
Among all the IT biggies, HCL Tech is good to hold. I mean, if you talk about the business prospects, not any of the company has guided for a good higher single-digit growth for FY26. But recently, the news of the Fed cut is expected to boost, the economic growth in the US, and maybe the discretionary spend will again be resumed and will benefit the Indian IT companies, and that is the reason some of the IT stocks have started buzzing in. From the long-term perspective, yes, this is a good stock to hold.
All right, breaking news at the bottom of your screen. BCCI has ended its contract with Dream 11. This is something that was anticipated. We've got more time on the other side of this very short break to take your queries, so keep them ready and we'll be back before you know it. Do stay tuned.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें। गोल्ड ग्लास, क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching Ask Profit on NDTV Profit. Now, the changes to the structure of the goods and services tax that is been approved and that will be considered by the GST Council is something that is expected to give a much needed fillip to quite a few sectors in India, not least to which the automotive space. But it's going to have a period of pain as before it becomes implemented or it comes into force, you will have a period where people push forward their purchases. That's the reason we're talking about this today, and we're in fact going to listen to what the Federation of Automotive Dealers Association has said to the government. It's written to them, urging them to expedite the proposed rationalization. Danish Anand has seen that letter and is joining in now to tell you more about that. Danish, what are you picking up?
Like you very rightly said, that FADA India has written a letter to three key ministries, Finance Ministry, Commerce Ministry and the Heavy Industries Ministry, seeking the early implementation of the proposed norms. So like last week, the GOM on GST rate rationalization had met and they had recommended that the GST of 28% that is currently applicable on small cars, that should be reduced to 18%. And similarly, GST on luxury vehicles would be charged at 40%. So basically, the GST Council will have to take the final call. But after this information has come out, the general public is now delaying their purchasing plans of cars, and the FADA has clearly said that this is creating some kind of pressure on the dealerships, as many people are just either postponing their bookings or they're waiting for the GST to come down. And the concern of FADA India is the fact that the festive period is at least 4 weeks away. So in the run-up to the festive season, the dealers anticipate like really slow sales, and hence they have sought early implementation of the proposed GST norms. The GST Council meeting is supposed to take place on 3rd to 4th September, and they're seeking that before the festive season, the reduced GST rates should be implemented so that they don't face any losses.
Thanks so much for joining us and giving us that perspective. In fact, we're joined by Saharsh Damani, who is the Chief Executive Officer of the association. Mr. Damani, thanks so much for taking the time, and I hope that we've laid out the context for this conversation. I just want to understand, we're just 3 or 4, actually 5 days or thereabouts away from the end of the month, and that's when we'll have the wholesale picture for the current month as well. Would it be fair to say that there's currently a considerable amount of inventory that is with dealers already ahead of the festive season? And second point, I'm going to be very quick on this. We got source-based information that the implementation could be on the 22nd. So would you say that that is also a little too late?
Yeah, thank you for bringing me on your show. But before diving into your question, I would first like to say that FADA welcomes Honorable Prime Minister's vision for GST 2.0 reforms and the government's efforts to simplify the tax structure. The proposal to rationalize GST rates and move forward towards a two-rate structure is extremely progressive that will enhance affordability, strengthen demand, and provide long-term stability to the automobile sector in the mid to long term. Now, coming to your question, we are entering the festive period in next 4 to 5 days, with Onam coming up in Kerala and Ganesh Chaturthi in the western part of the country. As we have released in last month's press release, when we did the July auto retail numbers, industry was sitting on 55 to 57 days of inventory, which is almost 2 months of inventory in hand at this point of time. And as you know, festivals is a big period for automobile industry, and dealers generally keep a higher inventory at their disposal. Now, with the announcement coming on 15th of August by the Honorable Prime Minister, we have seen that even though inquiry and walk-ins have been extremely healthy, the conversion rates from inquiry to booking, that has taken a slight hit. And we are thinking that because of this, because of the new rate information which will come out very soon, and as per today's news, by 22nd of September, customers are purchasing back their sales. Customers are purchasing back their buying, and they are anticipating and in fact asking us what will be the...
Mr. Damani, apologies for interrupting. So that is very clearly the fact. What I'm asking is that would the 22nd of next month, September, be too late in your estimation? We're talking about the reason why you have written to the government already asking for a faster rollout.
Yes, what we have told, and when we met both the honorable ministers, Commerce Minister and Heavy Industries Minister, we requested if the GST implementation can happen ASAP, because dealers generally take inventory funding and the tranche period is for 60 days. And if sales don't happen within this period, there's a penal clause which the dealers have to pay, plus their CIBIL also goes down. And therefore, what we are seeing that 22nd of September, even though the government has announced it, I don't know whether the government has announced it because there's no official communication about it as of now. But the current festive will definitely take a hit because of the postponement in the implementation of the new tax rates.
Understood. Mr. Damani, thanks so much for taking the time. Pleasure speaking with you, and look forward to the next chat. We have to listen in to a speech by Sanjay Malhotra, the Governor of the RBI. Listen in.
The IMF projects that we'll again be one of the fastest major economies in the world, and we are all set and projected to be the third largest economy in the coming years. The inflation at the same time over the last decade, especially after the inflation targeting framework was introduced, has been very benign. It's much lower than what it used to be earlier at about 4.9% per annum. This July, we had the lowest inflation at 1.6% headline for the last 8 years. The Indian government's fiscal position is also very strong and robust, having decreased its fiscal deficit now from 9.2% post-COVID and projected to go down now to 4.4% this year. This is not, at the cost of quality expenditure. The capex, as you are all aware, has been growing, and now it is projected. This year, it is budgeted at 4.3% of GDP. This, of course, includes grants in aid to the states. And similarly, the corporate balance sheets are very healthy. Mr. Sethi pointed out at the robust and healthy balance sheets of the banks, whether it is profitability, solvency, liquidity, and asset quality. My compliments to the industry, especially banking sector, for this stupendous performance and this turnaround over the last decade. India's external sector, again, I need not, speak more about it. It has been very comfortable. The current account deficit over the last few years has been well within the sustainable limits. Last year, it was only 0.6% of GDP. And of course, this is because of strong exports in services and very healthy inward remittances, for which India today actually has the record of being highest recipient. We have very robust foreign exchange reserves, $695 billion US dollars, as per the latest figures that are available with us, sufficient to cover 11 months of merchandise exports. This has been all possible because of the very strong and prudent fiscal and monetary policies followed by the government and the various regulators over the last few years, structural reforms, massive upscaling of both physical and digital infrastructure, improved governance, and enhanced productivity and competitiveness. We are now at a critical juncture, as noted by some of my earlier speakers, as we navigate the choppy global economic environment characterized by heightened trade uncertainty and persisting geopolitical tensions. We need to push the frontiers of growth. We all must step up our efforts to address the emerging challenges and at the same time seize the opportunities that are coming our way. Generations of freedom fighters gave us free India, a Swatantra Bharat. We need to now work for a Samridh Bharat, a prosperous India. In this backdrop, I thought it appropriate to speak on what we collectively need to do to further build on this economic development in our country. I have divided my thoughts into 5 major areas: monetary policy and regulation, and 3 relating to the banking industry. Mr. Sethi has made my task a little easier by mentioning them upfront, so I am thankful to him, for having already acknowledged that we need to improve further financial inclusion, customer service, and technology. Again, something which even the BCG report talks about and emphasizes. The role of monetary policy, first of all, monetary policy. The role of monetary policy in economic prosperity is critical. One of the major conduits of macroeconomic stability in India during the recent years, despite many shocks, has been the decline of inflation, as I noted even earlier. Sharp spikes in food prices, volatile oil prices, global supply chain disruptions, and geopolitical tensions could have significantly stoked inflation. However, proactive policy measures by both Reserve Bank of India on its part and supply-side measures by government have helped contain the generalization of price pressures. Anchored inflation expectations too have supported stable consumption patterns and improved investor confidence. The primary objective of monetary policy in terms of price stability has significantly contributed to the strength of India's macroeconomic fundamentals.
All right, so that was the RBI Governor, Sanjay Mehrotra, speaking at the FICCI event and talking about monetary policies plus economic prosperities and so much more. But that's with regards to the speech given by the governor. But let's also welcome in Ajit Mishra, Senior VP at Research Railgear Broking, joining us now. Ajit, hi, a very good morning to you. I'll take up the next question, which is on IPO Vikran Engineering, the IPO which is open today. Not sure, Saurabh, if you have a view on this one, if you've managed to study the company. Any view whether to subscribe for the IPO or not?
Not any view, having no view.
Okay, no, Saurabh, no problem. Just to give a perspective to Mr. Saini who's asking this question, basically it's a 770 crore IPO and it's involved in transmission and distribution of power plus the water infrastructure projects, and the company's revenue have almost doubled in the past 3 years. Also, profits have nearly doubled in the past 3 years as well. Plus, return ratios seem strong, ROC at 23%. And 5 brokers have given a subscribe rating. Plus, there is a void rating by a broker, but there are no not to subscribe ratings for this particular IPO. So, this is the overall view of the Vikran Engineering IPO that Mr. Saini is talking about. Moving on to the next question, which is on Nazara Technology. Raghu from Mysore is writing, he's got 20,000 shares of this particular counter and wants to know if you can hold or sell. Ajit, I'll come to you on this one. What's the view where charts are concerned for the next 2 odd months?
Yeah, so good morning, Mimba. And what we are seeing that the stock has been inching gradually lower for almost 1.5 years now, and still there is no sign of recovery. From 32 to now being a penny stock, I would recommend to avoid any fresh position. Those who are stuck at the higher levels, still I feel that it's an opportunity to exit and refrain from such bets in case if you're planning to add or average down until you have any major fundamental development which says the otherwise.
Okay. All right. Let's take our next question. By the way, if you're tuning in for the first time or if you're waiting by, you can now call us on the landline number that is on the bottom of the screen. We'll take the next one from Karthik, who's writing in from Udupi. And he's asking about Apollo Microsystem, which he's bought at a price of 167 rupees per share. He's got 160 shares and he's looking at this for the long term. In the recent days, he points out that there has been price action. The stock has gone up. What's the view on the fundamentals, Saurabh?
I think on the valuation side, it is trading around more than 100 times to multiples and 12 times to book value, which is a concerning factor. A lot of companies are finding difficult to convert their order book to bill, and in this case, it is a very small company. So I have a reservation with respect to the valuation. I would suggest him to better book profits.
Okay, all right. So that's with regards to where Apollo Microsystems is concerned. We've got our next question from Anil, who's writing from Jalandhar. And by the way, Alex, he's written that he's saying that you've got a tremendous persona and he's a big fan of yours and the channel.
Very sweet. It's very sweet of him.
Yeah.
He said, but he also says that he stopped sending queries because they were not taken. Apologies because it's not like that we pick and choose and we choose to ignore certain people. Please continue to write to us, Anil, and we'd love to take your question. Allow me to take his question. He's got IRB Infra, which he's bought at a price of 52 rupees per share, and he's wondering whether to hold for a period of a year or more. Ajit, I'll come to you on the charts. What would you say about this one? Actually, he wants to stay invested for another 6 months in IRB Infra at 52 rupees. What should he look at?
So, Alex, here also we are seeing that the stock has been experiencing corrective phase for almost a year now. From record highs of around 75 to now we are quoting at 44 levels. Off late, it made multiple attempts to reclaim its critical averages around 50 area, which coincides with its buy price also, but it failed. So now consolidation is more likely, and since his view is 6 months to a 1 year time horizon, I would recommend him to maintain a strict stop at 41 now. because that's the base basically where the stock respected, in the recent past, and then we have a monthly or weekly moving averages also placed. But for any fresh momentum, he should wait for a decisive close above 50. So he has two options: one, to exit at current levels and re-enter once the stock again surpasses 50, or maintain a stop at 41 and stay put.
So that's it with regards to where RB Infra stands. We've got our next question from Surya Mazmudar, who is writing us from West Bengal. He's bought 450 odd shares of Suzlon Energy at 71 a piece. Wants to know if the stock touched. So what he's saying is the stock touched at 73, but he couldn't sell. Wants to know as to what price range can you expect in the next 6 to 8 odd months. Ajit, I'll again come back to you on this one. Suzlon on the charts.
So yes, it was a strong move, of late, but then the move fizzled out in no time. Means it was a gradual decline followed by stock slipping below the major averages. So this indicates maybe a prolonged consolidation, at least 3 to 6 months. Here I'm not seeing any major development, at least on the price front. So for 3 to 6 month kind of a time horizon, I would recommend to utilize any recovery towards, let's say, 60, 61 level as a first hurdle, and then completely around 65.
All right. The next question is on BSE. We've got Anil from Chandigarh who's writing in, got a loss, significant loss, unfortunately, $1.5 lakh. He's bought at levels of 2,637. He's asking what should be done. So the question really is on the fundamentals, sort of, and on the valuation. So they had run up, and the anticipation that there will be some measures to curtail the frenzy in derivatives. There was word from the SEBI chair last week as well, where he said that effectively they would be studying long-term derivative contracts, and no clarity as to what the measures could be, but it was viewed as negative. So would you hold on for the long term?
Certainly not, because of the one of the reasons you have already said, and the second reason is the valuation, trading around 20 times to book value, around 55, 60 times to trailing earnings. I think there is no point. In world, you won't find any stock exchange trading at such mammoth valuation. And above all, the business may go down because of the regulation and all. Overall, the quarterly earnings were good, but still, I don't find any merit holding at such high valuation.
Just to follow up to that, because we've got another viewer, Mukul from Delhi, who's also got BSE, but at slightly lower levels, 2150 he's got at, so he's still in the green. He's wondering whether to sell this and buy NSDL. Saurabh, what's the view?
Yeah, you can go ahead with the what he is doing. I mean, he can book profit in the BSE and go with NSDL. But to my mind, I think still the PSU space is overall on the valuation side, it is quite expensive. Compared to CDSL, NSDL is relatively cheap. You can try your luck.
Okay, all right. So that's with regards to where these counters are concerned. We've got our next caller. Prasanna is calling us from Bengaluru. Prasanna, hi, a very good morning to you. How can we help you today?
Good morning. Thank you so much for taking my question. So, I currently hold Acme Solar Holdings. I bought it almost a month ago.
Okay.
At 279.
Mm-hmm.
So, I wanted to get a long-term view on this stock. Long-term, around at least for 2-3 years.
Prasanna, I got your question and take this up with Saurabh. Saurabh, your view on Acme Solar from a longer-term perspective?
It is a relatively new listing, and we do not have any coverage.
Right. Ajit, do you think you have enough data on the charts to pull up some information maybe?
Prasanna, definitely the stock has done exceptionally well in the last 4-5 months, and the way the stock has been inching higher means after forming a base after every uptake. So that gives us confidence that this momentum is here to stay. So for 2-3 years, it's very difficult to comment, but yes, 3 to 6 months of time horizon, it looks upbeat to test around 350-360 area. Means roughly around 20-30% from the current area is something which the stock might attempt, considering the overall momentum. But at the same time, it's a very volatile stock, so you should refrain from aggressive longs at current levels, and 280 if you are considering some of your position to be on a short-term basis also. Then that should be your stop loss.
Okay, Jay is calling us from Mumbai, and he's got the next question. Jay, very good morning. How can we help you?
Yeah, hi sir. So I actually have a question regarding Sigachi Industries, right?
Okay.
So I hold around 40,000 units at a price of 30 rupees 50 paisa, right?
Okay.
I recently bought this. So after that factory fiasco which happened, right? So the stock got beaten down by 50%, and I see it is a value buy as a swing trade, right? So I just want some view on this stock, right?
So it's a swing trade, okay.
Because swing trade. Like maybe swing trade for 3 to 6 months I can hold it easily. I thought like it is sold now, then thought of holding it because the factory and all, right? Those will be insured and all those things, right? Of course the business got impacted, but still the stock got beaten down really well, right? So I think it's a value buy. So just want info on that.
So very significant quantity. Let me get you a view from Ajit on the charts. Ajit, 40,000 shares, and so even though the stock price has moved up just a few clicks, he's making a gain. What is the risk reward in your opinion? What are the levels he should pay attention to, and where would you put the stop loss?
So Alex, I would like to share this with Jay that Jay's stock is extremely volatile. Means if you see the price action since listing 2021, means from roughly around 62 to roughly lows around 2025, and then again record highs around 95 to 30 levels. So if you are okay taking this kind of risk, then only you should consider. Otherwise, you have better stocks to trade in. If the view is positional. Talking about the current chart structure, the price action on the downside was with significant rise in the volume. So this indicates that stronger hands liquidated this position, and in case of the any recovery, close to around 40-41 will be the major resistance area with immediate hurdle at 36. So use any recovery to reduce your position, and in fact, you can look to diversify your position if you are highly concentrated in this stock. And at the same time, do maintain a stop at 28, because below 28, it might again reach its record lows or maybe lower.
Got it. All right. So hopefully that helps you, Jay, and bear in mind that it's a risky thing to have such a large quantity. It is time now to hit the rapid fire round, and this is where we throw as many questions at Saurabh and Ajit as possible. The first question is on Ujjivan Small Finance Bank, where Kishore has bought a significant quantity again, 8,000 shares at a price of 48 rupees. He's got a long-term view. Should he hold, Saurabh?
Exit by Bank of Maharashtra.
Okay, Magica World is the next counter. Gul has bought it at the levels of 63.5. 100 shares is what he has. Wants to know if he can add more at the current levels fundamentally. Saurabh, your view?
Avoid.
GMDC is the name of the counter. Bought at levels of 230. Time Travelers writing in from Hyderabad asking about this. What's the view, Ajit?
Hold, maintain a stop at 400, around 480, try to book profits.
Okay, Tapan is holding 10,000 shares of Vodafone Idea bought at 7.2 apiece. Wants to know if he can continue to hold or not. Saurabh, your view?
Exit.
Vodafone Idea. Did you just ask this?
Yes.
Okay, we'll move on to Hindustan Zinc. Bought at a price of 443 rupees. Long-term views being sought. Piyusha on from Jaipur wants to know whether to hold. Saurabh?
Hold.
Okay, Tata Motors is the next counter. Anup from Dubai is holding 500 shares at 680 apiece. Wants to know as to what should be the next course of action. Ajit, your view on the charts?
So for short term, he can hold for 720 as a target, 665 stop.
Okay, Ram wants to know about Regal Resources. Would you buy for the long term? Saurabh?
Can't comment.
Okay, the next question is on, do we have
Jindal
this?
Saw.
Karnataka. Okay.
Jindal Saw at a price of 203 rupees per share. Srinivas wants to know, would you buy or sell at this point? Ajit?
Hold with stop at 195.
Okay, Karnataka Bank is the next counter. Karti has bought 400 shares at 206. Wants to know if she can continue to hold or exit. Ajit, your view?
Hold with stop at 160 and use recovery to reduce around 185, 190 zone.
Natco Pharma, 1017 is the buy price for Kishore. Should he hold for next 18 to 36 months? Saurabh?
Hold.
Hold. All right, 34 questions taken today. I think that's a new record. Hopefully we can go for 35 tomorrow. Gentlemen, thanks so much for taking the time and for answering all the questions that you did. Well, viewers, that brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching, and do stay tuned. This is NDTV Profit.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires.
Hello and welcome. You're watching KYC. I'm Harsh Saita, and when a company worth 1500 crore in terms of market cap wins a potential 600 to 700 crore in top line, it certainly rolls a few eyes, and it ought to, right? It's understandable. We're going to be speaking to Signpost India today. It's a very, very small company in relative terms to the companies we speak with, but it's an interesting one because of what I just said. And what I want to know in particular is with regard to one, their win today, which is around 700 crore in terms of revenue potential over the next 9 years. Even if I broadly extrapolate that to 70 to 80 crore, they've also done another, or rather they've had another big win, which is the Karnataka win. So it's the Karnataka plus the Bangalore Metro wins, which are cumulatively adding around 150 crore in top line annually. That's the broad-based ballpark that is being penciled in. So you want to wait and watch as to whether that actually plays out like the way we're thinking it will, and what after that, what the margins on the business that they are winning is going to be like. So that's number two that I want to know. What are the margins like on the wins? They do 20% plus typically. I'd want to know whether they can maintain that kind of a clip. The third one is, of course, you've won Bangalore as a big metro, but could you win Mumbai and Delhi? Because those could be larger wins, given that the new Mumbai metro is coming in thick and fast. Those could well be potential wins for something like a Signpost India, and it could add to the potential top line and the growth that one is penciling in. And mind you, it's a 450 odd crore top line that you're all talking about. So already a 30% growth that we're seeing, and with the potential of that this might hold, and I want to understand how realistic that is, it could well be a tilter in favor of the way one looks at the company. The fourth one is what will take it to win. So say one is that they come out and they say that they are super confident about winning this. How is competition looking at it? How strong is competition in this space? And what will it take? What is it? What are the key factors that they are looking at which give them the confidence that that win is possible? Because for you, the viewer or the investor, or for me, the analyst, it's important to understand what the risks are as well. The fifth piece is understanding the working capital cycle in the business. It's been a bit choppy where cash flow is concerned. We'll talk about that. While the last couple of years has been decent, but I'd want to know whether we can really see an ironed out cash flow coming straight through, or is there something which will get locked in working capital as they start to win these large contracts. The sixth piece is with regard to capex. Does their business require it, and therefore what's the funding outlook? Because I've started to see debt increase in the system, so I'd want to know whether that could continue or not, or will we see actually a pay down with regard to where debt is concerned, and then just overall trying to get a sense of what the risks in the business are looking like. So and that is also a bit with regard to how the conversation goes and what's the pulse we all get as part of that conversation. So we'll try and understand that, because mind you, it's a 1500 crore market cap company, so you want to be careful, right? Just blindly considering it will be a tough one. Now let's look at the company itself. It was incorporated in 2008. Signpost India is a merger of two companies in 2023, thereafter listing in 2024. But it was incorporated originally in 2008. It's a digital out-of-home and integrated advertising company. The company focuses on long-term government contracts currently. It combines advertising with public amenities like bus shelters and the like, and I'll talk a little bit about that. And it currently manages around 33.9 million square feet of ad space. So that's the broad brush understanding. Now let's talk about specific services that they provide. One is the digital out-of-home advertising, as one should call it. This includes largely dynamic digital boards. You would have seen it on highways, and it's a slightly high margin kind of a business, uses AI and data analytics. It's used across, say, airports, metros, city centers, highways, as I did mention. The second piece is transit advertising. That is advertising on bus shelters, inside buses, at airports. It's slightly medium to high margin is the sense that we get. The third piece is mobility advertising. Campaigns on moving vehicles, like bicycles, vans, stuff like that. And that advertising also is something that they handle. And Uber having a small billboard at the top, you might have seen that on a few Ubers and certain other vehicles, and that also is part of advertising. Now you look at the conventional out-of-home service. This is a slightly lower margin business. It includes static billboards, street furniture, traditional formats broadly is what this one deals with. And then there's design and content lab. This is more custom creative solutions which advertisers require. So they deal with a whole host of things, but the largest chunk of it is the first one, which is the digital advertising, which is out-of-home advertising. Now let me talk about the business model broadly. It wins long leases or ad rights through tenders that they give, and this is generally to governments and municipalities that they generally work with. And then they install and maintain advertising infrastructure which is handed over to them. They sell ad space also to large brands, agencies, and ensure that that tie-in happens, agency to government. And then thereafter they ensure that there is monetization via display occupancy, asset scale, price optimization. So all of that is what they kind of work around. That's the broad brush understanding of how the business works. And You would have seen it in real life and therefore able to relate to it far better than those graphics which are on your screen. So broadly, that's the way to take it. Now let's talk about the key metrics that we'll discuss today. Now it's a very, very small company, but nonetheless, we'll pull out the metrics that we'll look at: income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, outlook. So we'll try and cover all of that. We do have the valuation picture, but it's tough to determine, right? It's not exactly as easy to figure out the valuation. So broadly, that's how we'll take it. Let's start off with the income statement, and that will also give us a picture on how the valuation has evolved. Around 40 crore odd of profit after tax, which they've clocked in FY25, leading to approximately 40 times earnings. Broadly is the valuation at which they trade at. Your revenue has grown fairly okay. EBITDA also around 30% growth over the last 2 years, maybe cumulative. But you look at the margins, they've shrunk just a wee bit. Net profit though absolutely flat, and I'll talk a little bit about that trend, which is what may just be a bit of a concern. It's actually the increase in depreciation cost which has led to a lid that they've had to keep with regard to their profit after tax. So this is a non-cash expenditure which is leading to a shrink with regard to the profit before tax, which is impacting the profit after tax as well. So that's something you want to keep in mind, that it's actually depreciation which is hurting profitability. But broadly, that's how it shapes up. This is Q1 FY26 performance of a very, very low base. That's the QOQ growth number. The YOY growth also decently healthy, and an annualized 60 odd crore of profit after tax. So it's gotten slightly better where Q1 FY26 is concerned. You want to understand sustainability of that kind of number. Again, this 38% revenue growth looking quite healthy in that sense. But we've given this a neutral only from a perspective that this ballooning of debt cost is leading to profit outcomes which are far from ideal. So you want to wait and watch as to how that plays out and what the reasons for that could be going forward. Mind you, there is no guidance that this company has given, and hence difficult to kind of extrapolate what this could look like going forward. So we'll probably be one of the first few to understand this better. Let's also now go to the balance sheet, and you're looking at equity capital plus reserves, which are decently healthy in that sense. Let's pull out those numbers if we can. So there you go. So you've got that book value of around 221 odd crore. The borrowing number has gone up, as you can see, visibly gone up over the last couple of years. I'd want to know where this goes. But what is the reason why I'm not too worried? One is you've got a healthy cash balance of around 50 crore, which is a third of the borrowing number. So it kind of takes care to some extent of that borrowing. Also, the EBITDA, the annual EBITDA number, sits at around 90 odd crore, which is operating profit before interest and taxes. If I remove interest and I remove taxes, which is typically the cash element of this entire picture, then you're broadly getting a 50 crore odd number. So not looking bad per se. 50 crore cash, 50 crore annual EBITDA, which or rather post interest and post cash expenses kind of earnings, and therefore this gives you a decent picture as to how borrowing is going. Now the only possible risk here is if your working capital need balloons all of a sudden, which is why that big question on working capital, and that will also have an impact on the balance sheet. So we've again been conservative here, with great difficulty given this a neutral, but broadly that's the way one ought to think about it. Borrowing could become a problem. Mind you, companies only start facing huge issues even in bad cycles, largely because of borrowing. So if that borrowing number is elevated, you have to be worried. Again, we'll ask that question to management and get a better perspective of that as well. Let me talk about cash flow now. And when you're looking at cash flow to profit after tax, largely the ratios are quite healthy. There's been a large reversal which has happened in FY24. You can see how CFO to PAT has just doubled. It's 2x of what the PAT is, which is positive, but that's largely because of the drag we've seen in FY23. So FY24 has gotten much, much better. FY25 largely steady state, around 80 odd %. That's the broad take with regard to how CFO to PAT is. But given that you've seen a large ballooning of depreciation, you would ideally have expected that your cash flow from operations, even in FY25, was far healthier than profit after tax, right? That's generally the norm. 20 crore worth of depreciation expense, and we're not seeing the benefit of that on cash flow from operating activities. So that might also be a bit of a concern, trying to understand all of that. But it's largely because working capital needs have really ballooned, and that's where the concern lies. I'd want to know whether that is realistic and sustainable. Now, the fourth piece, or that's just part of the business, how should one look at it? Now, let's talk about return ratios. Return ratios are in that 15 to 24% band at this point. Again, you want to start to understand sustainability of this over a period of years. So I'd want to wait and watch even with regard to return ratios. A large part of that will be linked to profitability, of course, and CAPEX. So both of that will be slightly more important to understand, and we will try and understand that. So that's on return ratios. Now let's talk about shareholding. 75% promoter owned, no concerns there, and therefore we've given this a thumbs up. The number of shareholders also largely has gone up. It's on an upward trend from 11,000 odd shareholders in FY24. It's up to around 16,500 shareholders currently. So the number of shareholders has gone up, something that you want to keep in mind broadly. Now let's talk about street cred. It's been choppy for a shareholder who's holding this. 24% 1 month, but year to date the stock is down. 6 months the stock is up. And when you're looking at the 2-year performance, which is since listing, which is Feb of 2024, again, it's been difficult. So we've again not been able to point a direction, but the returns and the fluctuations have been strong. So you want to be careful, and therefore we've given this one a neutral as well. Let me talk now about what the street coverage looks like. There is one very, very small brokerage which is covering this one, and therefore there's nothing meaningful here. We of course have to therefore give this a thumbs down. Unfortunately, this is the only one, and it's understandable. 1500 crore market cap, generally not covered by too many analysts, and it's understandable, and therefore we've given this a thumbs down. Last, on the outlook piece, and there's plenty to do with regard to where the outlook is concerned. I did speak a lot about it already, but they've received exclusive advertising rights for all 67 metro stations by the Bangalore Metro. It's an SPV, or rather a JV formed between the government of Karnataka and government of India, and the expected revenue potential is around 700 odd crore. It will attract around 3 crore of monthly ridership, and the company has gained exclusive advertising rights for a 9-year tenure. So clearly positive with regard to this one. Also, let me talk about some developments in July of 2025. Now, in that regard, they've had a strategic exclusive agreement with Comor NB Tech Solutions Private Limited. The highlights of this is they've been granted exclusive rights for advertising and promotional activities across city flow buses, right? And this is of course a premium bus network. They've been granted exterior interior branding rights. It's an exclusive 5-year agreement. It's all positive in that sense, and the agreement commences with the deployment of 350 buses across key urban markets, including Mumbai Metropolitan, Thane, Hyderabad and Delhi. So it's multi-city as well. So that's the second big win. The third one is where the High Court has allowed the company to resume operations. The company has received an order enabling resumption of advertising operations in Bengaluru. The High Court nullified notices prior which had directed the company to dismantle advertising structures. All of that again positive. This should add another 70 crore to top line. So outlook looking good, but I want to try and understand this better and deeper, and we have with us Shripad Ashtekar, who's the managing director at Signpost. But just before that, let's quickly rate it on our KYC rating parameter, and what you'll see broadly is neutral ratings, but we've explained some of those ratings to you, and of course we'll have a better lens into that once we speak with Mr. Ashtekar, who's the managing director at Signpost. Let me go straight to him. So great having you. So let me start off with some of the wins you've had over the last maybe 2 to 3 months. give us a clear picture. How much does this add annually to your top line, and how quickly does this revenue potential start to translate?
Thank you for having me. This recent wins, which includes more about the transit advertising, which we call in OOH, which is impacting the top line and even the bottom line. The addition has given a growth of around 25-26% the last quarter, and the similar pattern we see from the recent investment what we did in Bombay or in other markets in the country. So our focus area would be always around the transit, which is a more networked and more data-driven approach.
Got it. So how much should it add to top line? Sorry, sir, trying to understand that. And does it come in FY26? Do you expect 150 crore plus in terms of top line addition?
So this revenue, which we have projected for 9 years, will definitely start giving the yield from the second half of the year, and definitely it will be around the same number what you are talking about.
Understood. So maybe H2 onwards, so may not be the full 150 crore in year one. So what about the Bangalore High Court order? How much does that add to your top line? Give us that perspective. That should add around 60-70 crore to top line as per disclosures.
Yeah, you're right. So basically, we should look at all the projects which is the High Court which has given the green signal to start with, which is around the traffic booths we have already installed, and the digitization of the panel around the junctions, and plus the Bangalore Metro what we are talking about. We recently signed the contract with BMRCL. So it is more about the traffic commuters. Currently is around 7 to 8 lakhs daily commuter in the Bangalore Metro, and which is going to double as the phase 2 started, which will be around 15 lakhs. So if you and the implementation and the sweet spot is about the tech savvy and young traffic, which will be in the metro commuters. So ideally, we would see the same growth which we have projected for around 700 crores within 9 years.
Got it. So what about the City Flow contract? How much does that generate annually?
So it's a small contract as compared to the fleet what we operate nationally, which includes Chennai, Bangalore, Calcutta, Mumbai, Pune. But definitely the data-driven approach of City Flow will be adding a lot of value in terms of the delivery part to the brand to get the more precise ROI. So the value proposition, it will be small because the number of buses operating, but it is growing right now. Like Hyderabad also has seen the growth in number of buses. So it's a small number, but it's around 2% or 2.5% to our total last year revenue.
Okay. So that's relatively smaller in comparison. So what is the potential coming in from Delhi and Mumbai Metro? Are those at all up for grabs? Are you in the running for it? And what is competition looking like? How likely are you to win it?
So Bombay, already 4 lines are operating, out of which 2 we are already having the rights for 15 years, which is a line number 7 and line number 2A. And we have the exclusive rights for 15 years for the 2 lines. And upcoming lines, definitely we will be participating, which is more towards the exterior part of the infrastructure of metros in Mumbai. And Delhi also will be focusing on to improve.
When did the revenue for this start to come to you? Was it Q1 FY26 or before?
No, as I say, in Out of Hope, whatever we start, see, it's a contract for long term, right? So whenever we implement the phase-wise implementation, the revenue starts from that spaces. So suppose out of 67 stations, if we start implementing around 10 stations within 3 months, so the revenue from 10 stations will start coming, and subsequently the same phase-wise we will be completing that.
Got it. Okay. What is the margin typically that you operate at, and what is the revenue potential from the likely wins you can have from a Mumbai or a Delhi? Just give us those 2 numbers broadly.
So overall transit, which has a projection of 4,000 crores revenue by 2027, and currently what we have is around 10-15% out of that. So the growth pattern, what we see with the recent wins and the other contracts which are operating, where the investment has already gone. The bus shelters network in Mumbai, you see the huge difference in terms of quality and the implementation, what we did, including the design part, which has been recognized globally. But as you see the projection or the growth as a DOH market in India will be around 25 to 30% because of the digital and technology and the what we call it as a phygital also. So this growth pattern will definitely add the numbers to the contracts where we have already invested in last two years, and the same pattern what we are talking around the Bangalore or Mumbai will be under the same umbrella.
Trying to understand margins and profitability, would your margin number broadly be 20 to 22% across cycles, or would you see choppiness on the margin front? Also on profitability, what's the kind of growth expectation given that you already have very good visibility with regard to your top line?
So pattern will be the same what we have achieved in quarter one. It will not be a model which we have seen the numbers which we have seen in last year quarter four because of the implementation and the buyouts of the projects which were under the implementation and started giving the revenue from Q1. So you will see the similar kind of a growth which we have already achieved in Q1, which is normally expected as a low quarter for advertising revenue because a lot of PSU starts budgeting their yearly budgets from July onwards. So we will see the festive time and the growth pattern what we have seen.
Understood.
In Q1.
So trying to understand working capital, because that's been a bit of a drag where the cash flow is concerned. Is this normal part of business? Has the last couple of years been tough for you from a working capital side of things? Also, what's the capex looking like? Is this a heavy capex kind of industry? Give us that perspective.
So all the contracts which has a long-term tenure requires an initial investment, capital investment of let's say if you talk about Bangalore Metro, which will be around 75 to 85 crores initial capital investment, which includes your the infrastructure or digitization or improvising the spaces, well-lit spaces. So that kind of a revenue which is required to invest initially for initial period, but subsequently the growth pattern and the revenue starts coming. It's a win-win for both.
Okay, all right. Okay, thank you so much for coming in and speaking with us and giving us that perspective. That's of course Mr. Shripad Ashtekar, who's the Managing Director at Signpost India, talking to us about everything that's playing out in the industry, but more importantly with Signpost India. And viewers, completely out of time on this edition of the show. From everyone who puts the show together, thanks so much for watching. Stay with us here on NDTV Profit. More action on the other side.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories.
Start to the week, Nifty up over 80 points, Sensex also jumps more than 250 points, most sectors in the green. Meanwhile, paper companies, the likes of JK Paper and West Coast Paper surge up to 15%. The rally follows a new minimum import price on virgin multi-layer paper board. And sources tell NDTV Profit that new GST rates are set to be rolled out around September 22nd. This coincides with Navratri reductions to focus on essentials to drive festive demand. Fada, meanwhile, urges finance, commerce and heavy industries ministries to expedite GST rationalization reforms, also seeks clarity on utilizing accumulated cess post-removal. And the BCCI terminates contract with Dream 11. This is after the online gaming bill was passed. With the Asia Cup round the corner, the Indian team lacks a title sponsor. Board plans to issue a new tender soon. Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. First things first, let's take a look at the markets, and it's looking like a decent start to the week. When you take a look at the Nifty or the Sensex, that's largely the picture that you have. Nifty holding on to those 24,960 levels thereabout. Even when you take a look at the Sensex, there is where you have a little bit of a jump coming in with that 290 odd point uptick as far as the Sensex also is concerned. Quick look, let's also take a look at what the sectors are also doing. Most sectors at this point in time holding on to a tinge of green, so that's largely your sectoral picture. At this point in time, when you take a look at some of your gainers from within the sectoral pack, of course, you have an IT holding on to a green, a tinge of green, realty, metal, pharma, rural, auto. Those are some of your sectors that are holding on to green. On the flip side, there's media and oil and gas that are lagging behind. The only two sectors that are holding on to a tinge of red at this point in time. So those are that's at least your sectoral picture, but let's quickly take a look at the list of gainers as well as losers from within the Nifty 50 pack. So it's an Infosys that's doing well, 3.3% uptick coming in on that one. TCS, Wipro also as well as HCL Tech, since IT is doing quite well. These are some of the stocks that are helping IT, in fact, being the top gainer in terms of a sectoral basis. Other than that, there's a Hindalco, Coal India, IndusInd Bank, as well as Tata Motors that are gaining in trade at this point in time within the Nifty 50 pack. Other than that, on the flip side, you have Nestle India, Asian Paints, Apollo Hospital, ICICI Bank and Jio Financial Services, as well as Bharat Electronics from the defense pack as well, on the back foot at this point in time. Even SBI Life and M&M are not doing that well at this point in time. So that's largely the kind of picture that you have, at least as far as some of your sectors are concerned. But there's a lot of buzzers. Let's see if we can try and get you a list of those. In fact, you do have Brigade Enterprises that is in focus. Other than that, there's also Signpost India. That one has been in focus since the start of trade this morning. Interarch building as well on the back of that 90 crore order. Let's try and get you an update on those as well. But before we do that, let's quickly take a look at some of your paper stocks as well, because it's JK Paper, West Coast Paper, Andhra Paper, some of those paper stocks as well that are doing quite well for themselves. Let's also see if we can get Vansh in when it comes to that entire list of stocks that we should be watching out for, because that's also a very important update. But tell you what, let's quickly go through the update as far as Brigade Enterprises is concerned, because they've in fact launched a residential project in Bengaluru. So that's Brigade Enterprises that I'm talking about. The total development area is about 9.33 lakh square feet. Revenue potential about 950 crores as well. So that's Brigade Enterprises. That one is in focus, as you can see on your screens. Gains of up to 0.8% coming in for Brigade Enterprises. It's going to be featuring a 604 premium 1, 2 and 3 BHK residents. That's as far as this particular residential project is concerned in Bengaluru. Other than that, they've also entered a long-term lease when it comes to 7 acres in Chennai. So that's Brigade Enterprises that is going to be in focus. But tell you what, since we were talking about paper stocks, let's get you the update there, because the government in fact has set a minimum import price for select paper boards. Anushi in fact is joining in with all of those details.
Thanks for that, Shreyanshi. So as you just mentioned, in this kind of a day of trading that we're looking at, paper stocks have emerged as top gainers. Now this includes the likes of something like a West Coast Paper or JK Paper, as well as Andhra Paper as well. They're all clocking gains between 12 to 15% if you just look at the intraday high charts of these, and these are with high trading volumes that we are looking at. In fact, just JK Paper, we are looking at 23 times the volumes, its 30-day average. Similarly, a 7 to 8x is the kind of volumes that we are seeing for the other two counters as well. Now, why is this buzz that we are looking at? Now, this is in terms of what the Ministry of Commerce has come out in terms of an update over here, wherein now they have imposed a minimum import price in terms of where the virgin multi-layered paper bond is concerned. This minimum price is set at somewhere around 67,000 per MT. This is in line to protect the domestic manufacturers which are there out. This benefits these domestic manufacturers, the companies that we've already listed down below above as well. Now, this move supports higher pricing power for some of these domestic manufacturers of papers. Along with that, margin protection is also now on the cards for some of these players that we are looking at. So, the important update coming in from this side, and hence we are looking at the stock reactions in the positive for a couple of these counters.
Well, absolutely. Thank you so much, Anushi, for getting us that update. In fact, paper stocks are soaring away in trade, as you can see on your screens as well. Some good gains coming in for a JK Paper, up about 13%. Even Andhra Paper and West Coast Paper are up in trade, upwards of about 10%. Double-digit gains coming in for some of those counters. Andhra Paper currently up about 8%. But let's now take a look at some of the other counters. Of course, we told you about Brigade Enterprises, and that one is going to be in focus. But other than that, there's an entire list of stocks that we're watching out for, Vansh.
So let me start off with Signpost. Now the company has received exclusive advertising rights for all 67 key metro stations by Bangalore Metro. Now they expect a revenue potential of about 600 to 700 odd crores, which will span for the period of 9 years till 2034. If I talk about some of the benefits for the company, this will significantly enable the company to transit its national media portfolio, and this will strengthen its long-term recurring revenue base for the company. Now the project will also offer cumulative display space aggregating to 95,000 square feet. So clearly a positive for this counter. Second on my list is Interarch building. Now again, the company has received a 90 crore order from Rungta Mines. Now order is to design and manufacture pre-designed steel building systems. So these are some of the stocks that are buzzing in trade today.
Well, absolutely. Those are some of the counters that are buzzing in trade, up anywhere between 1 to 3%. So those are a couple of counters to keep on your radar. But tell you what, let's also talk about TCS, because you do have brokerage firm JP Morgan that has in fact released a note as far as TCS is concerned. They've also upgraded their target price to 3,800 rupees. So that's their new target coming in. Upgrade to an overweight is the rating coming in as far as TCS is concerned, and JP Morgan is in fact talking about the narrative that should change to margin recovery. They're also talking about 24 to 26% aspirational band that would be achievable in terms of growth expectations. They're saying that these have bottomed out at this point. EPS cuts largely done, business model also not broken. So that's also an important update coming in as far as TCS then is concerned. And in fact, they're also saying that the upgrade is as the free cash flow yield spotlights value. So quite bullish on TCS, stock up about 3% as you can see on your screens as well. But let's move on, talk about Fada writing to the ministries on August 20th, urging expedited implementation of proposed GST rationalization reforms. In fact, we have Danish joining in with all of those important details there.
FADA India has written a letter to three key ministries, Finance Ministry, Commerce Ministry and the Heavy Industries Ministry, seeking the early implementation of the proposed norms. So like last week, the GOM on GST rate rationalization had met, and they had recommended that the GST of 28% that is currently applicable on small cars, that should be reduced to 18%. And similarly, GST on luxury vehicles would be charged at 40%. So basically, the GST Council will have to take the final call. But after this information has come out, the general public is now delaying their purchasing plans of cars, and the FADA has clearly said that this is creating some kind of pressure on the dealerships, as many people are just either postponing their bookings or they're waiting for the GST to come down. And the concern of FADA India is the fact that the festive period is at least 4 weeks away. So in the run-up to the festive season, the dealers anticipate like really slow sales, and hence they have sought early implementation of the proposed GST norms. The GST Council meeting is supposed to take place on 3rd to 4th September, and they're seeking that before the festive season, the reduced GST rates should be implemented so that they don't face any losses.
Well, absolutely. Thank you for getting us that update there, Danish. But tell you what, let's move on. Let's get you the latest updates as far as the NSE's semi-annual index rebalancing is concerned. This is effective from September 30th. Brings in significant changes to major indices based on 6-month average free float market capitalization and liquidity. In fact, we have Somit Sarkar joining in with all of those important details. Somit, over to you.
Well, multiple stocks remain in focus, but for the main board index, that is Nifty 50, the changes that were anticipated is pretty much in line with what has actually come in. Now, these changes will be effective from the September 30th, and inflows and outflows regarding the same is expected to happen on September 29th. So September 29th is the main date to watch out for any investor, because that is when the actions will happen. So how many changes has NSE announced for the major indices? If you look at Nifty 50, there are a couple of changes. Nifty Next 50, there are 4 changes. For Nifty Bank and Nifty IT, there are no changes that we are seeing. Nifty Mid Cap 150, around 13 changes that has been announced, and for Nifty Small Cap 250, around 23 changes have been announced by NSE. Now, when it comes to the major indices, that is Nifty 50 and Nifty Next 50, it's Indigo and Max Health which get included in the Nifty 50 index. Inflows are expected to be anywhere between 405 to 540 million US dollars for Indigo and Max Health, and that is nearly 10 to 14 times that 20-day average moving. Now, on the exclusion side, it's Hero Motor and IndusInd Bank. Both of these stocks are moving out of Nifty 50. Hero Motor could see an outflow of close to 300 million US dollars, while IndusInd Bank could see an outflow of close to 227 million US dollars. And for both the stocks, this is nearly 5 times the 20-day moving average. When it comes to the Nifty Next 50, 4 stocks are getting included: Solar Industries, Siemens Energy, Mazgaon Dock and Hindustan Zinc, and inflows are expected to be anywhere between 27 to 63 million US dollars, which is nearly 1 to 3 times the 20-day moving average. And stocks that are moving out, Indigo, because obviously it's going to Nifty 50, hence moving out of Nifty Next 50, and because of that there would be an outflow of close to 180 million US dollars. But apart from that, there is Dabur, ICICI Pru Life and Swiggy which are moving out of the Nifty Next 50, and because of which there could be an outflow of anywhere between 30 to 50 million US dollars, which is nearly 0.4 to 3 times the 20-day moving average. Now, apart from that, the another index provider, that is the global index provider FTSE, has also announced some additions to the all-world index. Now, the effective date of this changes is September 22nd, but inflows and outflow, that is the passive inflows and outflows, will happen on September 19th, but we do not have the exact data of how much inflows could happen in these stocks. But these are the stocks that are getting added. That is Godfrey Phillips, JK Cement, MCX, Narayana Health. Apart from that, there is Indian Overseas Bank, Authum Investment, Hexaware Tech, and Chola Finance.
All right, and thank you so much, Samit, for helping us with the update. As far as that inclusion and exclusion list then is concerned, those are some of the counters to keep in mind when it comes to the Nifty inclusion as well. But let's move on. Let's get to the latest as far as GST rate rollout is concerned. Now, of course, we've been getting you commentary on the channel about what the impact is that is being penciled in. But the GST rate rollout is going to be by around September 22nd. It's going to be boosting festive demand. And you do have the implementation of the new GST rates that is likely by around September 22nd. Like I mentioned, rollout expected to coincide with Navratri, so that's important to note. And Navratri, of course, starts on September 22nd. So that's the date to mark on your calendars. There are notifications to begin rolling out 5 to 7 days after the council's decision. And you do also have the all-powerful GST Council meeting that is on September 3rd to 4th in the national capital. They're going to be deciding on the centre's simplified two-slab proposal, that is 5% and 18%. But tell you what, since we mentioned the word that we've been getting from a whole host of experts when it comes to the impact that is being penciled in, let's go across and listen in to the word coming in from Kuldeep Singh Rathi, who's the chairman and managing director of Ask Automotive, who talks to us about the impact that he pencils in there.
Two-wheeler sector has not even touched the volumes that it touched in 18-19. After that, COVID came and the other after effects came, and then the BS4, BS6, and the prices kept on increasing for the common man. And the two-wheeler, which used to be about 65,000, is now nothing is available less than 90,000 rupees. So there has been not a healthy demand, and as you know that in the quarter one also, our two-wheeler sector grew only by 0.7%. But this GST is such a wonderful news, and I'm an optimist, and I feel that this financial year itself, we will be able to cross in the two-wheelers the last highest numbers of 18-19. That's one part. So all of us who are supplying to the two-wheelers are going to gain extremely because of the higher volumes, number one. Number two, our parts, luckily or unluckily, whatever initially they were all being 28%. So now all those parts which we supply to the independent aftermarket, which is also a very big revenue for us, amounting to 400 crores. So that part was 28%. Which will now also become 18%. So there'll be very, very big boost in the independent aftermarket, where there are so many grey market operators are playing even in a safety item like brakes.
So there you have it. Mr. Rathi from Ask Automotive thinks that this is a good opportunity as far as the auto sector is concerned. In fact, that seems to be the sentiment echoing across the sector, because you do have GST regulations that are going to be aiding volumes. And that, in fact, is the word coming in from the management of Endurance Tech. Let's go across and listen in to the word coming in from the CFO.
With the vehicles getting cheaper at the hands of the end customer, it should help us in terms of better volumes. But from a profitability perspective, standalone, it is more volume driven for the companies like in the auto ancillary, because they are largely pass-through in nature, and from the cash flow perspective, it could be a benefit. But for those players who are present in the aftermarket and who are dealing with a lot of products from the unorganized sector, this could be a shot in the arm for the aftermarket sales. However, we should watch to see how the overall rates come in.
All right, there you have it. So that is what is being penciled in when it comes to the entire auto sector. But tell you what, let's focus in on our systems, because that particular counter, in fact, is buzzing away in trade, 6% uptick coming in on our systems. They've in fact acquired 100% stake in Novigo, which is into IT services, including digital and product engineering systems. In fact, Hiral, this is quite the important acquisition. Sales consideration of about 400 crore rupees.
Yeah, 400 crores is the kind of acquisition cost. What's interesting is the way the stock is moved. If you could just pull up a 5-day chart as well. Today the stock is seeing gains of nearly 6% as we speak. If we could just have a 5-day chart, because you'll see the kind of gains that have come in. There you go, 7 to 8%, the two spikes, Friday and Saturday. But let's get in. Nitesh Bansal, CEO of R Systems, to talk to us more about this. Nitesh, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. This is Hiral on this side. My first question coming to you is with regards to the 100% acquisition of Novigo. What's the rationale behind this acquisition, and how does it really fit in with R Systems' long-term goals?
Thank you, Hiral, and good afternoon to you. Very happy to be on your segment. For the acquisition itself, as you know, over the last 1 year, we've been all of us have been hearing the AI buzz, and clearly the budgets have been moving from traditional IT spend into more of AI-powered autonomous workflows, etc. Novigo, as you know, as we have also stated in our press release, it's a capability-led acquisition which is designed to strengthen our position at the forefront of this agentic AI revolution. By integrating Novigo's low-code, no-code capabilities, their intelligent automation platform, and other capabilities working with the enterprises on end-to-end automation, we can now enable enterprises to take them from AI model engineering to autonomous execution all under one roof. So we can not only just do design, but we can design, orchestrate, and operate agentic AI workflows with compliance-ready, architectures, all under one platform, under one roof, with the combination of our systems and Novigo. And that's where we are headed. We believe it will differentiate us, and it does set us ahead of our competition in every manner possible.
Nitish, one follow-up question that I have is, if I have to look at Novigo, a revenue of around 264 odd crores, a 25% margin on the business is what it looks like. The sales consideration that you've spent is around 400 crores, which is almost 6 times adjusted EBITDA, if that's the number I should go with. How does this aid our systems from a financial perspective? Because a 44% revenue CAGR growth for a Novigo over the last 3 years is what we've seen. How much will it boost your numbers with?
So Hiral, we ourselves have organically been growing over the last 6-7 quarters, but more importantly, over the last quarter itself, with the earnings release, we posted almost a 5.6% quarter-on-quarter growth. We've been growing at about 14% CAGR ourselves. With Novigo's 44% CAGR over the last 3 years, clearly it is a growth momentum that we have been building the base on, and it will add to that growth momentum for the combined entity to go forward. From a profitability perspective, we are a 17.5% EBITDA sort of organization, and then Novigo itself is about 25%. So as a combined platform, not only do we become almost a $240 million, 45 million EBITDA kind of a platform, but it is going to be growth accretive, it's going to be margin accretive, and it's going to be EPS accretive right from day one.
Okay. So with everything that you said in terms of the way it aids your margins, aids your revenues as well, with this, in terms of synergies, if you have to place everything together, 5 years from now, where do you see our systems coming in? Because we're talking about what, the acquisition actually aids in terms of the existing financials. But when the synergies of both the companies come at play, then where do you see the company 3 to 5 years from now?
So, 5 years is too long a time in today's world, as we've seen, things changing every 12 to 18 months. But going forward, if the way we are seeing it is AI has been a bigger disruptor and revolution than anything else we've seen in the recent past. And the budgets and the overall adoption is moving at a speed at which it is difficult for every organization to catch up. With the synergies that we bring together, not only will we be bringing a lot of that capability to our existing clients, but it is going to help us capture new market in a very differentiated manner. So not only do we see that it should, as a combined entity, give us the ability to post, market leading growths as we go forward, but more importantly, it should also be deepening our wallet share with our existing clients as they are spending more in those areas.
Well, absolutely, Mr. Bansal. This is Shreyansi as well joining in the conversation. I also wanted to get in your word as far as the expansion plans are concerned, especially given this acquisition. What are you penciling in when it comes to expansion there?
You mean expansion in individual markets, in the geographies?
Absolutely. Which are the geographies that you're looking at? Are you particularly looking at South India? Is that something that you have in mind at this point in time?
Yes, Shreyansi, from a market perspective, Novigo acquisition gives us access to Middle Eastern market, which we didn't have presence in. It's a $25 billion market that they have got very good presence, and three of the founders are actually based there to run the market. From a talent perspective, which has been obviously extremely important thing for all services enterprises, we get talent in Bangalore and Mangalore. Which actually, if you look at it, Bangalore being the Silicon Valley, and then Mangalore is, very rapidly emerging as a Silicon Beach, if you may call it, extremely high quality talent that we get access to, and with the ability to build on that base to serve our clients much better.
Okay. And apart from that, Nitish, if you have to talk to you about, we've spoken about the markets that you're looking at. How are you capitalizing on technologies like Gen AI from here on as well? Because AI is what everyone is looking at. Now, with AI into consideration, a lot of people are talking about job losses that are happening with companies like TCS, Infosys, et al. So with Gen AI coming in, the investments that you're making in these areas, and how are you looking at the growth?
Right. So here, see, Gen AI is not a question of whether we adopt or not. It is a revolution which is happening, and we all have to take a part into it. From our perspective, number one, being a product engineering services company and always staying forefront of the technology, we took these steps almost 14, 16 months ago and started training all our workforce on generative AI tool sets and using it. Today, almost 80% of our workforce is trained on generative AI. When it comes to the other part of the question that you said, job losses, well, with every technology revolution, we see a shift in the job content. It's a question of both individuals and the organizations continuing to train their employees or themselves, like in case of individuals, to reskill and be ready for the new requirements. Today, we see all our employees, all our colleagues actually effectively using 2 or 3 generative AI platforms. We recently signed up a partnership with Cursor as well, embedding Gen AI workflows, utilizing them in productive work and delivering value to our clients, which is how we are differentiating ourselves. And I personally believe, and as an organization, that it is leading to more work being created, just that it requires a different skill set and a certain amount of reskilling and refactoring of individuals to be able to cater to the same.
Okay. Just a reclarification on this front. So when you're talking about the kind of spends that you would make towards this kind of growth, what is that CapEx going to look like, number one? And along with that CapEx, do you see any other acquisitions that would be made to strengthen your position?
So here we normally spend between 1 to 2% of our revenues into just training and reskilling our people. That whole thing from being a very distributed spend across plethora of technologies has actually gotten concentrated on generative AI over the last 14, 16 months. And we believe that will continue, and there will be a little more investment in the hardware and software, which is the infrastructure side of things, to get the organization ready to deliver those things, so that people can practice, and you need those kind of setups, etc., to do that. So we'll continue to make those investments, and that's why again, being a fairly profitable company and cash flow generative, we don't have any issues in making those investments. When it comes to inorganic expansion or looking at further expanding, we are always open. constantly looking at, reasonable acquisition opportunities. Somebody like Novigo who ticked all the boxes. If we
Point
find
taken,
another
Mr.
one.
Bansal. I also wanted to quickly, before we let you go, also get the word on what you're going to be, how you're going to be structuring the management team of the combined entity. What are you penciling in when it comes to that management structure as well? A quick word on that, please.
Well, the entire management team of Novigo will continue to stay with us for the foreseeable year or so. They will operate independently as a fully owned subsidiary. And we will have synergies across the go-to-market function as well as key core competencies that we will share with each other.
All right, and thank you so much, Mr. Bansal, for taking time out this afternoon, helping us understand not just the deal and the contours of the deal, but also what the pipeline then looks like when it comes to expansion then. Thank you so much. But with that, we're completely timed out on this edition of Markets at 12. Thank you so much for tuning in.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Hi, thanks so much for joining in. You're watching Profit Buzzers on NDTV Profit, and my name is Alex Matthew. Let's take a look at how the markets are faring just after the midpoint of the session. And you have gains across the board. You have the benchmark indices that are trading at the high point of the day, but narrow gains, if you can think about it, compared with what you're seeing across the board. And you had risk assets overall across the globe that traded higher after the Fed chair's comments at Jackson Hole on Friday. There was, of course, the inference that a rate cut by the Federal Reserve in the US is in the offing in the month of September, and that pushed up risk assets in the US and then subsequently this morning in the Asia Pacific region as well. We are trading, as I pointed out, at the high point of the day for the benchmark Nifty 50, and we are gaining for the broader markets as well. The mid-cap index gaining about 1/3%, the small-cap index up about 1/3% as well. And what is the one space that is buzzing? It is the IT pack. So first take a look at the IT index. The Nifty IT is up 2.7% and close to the high point of the day. And let's pull up the constituents of the Nifty IT as well to give you a sense of what is doing well. And in fact, all the stocks are up and about. Infosys, Mphasis, TCS all gaining close to 3% or over that mark. HCL Tech doing well, and so is Oracle and Wipro all up over 2.5%. Now, while on the face of it, one of the big concerns this week is that 25% additional tariff that kicks in on the 27th of the month. On the domestic side, the real talking point is the GST revamp, or the move towards a two-rate structure broadly for the GST as a whole, and the question mark about when this is going to be implemented. And the reason why this is a question is because inventories currently in the automotive space, in the consumer durable space, are all at a higher GST rate. What happens now is that a lot of people are deferring their purchases. So there have been calls from various parts of India Inc. to bring forward the implementation of the GST rate, the rollout of that new structure. In fact, we've got source-based information. Shrimi does. She's joining us now to tell you about what she has learned. And really, after the GST Council meeting, Shrimi, which you also had an exclusive about the last week, where you said that it's going to happen at the start of September, what you're learning now is that the states need a little more time and the implementation is still faster than earlier anticipated. What can you tell us about the story here?
Yeah, at this point, what we are picking up is that the new rate, the revised rate is going to be implemented around September 22nd. And in fact, the sources are hinting at that the notification, to roll out the notification, it will take like 5 to 7 days soon after the announcement. Now, remember, the GST Council is meeting on 3rd and 4th of September. And post that, you will see that the CBIC, the nodal apex body for indirect taxation, is going to roll out the notification of all the changes which is going to be implemented, and what they are targeting at this point is to roll out the new rates by September 22nd to in line with the major festivity that is Navratri, is what indication we are getting. And in fact, if it goes as planned, we will see that lot of items will see rate reduction. In fact, as we've been reporting about that, the essential items, most of the common use item which is currently in the 12% bracket, which goes to 5% bracket, is what the proposal. And in fact, GOM on the rate rationalization is agreed on the center proposal to moving to 2-slab structure. And of course, those items which are currently in the 28% bracket, your small cars, your white goods, some aspirational goods, they all are moving to 18%. Of course, lower than the 28%. On some clarity would also expected on the high-end items, particularly your high-end cars, your high-end bikes. That clarity would come, of course, post-council meeting. But so far, the plan is to roll out the new rate, to implement the new rate by around September 22nd.
Quick follow-up, Shrimi. Is there any clarity at all at this juncture on the cess? Because the expectation was that the cess will go away with this new structure. Has there been any conversation about that?
Yeah, that's what the part of this entire rate rejig exercise. In fact, this is related because currently all those items, most of the items in the 28% bracket attract compensation cess, particularly tobacco cess. Luxury cars, all your SUVs and sedans are currently attracting cess, compensation cess. Now the regime is nearing to an end, and in fact what we are getting indication that government would be able to repay all the debt, that is back-to-back loan which they have taken during the pandemic. A quarter before, by October to November, they are going to, repay all their debts. So after that, they are not going to, with the regime which is there, the compensation regime. So what will be the future of compensation? So the talks around are that whether there will be an additional levy, maybe in the form of health tax, maybe in the form of green tax. What states are perhaps pitching is to, put high-end car into 40% flat bracket, which of course the centre proposed. And in fact, we will see that state and centre both will take a call during the council meeting about that whether the cess will be, be there only on the tobacco products, which is cent goods, or also on the high-end cars. So of course, we will get clarity by, 3rd and 4th, and it's very much on the, agenda of the GST Council meeting. But the states are of view that there should be cess, because the government is very clear on the fact, and we have been reporting that tax incidence would remain same. And for now, the tobacco and other related items, the entire cess plus GST goes up to 200%.
Yes.
In fact, on the car also, the high-end car also, you see that with cess, it goes up to 50%.
Right.
So that revenue offset has to come somewhere. So we will see some decision for sure on the compensation.
Absolutely. Shrimi, thanks so much for getting us all of those exclusive details. Rajat Bose, who's partner indirect taxes at Shardul Amarchand Mangaldas, joining us now to help us understand some of this. Rajat, really the question is about implementation, as I understand it now, and whether this can be hastened. From your perspective and in your study of the GST, is it going to be possible to ratchet up the pace of implementation, or do you foresee difficulties in this taking place?
Well, I think that the government's intention is to obviously hasten it up, since the Prime Minister made that announcement during the speech from Red Fort. So I think they are working very hard towards getting a consensus amongst all states, so that these rate reductions and rationalizations can be rolled out as soon as possible. So I do see that happening in the short term.
Then a couple of technical issues emerged, because Rajat, I was speaking to the automotive dealers earlier today, and let's take small cars for example, right? You have a 28% GST plus a 1% cess, so the effective taxation is 29%. If the cess is to go away, then you're talking about a flat rate of 18%, which is a reduction of 11 percentage points. Now, the Federation of Automotive Dealers told us earlier today that they're sitting on inventory of about 57 days. So from that perspective, what I'm trying to understand is the dealer has already paid at the factory level. If they are to sell after the implementation of the new GST structure, then somebody who's buying would be buying at 18%. We don't know what the cess is going to be, but let's assume for now that there is no cess. So there's a difference of 11 percentage points. Is there a way in law for the dealers to recoup that 10% and that maybe that 1% cess as well in the future over the course of a couple of months? How would that work as per the law as things stand right now?
Look, see, as per the law, right now there is no mechanism if there is an excess credit at your end, because this entire issue is emanating from the fact that the dealers have already paid at a higher rate, whereas if the rate is reduced going forward, then they would be left with a balance in their credit ledger. Now, as of now, there is no way to sort of claim a refund of it. But in case the government decides to go ahead with this revised rates, I'm sure that they would be making representations for the government to also introduce some mechanism where they can recoup this additional credit which is lying in their books by way of a refund, and the government can very well roll out or introduce a system or a mechanism to sort of enable them to get this refund.
Okay, so that is certainly something that we need to get clarity on. Any view on the cess? Because the sense that we got, and which is what I was asking my bureau chief in Delhi as well, the fact that the term for the cess, the compensation cess, is set to end. But at the same time, you're going to have states that are going to be unwilling to lose out on revenue because it's so critical for them. So there could be the imposition of higher taxes in some other form. What are the ways that they could potentially look to shift this, if at all, Rajat?
Look, I think there has been a sunset clause on compensation cess. It's already been extended. It was supposed to go out in 2022, but they've extended it now. And I don't think that they will extend it any further. To sort of counterbalance that, they are looking to increase the rates. As we've read in the reports, also 40% GST. That's the maximum rate of GST which can be imposed, which is 40%. They cannot go beyond that. So I assume that they would be going into that rate bracket of 40% for some of these goods, and now a portion of that 40% will also go to the states as their share of the GST revenue. The balance, if there is any further loss, while the government claims that they have compensated the states to the whatever extent possible, there is nothing remains. But in case some states still have some issues with revenue loss, maybe they can impose some additional taxes. But again, that is a challenge in itself altogether. So I hope that that is not the case. But yes, some states can impose certain additional taxes. In what way or manner, we'll have to see.
Illustrate a few examples of this, because see, in the conversation that I was having with the automotive dealers, there is the potential to raise, for example, road tax, Rajat. And yes, I'm just trying to understand the various, and if we can look at maybe consumer durables as a bucket, you can look at automotive as a bucket. What are the ways in which states can potentially raise taxes at their end to maybe set off potential losses? And this is obviously hypothetical. We'll have to see how it pans out.
Yes, first of all, there has to be a very, very strong justification to impose any additional tax at the state front, because the window to levy a tax by the state is extremely limited. They can only levy taxes on activities which are permitted under the Constitution of India, and not a general tax as such. For example, there are provisions where certain states can levy additional tax burden in case of, let's say, national calamities. We've seen that in the past, where Kerala had imposed an additional 1%, I think, cess they'd imposed during some floods which had caused havoc in that state. But that was again for a temporary period, just to offset the losses. So in that sense, they can impose, but there is a very limited window for the states to impose heavy taxation to counterbalance whatever is the loss. But I feel that that should not be the case, because if the rates are rationalized, it would also mean that the consumption will increase. So automatically there would be more tax collections even at the state level. So I don't feel that they would be imposing any additional burden of tax just to sort of compensate the losses due to the compensation cess going away.
Rajat, thanks so much for joining me and for the perspective that you've given me. A couple of points that I think I will take away from this conversation, and I guess that you and I will both be looking for this, is the possibility of how companies or dealers or the middle folk can set things off in the inventory that they currently have. And hopefully this will be implemented soon. Thanks so much for taking the time. All right, let's stick with this story on GST and the implementation of this new structure. And quick service restaurant stocks will remain in focus on the back of these GST reforms. Companies like restaurant brands Asia, Jubilant Foodworks, Westlife all stand to gain. And my colleague Mahima Vachajani is joining to tell you why that is. Mahima?
Right. So, Alex, what happens is that QSRs were generally charged at the rate of 5% where GST was concerned, and they did not used to get input tax credit. And this remains as is, because they'll be charged at 5%, no rate change there. But the raw material that they were using was charged at 12%, which now might shift to 5%. So overall, they will have a benefit and savings in cost when it comes to their overall raw materials. Plus, around 20 to 45% of the raw materials that they were using were charged at 12%. So that benefit will occur to QSRs, and that will overall aid their margins and also aid their bottom line. Now, let's take a look at this calculation as to how this will pair. What we've tried to do is we've tried to take the the revenue, the cost of goods sold, and this is the gross profit at which currently they are operating. Now on this, if we take the benefit of 10 to 45% of their raw materials that were being charged at 12%, that will now probably be charged at 5%. The kind of benefit that they will incur on their overall gross profit margin will be as follows. If you can try to pull up the next table in terms of where each of these companies will see the benefits. There you go. So the gross profit margin benefit for Westlife will be the second highest at around 50 basis points. For restaurant brands, it will be the highest at 90 basis points. Then it will be Jubilant Foodworks at 70 basis points. And both Sapphire and Devyani could benefit around 20 basis points each when it comes to their overall aiding of gross profit margin. So this is the overall view as to why a lot of these QSRs are also buzzing in trade today.
Got it. All right. So just to clarify, Mahima, what you're saying is that the improvement in the gross margin will be to that extent, right?
Correct. Yes.
Got it. Okay. So watch out for these when the implementation of the new structure comes through. Now, I was speaking about this with a tax expert just a short while back. The Federation of Automotive Dealers Association has written to the government on the request to expedite the implementation of the GST rationalization. Saharsh Damani, the Chief Executive Officer of that association, highlighted that the dealers have built inventory as much as 57 days or close to 2 months. And here's what he had to say about that.
We are entering the festive period in next 4 to 5 days with Onam coming up in Kerala and Ganesh Chaturthi in the western part of the country. As we have released in last month's press release, when we did the July auto retail numbers, industry was sitting on 55 to 57 days of inventory, which is almost 2 months of inventory in hand at this point of time. And as you know, festivals is a big period for automobile industry, and dealers generally keep a higher inventory at their disposal. Now, with the announcement coming on 15th of August by the Honorable Prime Minister, we have seen that even though inquiry and walk-ins have been extremely healthy, the conversion rates from inquiry to booking, that has taken a slight hit. And we are thinking that because of this, because of the new rate information which will come out very soon, and as per today's news by 22nd of September.
Okay. All right. So we were talking about the equity markets before we got into this GST conversation, but this is really one of the overarching factors that is going to affect markets in the near term. Let's take a look at where things stand right now. I started by telling you about the benchmark and the fact that it is at the high point of the day. It continues to remain there at 0.5% higher, very close to that 25,000 mark. So it's possible that you could reclaim that 25,000 mark, which was lost in trade on Friday. And the broader markets are off the high point of the day, but still trading with gains of about 1/3% or so for the mid-cap index. Take a look at the constituents of the Nifty 50 to see what is really contributing. Let's take a look at so this is the heat map. And so you'll see the IT stocks right on the top. In fact, the top 5 are all IT companies, but take a look at the contributors and you will see a similar picture. Infi, TCS, HDFC Bank, which was one of the laggards on Friday, are all leaning to gains, but 4 out of those or 3 out of those are actually IT companies and they're leading the charge. Just before we went to the GST conversation, we were telling you about the constituents of the IT. They're all up and about. But let's take a look at some of the other stocks that are in the news. Something like an Interglobe Aviation, something like a Max Health. These are the 2 stocks that are going to make their way into the benchmark Nifty 50, and that will take place next month. Mazgon Dock is one of the stocks of the day, and this is on account of the 70,000 crore submarine order that they have received. Of course, they're trading off the high point of the day, but the defense pack as a whole still in focus. You have Brigade Enterprises that was in focus on account of a couple of updates that they sent out. One was for a project that they have launched in Bengaluru, and the other is for land that they have gotten on long lease, where they will be setting up commercial real estate as well as a 5-star hotel. Beyond that, you have a few more in the way of Signpost India, which has gotten a 700 crore order thereabouts, something with a revenue recognition potential of 700 crore. It is also trading at off the high point of the day, up about 3%. But let's talk about what's working in favor of India and what the way forward is for the Indian markets as a whole. Everyone wants to know that. And we spoke to Harold van der Lind, who's the head of equity strategy at Asia Pacific HSBC, and here's what he had to say.
This is a problem for Asia as well, actually. And how have people played this in Asia? Most funds are up to here in the largest stock in Taiwan, the chip maker that makes the chips for NVIDIA. They've therefore switched to stocks that correlate with this particular one. They've gone to Korea looking for DRAM makers and these sort of things. So in Asia, we also see this sort of concentrated holdings. It makes me uncomfortable. I mentioned earlier on, for example, we've downgraded Korea quite recently for exactly this reason. Everybody's in the same stocks, and these stocks can do well. But if they surprise on the upside, they will continue to do okay. But if they surprise on the downside, it's a rush for the exit, and everybody wants to go through the same door. So I'd rather be the first one. So I think we're getting to a stage whereby we have to be really careful with some of these markets, Korea, Taiwan. And that works in the favor of India. If that sort of concentration in these markets starts to broaden out, then people take money out of Korea, out of maybe parts of Japan even, and Taiwan. China is at the moment looking okay, interesting, so they could go there. But if anything happens there, I think it could go back to India. And India is then just at the bottom of that adjustment cycle. So that's how I think it might play out.
Okay, so bottom of the adjustment cycle. Remember that Indian equity markets have underperformed the rest of the globe in the year so far. So there is a bit of a valuation gap that is currently playing out. So pay attention to that. In fact, Raghavendra Kedia, who's the founder of Prosperity Advisors, joining me now. Raghavendra, thanks so much for taking the time and very good morning to you. I'm just wondering whether you're seeing any opportunities currently, specifically in IT counters, which seem to be bucking the gloom that they have been in the recent past, up and about today, and in the recent past we've seen a bit of a pop as well. Would you be buying any of these counters?
Good afternoon, Alex. At the current stage, we are upbeat about the information technology and the software companies, and this is a change of stance from neutral to positive. What drives us to say that on a bullish tone is we expect some kind of corporate tax reduction in the US announcements, and that could actually augur very well for the US corporates to spend more when they save on the tax, and the order book of Indian IT companies could see an uptick from there. Even on the valuation basis, we are upbeat and going overweight on the large cap IT names, with Tata Consultancy Services, TCS, continue to be a top pick in that. We believe that in spite of the macro uncertainties and the cost cutting across Europe and US, Indian IT companies have fared at a 5% revenue growth, 5 to 8% revenue growth on a YOY basis. This implies a pricing power, which is also reflected in their net margins of around 18 to 20%. Also, the operating margins are in the range of 20 to 25%, which is very healthy, indicating some kind of efficiency and operational leverage these companies have versus on a YOY basis. So we believe that strength in US dollars, US corporate tax reduction would be two positive catalysts, and broadly on a very steady performance in the last 2 quarters, IT companies could see an upside from here.
So therefore, Raghavendra, very quickly, what are your top 3 picks in the IT space?
From the large cap, we continue to like TCS, HCL Tech, and from the mid cap space, Persistent Systems continue to be our top pick. So TCS, HCL Tech, and Persistent Systems.
Okay, let's talk a little bit more about the IT sector. In fact, quite a few brokerages have come out with their recommendations and notes on the sector. And let's get in Jasmeet, who tracks the sector very closely, to give you the highlights. Jasmeet, what are the notes that stand out to you?
Well, right. Yes, thank you for that. IT has been buzzing, and I have a couple of notes that speak about the overall IT aspect. Let's understand. The first one is City on IT. What they say is FY26 is the third consecutive year where there has been a slow growth. The growth has been anywhere between 2 to 4% on annual basis. When you look at what is driving, this is the macroeconomic. While they also said the rate cuts is something that would solve some part of the issue. While they believe the slowdown is not just on the back of macroeconomics, but also a lot of other aspects. Multiple data points suggest that the IT spending is kind of healthy in a good position currently. When you look at what's exactly happening in the sector is there has been continued investment when it comes to AI. But again, the return from the investment in AI is something that's wait and watch in the industry at the moment. There has been a lack of meaningful ramp up when it comes to the new AI work and in terms of return. When we also look at the other assets, GCC, the GCC add-on is also hindering and slowing down the growth of the overall IT aspect. While what they say is they relatively prefer Infosys and HCL Tech among the other large players, and they also prefer Hexaware emphasis among the mid caps. When you look at the other note, that's Kotak on IT, they have specifically spoken about the overall AI-based focus on the IT. What they say is the Gen AI has evolved considerably over last few years, and they have also improved moderately. While they expect a 2 to 3% revenue deflation when it comes to the AI-led development. They also see that AI agents have been in the position, but again, the agentic AI is something that will not be spoken of in next 3 years. And after 3 years is something that we can focus on agentic AI. Just to give viewers an understanding, agentic AI is an advanced version of Gen AI. When you look at what exactly going to get impacted by this would be the software industry, which is vulnerable for this particular rated. While the other CX, BPO, that's consumer experience, which was outsourcing, is something to watch out for and can be vulnerable. What they prefer is persistence and Coforge and Hexaware when it comes to the mid caps, and in large cap they prefer HCL Tech. While Tech Mahindra is something to watch out for, given that the company majorly has a business between the BPO service. So it is something to watch out for going forward.
Thanks so much, Jasmeet, for that. In fact, we've got one more brokerage, JP Morgan, that's released a note specifically on Tata Consultancy Services. It upgraded it to an overweight rating with a target of 3,800. The stock is currently trading at 3,146, so considerable upside seen there. What are they saying? They're saying that the narrative should change to margin recovery going forward. A 24 to 26% aspirational band, in their opinion, would be achievable. They say that growth expectations have at this point bottomed out for TCS. EPS cuts are largely done and the business model has not broken. And finally, they say they upgrade it as free cash flow yield spotlights value. So we've got to talk about a number of stocks, not least of which is Nazara Tech, which is losing value in trade today as well, bearing the brunt of the latest change in the treatment of this sector of real money gaming. We'll talk about that after this very quick break. Raghavendra, do stay with us. We'll be back on the other side, so do stay tuned.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिता आई, ऐसे बॉय मिलते मुंबई में चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit Research.
Welcome back. You're watching Profit Buzzers on NDTV Profit. This is Hital Datia. But let's quickly take a look at what markets are doing at this hour as we speak. If you see in terms of Nifty 50 as well as Bank Nifty as well, we are at the day's highest levels, gains of around 0.5% coming in on Nifty. Let's pull up Bank Nifty on the screens as well. Trying to mirror that, but not yet there. There has been that little bit of pressure since morning that we were seeing in terms of financials. But let's now head across to that NSE semi-annual rebalancing that usually happens, which will be effective from the 30th of September. It does bring a lot of major changes in terms of indices that are based on your 6-month average free float market capitalization, as well as the kind of liquidity that comes in on that counter. Somit joins us with all the details. Somit, what comes in, what goes out, because the stocks are absolutely reacting to this news.
Well, multiple stocks remain in focus, but for the main board index, that is Nifty 50, the changes that were anticipated is pretty much in line with what has actually come in. Now, these changes will be effective from the September 30th, and inflows and outflows regarding the same is expected to happen on September 29th. So September 29th is the main date to watch out for any investor, because that is when the actions will happen. So how many changes has NSE announced for the major indices? If you look at Nifty 50, there are a couple of changes. Nifty Next 50, there are 4 changes. For Nifty Bank and Nifty IT, there are no changes that we are seeing. Nifty Midcap 150, around 13 changes that has been announced, and for Nifty Small Cap 250, around 23 changes have been announced by NSE. Now, when it comes to the major indices, that is Nifty 50 and Nifty Next 50, it's Indigo and Max Health which get included in the Nifty 50 index. Inflows are expected to be anywhere between 405 to 540 million US dollars for Indigo and Max Health, and that is nearly 10 to 14 times that 20-day average moving. Now, on the exclusion side, it's Hero Motor and IndusInd Bank. Both of these stocks are moving out of Nifty 50. Hero Motor could see an outflow of close to 300 million US dollars, while IndusInd Bank could see an outflow of close to 227 million US dollars. And for both the stocks, this is nearly 5 times the 20-day moving average. When it comes to the Nifty Next 50, 4 stocks are getting included: Solar Industries, Siemens Energy, Mazgaon Dock and Hindustan Zinc, and inflows are expected to be anywhere between 27 to 63 million US dollars, which is nearly 1 to 3 times the 20-day moving average. And stocks that are moving out, Indigo, because obviously it's going to Nifty 50, hence moving out of Nifty Next 50, and because of that there would be an outflow of close to 180 million US dollars. But apart from that, there is Dabur, ICICI Pru Life and Swiggy which are moving out of the Nifty Next 50, and because of which there could be an outflow of anywhere between 30 to 50 million US dollars, which is nearly 0.4 to 3 times the 20-day moving average. Now, apart from that, the another index provider, that is the global index provider FTSE, has also announced some additions to the all world index. Now, the effective date of this changes is September 22nd, but inflows and outflows, that is the passive inflows and outflows, will happen on September 19th, but we do not have the exact data of how much inflows could happen in these stocks. But these are the stocks that are getting added. That is Godfrey Phillips, JK Cement, MCX, Narayana Health. Apart from that, there is Indian Overseas Bank, Autumn Investment, Hexaware and Chola Finance.
Thank you so much, Somit, for getting us all the details in terms of the Nifty rejig as well as the FTSE rejig that we should be looking at. Let me also get in Gaurav Bissa, Senior Vice President at Incred Equities. Gaurav, welcome to the show. Always a pleasure to speak to you on NDTV Profit. My first question coming to you is, from all the names that Somit has taken us through with regards to the entrance on Nifty 50, the ones which are making an exit, and a couple of names coming on the back of FTSE as well. Anything that comes to your radar which could be good buying opportunities, or anything that you would advise investors to sell if they are holding on the back of the exits?
I think it is time to still reconsider for the simple reason that Nifty is still stuck in the range, and not just the additions, but or rather the in and out movement. I think what more matters is the levels. I don't see some of the names that Soman has taken. I don't see a lot of momentum sort of building up, or rather the follow up that is coming up. It's a stock specific market at the end of the day, and I would be more keen in the names which are showing increased momentum, so that if there's a profit booking sort of coming in, there's anticipation of further tariffs by 27. So if in that scenario also if something happens, outperforming stock should be the one that should be on the radar.
Okay, so that's with regards to, the rejigs that we are looking at from here on. But moving on, Nazara has been in focus. Let's pull up a 5-day chart of Nazara Technologies because the pressure has continued. I think for a third or the fourth consecutive session today as well. 5% downtick, but from the day's lowest levels, it has seen some bit of a recovery. In the last 1 week, 22 to 23% is the kind of cuts that we've seen on the counter, and this is on the back of the Online Gaming Act that has been passed as well. Now, one of my colleagues, that's Agni, did get us a story over the weekend where sources are indicating that all of these companies would probably file a writ petition as well to the Supreme Court. Where it goes, when it goes, is something that we need to wait, watch and see. But an interesting development over here is where Rekha Jhunjhunwala has sold her entire stake in Nazara Technologies, and this was done way ahead of the Online Gaming Act that was passed. But at that point in time, in the month of June itself, the stock did see some bit of a correction. What's interesting further to this is some of the other marquee investors have absolutely decided to stay put so far. Let me head across to my colleague Vansh to get us more on this. Vansh, over to you.
Well, yes, right. So, Rekha Jhunjhunwala has fully exited Nazara ahead, 2 months ahead of the online gaming bill. Now, if we talk about the details, now the stake has been sold in tranches between 2 June and 13th June. Now, this is on the back of the, this is ahead of the online gaming bill, which has been passed by the parliament on 21st of August. Now, the stake has been sold in tranches lying from 2nd of June to 13th of June, with the final tranche being sold on 13th of June. Now, the exit fetched Rekha Jhunjhunwala approximately 770 odd crores, and this is on the back of the and the investor has made 4-fold returns from the particular stock. So clearly a win-win situation for Rekha Jhunjhunwala in this particular counter. Moving on, let's also look at the stock specific impact in terms of Nazara. The Nazara has plunged 14% since the exit of Rekha Jhunjhunwala. So we can clearly see the Nazara has already plunged 14% since the exit of Rekha Jhunjhunwala, and the investors have lost about 1700 odd crores in value since her exit. In fact, if I talk about the past 1 week, the stock has slipped about 19% in the week. Now, this is the steepest drop since listing for this particular counter. Now, moving on, let's also look at the online gaming bill which was passed. Now, it was cleared by cabinet on 19th of August and passed by parliament on 21st of August. And now it became a law on 22nd of August. Now, this is a major development that is coming in for this particular stock. Now, if I talk about the details of the bill, now the bill has imposed a ban on the online money game and related ads financial transactions. So clearly this is the core business of Nazara which has been impacted by this bill. If we talk about the provisions, this bill aims to prohibit harmful online money gaming services and ads financial transactions related to them. So this is what the development is coming in terms of bill. If I talk about the stock specific impact on Nazara, now the Nazara owns indirect exposure to real money gaming via 46% stake in Moonshine Technology. Now, the 46% stake in Moonshine Technology is owned by Nazara. The company has invested about 800 odd crores towards equity shares in Moonshine through a combination of cash and stock. Now, the risk lies about the potential write-off that can take place about the 800 crore investment in this particular counter. The company also holds compulsory convertible shares amounting to 155 odd crores, and the management has also guided that they may need to make a provision of about 800 odd crores for this particular investment in Moonshine Technology. Also, if I talk about the net effect clearly remains negative for this particular counter. Moving on, let's also look at the investors that are still on the pitch for this particular counter. We have Nikhil Kamath, who still owns 3.51% stake in the company through Kamath Associates and NK Squared. We have Madhu Kela, the ace investor, owning 1.18% stake in the company. And moving on, we have Arpit Khandelwal, who owns 7.44% stake in the company. And lastly, we have Plutus Wealth, owning 10.91% stake in the company. Mind you, this is the shareholding as of June 2025. So this is what the development is looking like for Nazara Tech.
Thank you so much, Vansh, for getting us the details. In fact, before I take a question with Raghvendra and Gaurav on this, the income tax bill has actually received the President's assent and will be replacing the 1961 law. My colleague Shrimi Chaudhary caught up with R.N. Parbat, member of legislation CBDT, who talks about the Act's features. Let's quickly listen into what he had to say about what the Act has in store for taxpayers, who stands to benefit the most, and how was it formulated.
Intent of the new legislation, the new act is of course to simplify the language, to make it easier for taxpayers. To what extent this new act live up to the expectations?
See, we have tried our best. As you know, this was totally in-house. The bill was prepared in-house. But then we also had public consultation during the course of making of our bill. Later on, it went to the select committee. The select committee has put on hours and hours in this, and they have given a very comprehensive report. They have analyzed each and every clause of the bill, and they also held, I think, around 36 meetings with amongst themselves. Mm-hmm. They also held stakeholders consultation. They also had a study tour to Bangalore and Mumbai. Mm-hmm. Then we had our own 9 meetings with them, where Revenue Secretary, Chairman and myself and my team, we appeared before them. Mm-hmm. So the bill has undergone all these processes. Mm-hmm. And once the report of Select Committee came, we again went through the entire clauses here in CBDT, and again, so that whatever mistakes or whatever mistakes are there, we can remove that. Mm-hmm. And I'm sure we have done our best, and with the effort, this joint effort and joint teamwork, the bill has come out well.
Fair point, sir. And in fact, the Act now suggesting reduction in the volumes, the sections. So how this is going to benefit taxpayers? And you think that since there are new changes, of course, in the new Act, though in terms of simplification, will it lead to some litigation? How you're kind of dealing with that, with the new Act?
See, the best part is that the language is very simple now. So common assessees can also read it and understand it. So far as the litigation part is concerned, we have tried our best to align the spirit of the new Act with the old Act. So we have seen that though we have removed the provisos and explanations and used sections and subsections in their place, or have used tables, have used formula, but they remain the same. So I am sure it is not going to give rise to face litigation.
Right, that's the IT Act that will be taken into consideration as well. But moving on, one sector that is buzzing in trade, you have the paper stocks, and they are trading in the green after the government has set a minimum import price for select paper boards. Anushi joins us with more details. Anushi, what's the buzz, what's the news, and the kind of gains that you're seeing today is really strong?
Right, Hiral, it's a strong notification that has come from Ministry of Commerce, and that's why we're looking at the stock impact on a couple of these paper names. Just to pull out some of the names wherein we are seeing majority of this impact includes the likes of JK Paper, West Coast Paper, as well as something like Andhra Paper as well. We are seeing gains of around 12 to 15% of each of these counters if we look at the intraday high levels. And this is with high trading volumes that we are looking at. In fact, if we just look at JK Paper, 23 times its volumes compared to a 30-day average. Even the other two counters, we are seeing about 7 to 8 times of higher volumes in comparison with what the 1 month averages are. Now, what is the key reason for this buzz? Now, what has happened is that government has now imposed a minimum import price in terms of where the virgin multi-layer paper board is concerned. And this contains about a minimum import price of 67,000 per MT is what we are looking at. This is in interest for the domestic paper manufacturers to save for better pricing power over here for the domestic manufacturers, as well as to save some margins as well. This is again in line with the government's move to safeguard these companies from cheap imports that are taking place. So some curbs over here have been imposed on that, and that's why we are looking at the strong buzz in a couple of these counters.
So much, Anushi, for that. Raghavendra, let me come to you. Paper stocks, positive news coming in there. What would you advise investors to do? I know a very small sector, but anything that you have.
Good afternoon, Etal. Broadly, this move could be seen as positive in the quarters ahead and also reflects the great intent of government in supporting the local paper industry. So JK Paper, which is the poster boy of the entire paper industry with a very good promoter holding at current price of levels of 400, we would actually take this as the best beneficiary stock from this news and believe a 20% upside for levels of around 460 to 470 is possible in JK Paper. Overall, a positive development, welcome move from the government for the paper industry.
Right. Stay with us, Raghavendra. I'm just picking up a couple of lines that are coming in at the bottom of your screen where Fitch has affirmed India at BBB negative with a stable outlook. In fact, this comes in after the recent one where we heard about S&P as well, but clearly they are seeing India FY26 GDP growth at 6.5%, pretty much in line with what the others are looking at. Apart from that, India demand to remain solid is what they are indicating. Growth is going to be strong, and that is what is going to support the rating that they have given so far. FY26 GDP growth seen at around 6.5%. The demand which will remain solid will be mainly aided by government capex as well as private consumption. So that's a very good combination that you're looking at, because the moment the government starts spending as well, you'll automatically see the corporates to start spending as well from a capex perspective. And with that, a combination of consumption that will be strong is interesting, because you have the government which is absolutely focusing on measures to boost consumption with the GST that would be kicking in as well, with all the recommendations that have been going, the rationalization that you're looking at as well. In fact, what they've said is on US tariffs, they do pose a moderate downside risk to India's growth forecast. In fact, we did speak to someone at HSBC who clearly said that everything that was a negative with regards to where India goes, which HSBC was focusing on, the government is trying to make things right. All the boxes are getting ticked. Probably growth will be back, and on the back of which probably your third quarter of this year probably will be strong as well. So clearly, India's private investment is likely to remain moderate amid US tariff risks is what Fitch rating is indicating so far. So that's the latest that you're picking up, where Fitch has maintained the outlook with a stable outlook with a BBB negative rating as well. But moving on, another stock that's buzzing in trade is a Mazgon Dock. Now, yes, we've spoken about Mazgon Dock with regards to where Nifty rejig inclusion goes. But apart from that, there is some additional news on the same as well. Anushi, what are you picking up?
Well, Hiral, it's a considerable big order that we are looking at, around the size of 70,000 crore on envelope for Mazgon Dock is now what we are seeing. Now, this is an order when this has been, talked about since the last couple of months, but there had been a couple of delays. But now what we are seeing is that the center has given clearance to Defense Ministry as well as the company to start negotiations for the 70,000 crore of the order win that we are looking at. And this pertains to P-75I submarines. That's development of about 6 submarines that we are seeing for the Indian Navy. Again, this order that we are seeing is in consortium with a German company as well, wherein the German company would be responsible for the engineering part for it, while Mazgon would be mainly responsible for the construction and delivery of these 6 submarines that we are seeing in place. Now, how will this aid Indian Navy? Now, Indian Navy has been looking for these 6 submarines which could stay underwater for at least 3 weeks, so it would benefit the company. It would benefit the Indian Navy on those aspects. But for the company in particular, now this is a considerable high ticket order that we are looking in place, considering that the order book size is of roughly 32,260 crore. This is as of the end of March figure that we are looking forward to, but the company does expect by the FY25 and this number to significantly scale up to something like a 1.25 lakh crore, and this is with these orders coming in place along with the 3 other units also that they are expecting of P-75 Scorpion submarine is what we are seeing. So that is something that we should be watching out for. Strong order book positioning in place for Mazgon. But what had happened in the earlier quarter, if you just take a rough update, Now, we did see that the quarter was impacted by certain provisions which led to the dip in terms of where the EBITDA margin is concerned. But with the healthy order book positioning in mind, and if these orders do come in place, it's a substantial book to bill ratio that we'll see building up for this company forward.
Right. Thank you so much for getting us the details. But before we go across to Gaurav or Raghvendra, in terms of individual stocks, let's also get in a comment. Raghvendra, Fitch Ratings has come out with their upgrade. They are clearly seeing India's FY26 GDP growth at around 6.5%. They've said that the proposed GST reforms will aid India consumption as well. And this is coming in at a time where earlier also we did see upgrades coming in from Moody's and S&P. What would you have to say on this?
So, Hiral, the best part in the entire commentary from Fitch on India was where it's a US-based rating agency, and they have highlighted that the tariffs from between US and India would be renegotiated at a lower levels. So that is a great silver lining. This reaffirm of the outlook is positive, but what as a positive key takeaway, we would believe that lowering of Trump tariffs with India at a negotiation level would actually augur very well. So we take this GDP growth forecast of 6.5% and a tariff downside as a big positive in the days ahead. Overall, positive for the overall Indian capital markets.
Absolutely. US is 50% tariff and India will eventually be negotiated lower. And that's the key commentary, as Raghvendra is also pointing out, that we should be picking up. Gaurav, taking in the affirmation with regards to a BBB negative, a stable outlook, any top picks that you would recommend? Because right now we're talking about tariffs as a major overhang. But from a technical perspective, anything that you would advise investors to do basis a fundamental commentary?
At our desk, what we are pitching is the domestic plays where, the tariffs would not mean that much. Something like auto, where we have seen GST also getting into favor of the auto companies. If you look at the names like Maruti, if you look at the names like TVS, even Mahindra at the current juncture, these are the names where the export part is not as significant as some of the other counter peers, as well as the domestic benefit by the GST is also going to be quite prominent. So as of now, what we are pitching is the banking names. So when it comes to banking, something like HDFC Bank, City Union Bank, SBI for that matter. This is where we are pitching in. Secondly, auto names are what we are pitching to our clients as well. So that way, it can be an immediate hedge. Going forward, the negotiations may turn into our favor. It may not turn into our favor. That's a different point to ponder. But at this point in time, what we are believing in is sticking to the domestic play.
All right, so banks and autos, two sectors that Gaurav Bisa is advising as well. But moving on, Chinese property stocks have been soaring in trade, and this has been powered by expectations of a further stimulus that could be announced as well. Vansh is standing by to tell us more. Vansh, what's happening in China will be a benefit to India as well. Where are you seeing the benefits, and any reactions so far?
Well, yes, so the Chinese property stocks have jumped on the expectations of more stimulus that can come in. Now, in fact, the China Vanke company, now it is a major Chinese real estate developer, and it has hit a 6-month high in terms of the market. Now, clearly the analysts are anticipating of a further policy support that can come in, and the additional measures that could come in as early as September 2025 is what the analyst is anticipating. Now, it's clearly positive for metal companies in India like Tata Steel, JSW Steel, Vedanta and JSPL. Now, this is on the back of the China being the world's largest consumer of metals like steel, aluminium, and any announcement of stimulus measures to boost its property market can signal expectations of increased demand in the construction segment in China. Now, this can in turn likely to lead a higher demand for metals from China, and the increased demand from global consumers like China can increase and can put a upward pressure on the metal prices like steel and aluminium. So this, if I talk about the specific benefit to the Indian companies, now the potential restructuring and the output cuts in the Chinese steel industry, we have heard about the Chinese steel mills cutting their production. Now clearly the output cuts could lead to a reduced dumping of cheap steel into the Indian market, and this can further boost the demand for steel and aluminium. So clearly this is a positive for Indian metals on all fronts.
Positive for Indian metal companies on all fronts, Tata Steel, JSW Steel, Vedanta as well as JSPL. Gaurav, any recommendations from these names?
See, JSW Steel is one that has been trying to come out of range. It has been underperforming. It's stuck in a time correction. So that will be one name that would be on my radar. Probably nibbling at the current juncture from the current levels itself. But something which is not part of the list that you mentioned, but is looking very strong is Hindalco. And I was just looking at Nifty Metal Index. So if you first talk about Nifty Metal Index, it has reversed. The index itself has reversed from a falling trend line, and that is putting pressure on the sector. And in an environment when the sector might be under pressure, always going for the outliers or outperformers would make more sense. In that perspective, Hindalco is just coming out of a range. 720 is the breakout area. If that is taken out, a clean 10% trade is what one can have on their hands. So in my opinion, as of now, the best placed prominent metal name that comes to my mind is Hindalco. Then in the pecking order, it can be JSW Steel as well.
Hindalco, the top pick here. Raghvendra, running short of time, a quick response to this. As metal companies would stand to benefit, what would you advise investors to buy?
Vedanta at 450 for a target of 520. We believe the demerger would augur well. This positive news from China would augur well. And the stock has a catch-up play in terms of peers across ferrous, non-ferrous. So Vedanta at 450 for a 15 to 17% upside in the next 6 months is possible.
Raghvendra, that was quick and there was absolutely pointed as well in terms of which stock with what target to buy. But thank you so much for joining us on the show, gentlemen, and sharing your views. Completely out of time, but that is a wrap on this edition on NDTV Profit. Lots more lined up on the other side. Please stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
This isn't just any paper. It is India's launch pad to the skies. Want to know more about it? Join Ravi Dharamshi, Aniket Dharamshi, and Arvind Ananthanarayan in conversation with me, Neeraj Shah, as we decode India's aerospace sector and tell you how to make money from this space. Get ready for liftoff.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, Real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Hello and welcome. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Well, Nifty continues its upward trajectory. Out of the last 8 trading sessions, we have managed to gain in 7 out of them. Nifty has gained nearly 120 points, but of this, nearly half of them has come in from TCS and Infosys combined. Apart from that, if you look at the Nifty Bank Index, that is struggling to remain in green. But then let's go across to Hiral to understand what's been buzzing when it comes to the small cap space.
Thank you so much, Somit. So absolutely, the day is positive for the markets. You have Nifty as well, which is now inched towards the day's highest levels. Bank Nifty still not yet there, but let's quickly look at the small cap and the small cap and the mid cap index as well. Nifty small cap and BSE. There you go. At the day's low, nearing the day's low in terms of Nifty small cap 250, and if we can have the BSE small cap index as well to see the kind of gains that could be coming in there, because right now you're seeing gains of 0.2%. There you go, similar trends on that front. Individual stocks. Paper companies have been buzzing on the back of the new import rules. Names like JK Paper, West Coast, Tamil Nadu Newsprint, all up in that range of around 10 to 13%. Apart from this, if you see the other names as well, Andhra Paper and Sesha Sai Paper also seeing some strong moves in trade today. Let's move on to the other sectors where you're seeing a lot of buzzing stocks. Now, US tariff deadline is nearing, on the back of which there is some pressure on your export-oriented textile companies, Gokaldas Export as well as the Keytex Garment, that is trading under pressure. Online gaming, on the back of that new bill, the pressure continues on the Nazara Technologies, 5% to 6% downtick today as well. Buying coming in terms of IT, and this is not only large cap, your mid cap and small cap IT also seeing good buys interest today. Newgen Software, eClerx, Mastech, these are few of the names which are seeing some strong moves. Apart from this, if you see the next category as well, Intellect Design, Sonata Software, all up in that range of 3 to 4%. Now, Electra Green, that has been another stock where, in fact, Somit had pointed out to us as well on Herdon Street that there is a potential order from the Maharashtra government. So you're seeing some strong moves coming in on the Electra Green as well. And in terms of other movers, you have names like Action Construction, Raidgain, and Imami, which are moving in trade. Imami under pressure, but the other two moves in that range of 8 to 9%. So a lot of movers and shakers in trade, and a lot of sector-specific action also that you're witnessing, Anushi.
Well, thanks for that, Hiral. So, as Hiral was speaking about the various sectors in focus, I want to highlight transmission and distribution as a sector as well. And one such company in focus over here is Transrail Limited. Now, if you are looking at why the company is focused, it's on the back of an order win that we are seeing, about 837 crore of an order that it received in its transmission and distribution segment, which takes its cumulative order inflows to 3,157 crore, recording about a 57% of a growth here onwards. But to discuss more about the strategy forward as well as about these new order wins, we are joined in by Randeep Narang, the MD and CEO of the company. Mr. Narang, pleasure speaking to you again on this. But I just want to start off the conversation with the order win that we are taking in picture. We've seen about a 57% of a growth on a year-to-year basis. Just want to understand from you, considering these strong order wins that we are looking at, the guidance that you've given about 22 to 25%, does it not rather seem on the more conservative side comparatively?
Thank you for having me on your show. So the orders which come in actually have a 18 to 30 months of order cycle of execution. So whatever we have given guidance of 20-25% will be based on the orders we have in hand, and the new orders will come into execution almost 6 to 12 months ahead So for this financial year, we maintain our guidance. Yes, our order book is positive, it's growing. We've grown around 57% over last year. And we're also looking at a healthy order book closure this year, order intake closure. So we are on schedule with building a 2.5 year book to bill, and which is what we intend to do.
Right, sir. Also, if you could give us some idea on this front. Now, if you look at Power Grid, what percentage of your orders come from Power Grid? Because for FY27, I believe Power Grid has a capex plan of 35,000 crore. For FY28, they have a capex plan of 45,000 crore rupees. So realistically, what is the opportunity size for trans rail lighting here?
So we are one of the contractors working with Power Grid over the last 40 years. We almost 70% of our order book for domestic is with Power Grid. We are one of their valued partners and contractors. So if their capex does grow, we will look at a 10-12% market share definitely. And we are happy with that. And we would like to service Power Grid in the best possible way we can.
Okay, just I want to understand on the bid pipeline as well, because in the previous conference call, if you're looking at, you've given about a 1 lakh crore of a pipeline opportunity, and this pertains to the domestic as well as the international side as well. Firstly, I want to understand from the international side, where are you seeing more of these orders coming in place? And also of this 1 lakh crore, what is the kind of strike rate that you usually have in both the domestic as well as the international market?
So we had given this guidance, and in the investor call that around 50,000 odd crores is the addressable market for us in India. Another 50 odd thousand crores, give or take a few crores here and there, would be for international. So we are quite bullish about the Indian market. We see a lot of opportunities, and as rightly said, Power Grid is increasing their capex. So we're looking at a 10-12% market share. Similarly, for international, we have a 10 odd percent market share, or a win rate as we call it. We're looking at that. So our order intake plan for T&D, which is 92% of our business, is going to be in the range of 9,500-10,000 crores, which is what we did last year. So we're maintaining the same order input, and we feel that that is good enough to give us the buoyancy we need for the next 2 years.
Okay, just on that front, also want to understand from, if you are taking particular geographies in picture, Bangladesh, you had about 12% or also of exposure. Now, this is expected to come down to about 6% by the end of the year. So just want to understand the overall picture in terms of how the Bangladesh order book is shaping up, and are you bidding for any new projects there? What's the kind of outlook that we are building from this particular geography?
So from SAARC, we are doing business in Nepal and Bhutan. In Bangladesh, we plan to close this project by July of 26. So we are today at around 12%, and by end of the year, we'll be around 5 to 6% of our order in execution in Bangladesh. As of now, we have no intention of taking any new orders from Bangladesh till the time we finish this job, and that's important for us. We are therefore looking at growth happening in Southeast Asia, Africa, which is our prime drivers going forward this year for our order intake.
Right, sir. Speaking about the African market, can you just give us some idea what is the opportunity in this market, and from where are you getting these orders when it comes to Africa? Is it the government that is giving these orders? Any risk of collections that you have seen in the past?
So I think that's a very good question. Principally, what we do is we only work with multilateral funding agencies in Africa, like the World Bank, African Development Bank. And these are the funding done to various utilities and governments in Africa. So we work with that. And we have a very clear risk matrix. And once we have a threshold cleared on the risk matrix, we look at it as a clear focus area, and we send our teams to sit in each of those geographies or countries for a month or two before we bid the job. So we are very careful about the geography, the political risk, and anything around that from a risk matrix point of view. And therefore, we are clear that which countries we'll work on. Currently, we're working in around 15 to 16 countries in Africa, and that's where we want to increase our market share going forward.
Just on that market share part, I want to understand overall the competition scenario as well in the international market that we are speaking about, because there's competition coming in from China as well. So if you just have to take in context in these key geographies that you operate in, what's the kind of market share that you hold, and how big of a competition is China when it comes to the same kind of business that you do over there?
So China, of course, bids into most of the jobs we bid. We also have Indian players. Sometimes we have local players and Spanish players. So principally, what we do is we do our design engineering for all international jobs, which is our competitive edge. We also have a very good backward integrated product available in terms of our supplies for towers and conductors. So we are competitive. And if you see what I mentioned in the call just now, we are looking at a 10-12% market share. So we are not greedy to have more revenue. We are very clearly focused on margin-led growth. And that's the way we look at our market share.
Sir, given the strong Q1 and the conservative guidance that you have given, and you're sticking to that of 20 to 25%, I wanted to just check with you, are you seeing any kind of execution slowdown in the second quarter?
Well, the guidance is actually based on what we see on an annualized basis. At 1650 crores for Q1, if you annualize it, we'll be in the range of 22 to 25% growth, which is what we are maintaining. Predominantly, Q2 has slightly some headwinds because of the rains and monsoons and stuff like that, people, contractors going back to their farming. So we don't see much of a difference. We'll definitely look at robust growth in Q2 also. But our guidance is based on the annualized plan, what we call annual operating plan. And we are firm that we will achieve. And hopefully, if we can, we'll try and better it.
Okay, now just on the capex plans that you have, conductors and towers, we've already talked about this before, wherein you are considerably expanding in these two particular areas. So just want to get your picture in terms of, post FY27, once all of these incremental capacities are in place, what's the kind of guidance that we'll be seeing there onwards in terms of how the revenue growth is shaping up? And along with that, are margins expected to see a backup, to see an expected increase as well, because most of the plans that you're doing is in backward integration as well. So just want to get a picture in both of these metrics.
So it's an interesting question you asked. So principally, if you see, our factories will come into stream starting of Jan, Feb, March or 26, and also in Q1 of the financial year 27. Part work is already started, execution is already started, factory expansions have started, and it'll trickle in till March of 26. So we are good to go to service our current order book. And the future plans are very clear. As you mentioned, we're looking at 10-12% market share. We're looking at margin-led revenue growth. So these factories will support us going forward for the next 2-3 years without a problem. The margin profile we've already mentioned, as in the RHP earlier, and as you see in a Q1, it's between 11.5% to 12%. And that's what we want to maintain. And every order we book, we look at all the angles of how do we look at margin management before time completion and execution skills. So all that is taken into account before we bid. So that's the philosophy going forward. These factories will support us for a future growth. And as you know that the expansion which comes in, the execution framework is 18 to 30 months, 18 to 24 months domestic, and 24 to 30 months international. So our factories are ready to back us up in terms of the growth of the company.
Mr. Narang, one final question is about the net debt now. So about 600 crore is the size that we are looking at currently. And because of these ongoing capex plans that you have in picture, that is expected to go upwards. Just want to understand from you, by end of FY26, what's the number that we are seeing for this debt levels, FY26, 27, if you can give us a picture in both of these years.
So, see, as I had mentioned in earlier conversation, we are staggering the execution, as I mentioned ourselves, 12 months to 18 months. And therefore, there will be internal accruals and there will be also loans against CapEx. So I'm seeing a 10-12% increase in our net debt going forward. And again, we'll try to see how do we balance it in a manner that it is doable and it has a good amount of focus from our side.
Okay, thank you so much, Mr. Narang, for joining us and sharing that outlook for the company for the next 2 years onwards. But to discuss more about the outlook of this company, we're joined by a guest of today, that's Avinash Gorakshakar, Director Research of Profit Mart Securities, joining us. Hi, welcome, Avinash. Firstly, your view, you heard the management, the view for FY27 once these incremental capacities are on. How do you view a rail lighting? Well, Avinash, you seem to be on mute.
Yeah, sorry.
Yeah. Please
Yeah,
go
I think
ahead.
the company's order book continues to be very strong, and I think it's on a very strong wicket. So my sense is, somebody who's going to take a 2-year call would definitely get the benefit of this growth. Investors should realize that once a lot of information comes in the market about any company, the stock obviously gets re-rated. But at these levels, if somebody were to take a 12 to 18-month view, I'm pretty sure that the investor could get a decent risk reward, considering the kind of order book, the kind of jobs they do, and I think the kind of moat which the company enjoys. I think clearly execution is going to be very critical. But if they do it, then I think in the next 2 years we are going to see a much better top line profitability and a much bigger balance sheet. So I think the question about net debt, which you mentioned, the management, I think is not an issue as long as orders keep coming and they keep executing them. I think the markets would be worried only if execution takes a backseat.
Well, execution remains the key to watch here when it comes to Transrail lighting. But another stock that remains in focus is Dr. Agarwal's Eye Hospital, a leading eye care chain with a strong presence in Tamil Nadu, is set to raise 70 crore through preferential equity issuance to its promoters. Varsha is joining us with more details on the same.
Yeah, thank you for that. So yes, the stock is buzzing on the back of announcement by the company, wherein they're gonna the board meeting is set on 27th of August, where they're gonna consider a proposal to raise almost 70 crore of rupees 70 crore. Now this is to fund their capex plan. About this company, so they are into eye care hospitals, wherein they have strong presence in Tamil Nadu. And onto the capital expenditure, if I were to talk about, they want to expand beyond 300 centers in the next couple of years, and maybe one of the reason why they are raising funds. Onto the financial analysis, if I were to talk about, in the last 3 years, if you see, the revenue has grown at a CAGR of around 26%, while the PAT, that is net profit, has grown at a CAGR of around 32%. Onto the risk, one of the risks that this company faces is competition from leading eye care hospitals and also the standalone clinics that operate. And of course, the debt funded capex is also the other risk that the company faces. But the 70 crore rupees will be used to fund their capex plan, because they want to expand beyond, their centers, over 300 centers over the next couple of years, and one of the reasons why the stock is buzzing in trade today.
Well, Avinash, coming to you on this counter, Dr. Agarwal Eye Hospital. Any views on this stock?
So I think on a longer term basis, Swami, this stock definitely looks interesting, because they operate in a very niche space and they have a dominant market share. My sense is that the stock has done pretty well after the listing. But I think, once this round is over, I think investors can definitely look at accumulating the stock, because typically when a preferential round happens, there is some ramp up on the stock price. But after the preferential round is over, you get an opportunity to buy the stock sometimes on a slight decline opportunity. So I think structurally we are positive on this space. We feel that the growth momentum will continue for the next, say, 2 to 3 years. But I think it's better to, wait for some time before one makes a fresh entry here.
So wait and watch is the kind of view that we have for the stock currently. But let's talk about Signpost, and this is one counter that has zoomed after the company received exclusive advertising rights for about 67 key metro stations from Bangalore Metro Rail Corporation. Vansh joins us with more details on this one.
Yeah, so the company has received exclusive advertising rights for all 67 key metro stations operated by Bangalore Metro. Now, the Bangalore Metro is a SPV, special purpose vehicle, formed by a JV between Government of Karnataka and Government of India. Now, the company expects a revenue potential of about 600 to 700 odd crores. Now, they expect this to phase over the timeline of 9 years. And this will attract around 3 crore monthly ridership, which is again a big positive for the company. And the company has gained exclusive advertising rights for the tenure of 9 years till 2034. If I talk about the key benefits of this for the particular company, this will significantly enhance the company's national transit media portfolio, and this will further enhance its long-term recurring revenue base. Also, the project will offer a cumulative display space aggregating to 95,000 square feet. Now, this is again a very good positive to watch out for. Also, if I talk about some recent developments in this particular counter, the company has gained a strategic exclusive agreement with Korombi Tech Private Limited, and also the company has received a High Court order from Karnataka enabling the reassumptions of advertising operations in Bangalore. These two are in the back of July 2025. So clearly what we are seeing is a series of developments that is taking place for this particular counter.
Okay, thanks for that, Vansh. So, Avinash, if you are looking at this counter Signpost now, what is interesting is the kind of exclusive rights that it has gotten, about 600 to 700 crore is the kind of revenue potential that we are looking from this particular update that it has come out with. What's your view on this stock?
I think, see, Signpost operates in a very niche space. They are already present in the city of Mumbai. I think, in the electronic, kind of, space where they advertise through their signboards. I think this is a very unique kind of business with a very big opportunity runway. See, clearly, I think this order is going to help them significantly. I think, at least my sense is that the next 2 years, revenue growth, I think, is going to be very strong. And I think even investors who probably have not looked at this counter may look at it because it operates in a very unique space. And as long as manufacturing and, the corporate India growth story continues, corporate private capex is now looking forward for such kind of advertising mediums. So definitely, I think this company should do well. I think over the longer term, one could look at even accumulating the stock at the current level, but I think keep the time frame for the next 12 to 18 months.
Right. Well, moving on, paper stocks have been buzzing in trade, and this is after the government has set a minimum import price for select paper boards. Vansh is joining us with more details on which stocks stand to benefit out of this.
Yeah, so the paper stocks are buzzing in trade, and now if I talk about the trading volumes, they have witnessed significantly high trading volumes across the board. If I talk about JK Paper, which stands as the poster boy of the sector, witnessing volumes about 23x of the 30-day average of the volumes, and clearly West Coast Paper and Andhra Paper also witnessing 7 to 8 times of the 30-day volumes average. All the stocks are gaining with highs of about 12 to 15%. Now this is on the back of the news that the government has imposed minimum import price on the virgin multi-layer papered board. Now this means that the foreign companies can't sell this type of paper in India for less than this price. Now the minimum import price has been set at 67,220 rupees per metric ton, which is imposed for the import of virgin multi-layered paper board. Now this is a strategic move to protect domestic paper manufacturers from cheap imports, and this move will further support the pricing power and margins of Indian paper companies, and this is what we are seeing in the stock price in trade today.
Well, Avinash, coming to you on this entire paper stocks, do you really think that the announcement that has come in will benefit the paper companies in a big way?
No, I think, Somit, we need to look at the fact that, demand in the last 1 or 2 quarters had actually got subdued, and numbers from most of these paper companies in the first quarter has not been very encouraging. So this move is definitely positive, but hopefully, the second half is a very strong period for these paper companies. So hopefully, we could see a little bit of volume upside from, local, FMCG companies or maybe the other packaging companies. So I think net, I think, I don't think this news is enough to re-rate the stocks in a very significant way. We'll have to wait for the second quarter and third quarter numbers. Only after that we could say that demand has picked up. But net, this news is just sentimental. It could possibly give a upside for these stocks for a couple of days or weeks. But thereafter, I think the market should look at earnings, which are more important.
Right. Well, that was the view coming in on paper stocks. Well, thank you, sir. Thank you for joining us and giving us your views on the stocks that were discussed. Moving on, another stock that remains in focus is Interaj Building Solution. The company has announced an order win, and we are getting the Arvind Nanda, the managing director of Interaj Building Solution. So, firstly, to start off with, post this order win announcement that you have done, where does your total order book stands, and what is the kind of order inflow that you're expecting for the remaining part of the financial year?
Thank you for having me on the show. Our total order book, as we gave out last month after our investor call, as on 31st of July, was around 1650 or 60 crores, if I remember correctly. Then now we will only give out our net order book by end of October as such. But we are well on our track to improve our order book because we have improved our capacities. Our new plants in additional capacity in Andhra as well as in Kitcha are coming into play now. So as per capacity improvement, we try to improve our order book because like I've mentioned many times before, our order book can only be sufficient for our capacity because we have to execute even the largest orders in 10 to 11 months in supply. That's the largest, very large orders. Otherwise, 6 to 8 months is a pretty standard period for us. So nobody gives us a pre-engineered building order saying that give it to me 2 years later or 3 years later. So we have to be very conscious that our capacity, but that is improving. So I think our order book will keep improving till we announce the next order book figure.
So post the Q1 call, you did mention that there are additional 2,500
crore of orders that are under the inquiry pipeline. Anything that you expect can be finalized, say, over the next 1 month out of this?
Well, we are expecting a lot of them. I can't give names because of, it's a competitive environment. I can't give names. But there are a lot of customers and they do finalize. So when we give out that 2,500 crore pipeline, which we call pipeline 1, it is likely to get finalized between day 1 and maximum 7 to 8 months. So how many get finalized in this quarter is one thing. But we are very confident that we can maintain our expected targets of sales, expected targets of order book, and expected capacities as we have already given out. Maybe we might even cross them, as I mentioned in the last call with you. But we are very confident that whatever figures we have given out, all the three things will match: capacity, sales, as well as the order book. And we will try and remain ahead of it. Sometimes it's good to have a higher order book. It gives you a push to increase your capacity.
Right.
We have already announced 2 new plants. Yeah,
Mr. Nanda, just on that, updates on the addition in terms of where the new plants are concerned, a quick update on that in the fabrication as well as that. Where does that stand? Do you see the utilization levels ramping up in this year itself?
By utilization of the existing plants, which we announced last year, new plants last year, Andhra phase 2 is complete now. Kicha, the third line, is now installed and working. So those 2 are in play. 2 more that we are starting this year. One is in Gujarat and another one in Andhra for the heavy structures. One will start, I think, early September in Gujarat, and the other one will probably start by end October, early November in Andhra itself. So these 2 will start this year. Capacity addition will contribute to our capacity and sales only around 12 to 14 months later. Pre-engineered building Gujarat should start by April, May next year, adding to our capacity. Heavy structures will take about 12 months.
Okay,
so that will be next year.
Okay, thank you so much, Mr. Nanda, for sharing that update in terms of how the capacities are going to shape up in the next 2 years. But that's all the time that we had on this edition of Small Cap Buzzers. Do stay tuned to India Market Close coming up next.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशिताई, ऐसे बॉय मिलते मुंबई में चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
This isn't just any paper. It is India's launch pad to the skies. Want to know more about it? Join Ravi Dharamshi, Aniket Dharamshi, and Arvind Ananthanarayan in conversation with me, Neeraj Shah, as we decode India's aerospace sector and tell you how to make money from this space. Get ready for liftoff.
They're the force behind some of India's most respected business empires. but you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock. Welcome. You're watching India Market Close here at NDTV Profit. I'm Mahima Vachajani. With me is Harsh Saita and Neeraj Shah. Let's take a quick look as to how the markets are doing. Markets almost at its day's high point. The Nifty 50 trading 0.5% higher. The Nifty Bank also in the green, trading around 0.1% higher. Let's try to pull up the heat map and see what's driving the Nifty towards its market's day high point. And that's largely led by these IT names. Infosys, TCS, HCL Tech, Wipro, Tech, Mahindra, all seeing gains anywhere between 3% to 1.5% or more than 1.7%. Some counters that are also doing well includes Coal India, Hindalco, Indusend, Eicher Motors, Hero MotoCorp. Some auto names also doing well in trade today. But something that's not doing well is consumption names. Asian Paints, Nestle down by about 0.8%. Apollo Hospitals, BEL, Adani Enterprises, M&M down by about 0.4 to 0.5%. Let's also try to pull up the sectoral heat map and see how sectors are faring in trade. Well, clearly Nifty IT, the top gainer on that chart, up 2.6%, followed by Nifty Realty, third day of gains for Nifty Realty as well, up 1%. Nifty Metal also doing well, up 0.8%. Consumer Durable doing good, fairly well in trade today, up 0.7%. But something that's seeing profit booking is Nifty Media. Defense also slightly in the red, down by about 0.09%. Let's try to pull up the advanced decline ratio because that will give you an entire view of how broader markets are doing. Well, it's even Stevens almost. It's 1200 advances versus that of 1000 odd declines with regards to where the advanced decline ratio is concerned. But the chart has been narrowing throughout the day. So that's with regards to the entire advanced decline ratio. Let's try to pull up the broader markets and see how broader markets have fared in trade today. And we've Harsh joining in. Harsh, largely in line, but benchmarks are outperforming right now.
Yes, the Nifty 50 is surely outperforming and the advanced decline is reflecting that. Let's pull that one up and there you go, largely 1:1. Just a hint of outperformance that the advances have shown. Let's look at the mid cap and the small cap. So there's been some underperformance there versus the large cap and understandably so, because the IT pack is what's really driving the large cap index higher. So what you're seeing is the mid cap and small cap indices around 1/3% higher, but in the green, and that's a positive. I want to also quickly look at contributors on the Nifty index, and you will see a dominance of IT stocks there, especially Infi and TCS. So those two contributing roughly 60 odd points to the Nifty's gains today, just those two counters. And along with it, of course, you've got a whole host of others within the IT space which are also gaining in trade. I want to quickly flag off some names for you, and there are quite a few in terms of those which have fallen from the highs. And Nazara, an Imami, a KRBL, a Naveen Fluorine. You'll see sharp falls from the day's high. Some recovery seen in Nazara as well. So it's one of those which have actually gained from the lows as well. But some of these have really fallen from the highs. Gains from lows, Vodafone in focus on the back of that. Eclercs, JK Paper and Godfrey Phillips. Those are some which have gained well from the lows of the day and seeing some good positive traction, including the likes of some of the other paper stocks as well. On volumes, you have a JK Paper, very strong volume seen there. Imami, Nazara, Eclercs are some of the other places and stocks where you're seeing good volume uptick today. But Neeraj, over to you.
Yep, actually over to Himen Kapadia. He joins in right now on the show to talk about his thoughts on the markets as they stand right now. Himen, good afternoon. As always, really good having you.
How are you approaching trade today, Hemant? Because it is a large cap centric, IT centric day.
Very good afternoon to you, Neeraj. Thank you for having me on the show. It's always a pleasure. See, the VIX is hovering near 12, which is not a big deal. It crosses 12 a little bit, but till it doesn't cross 14, 15, not much of a concern. Having said that, there's a bullish gap on the daily chart on the Sensex because of the GST thing last weekend. That's not been covered up fully, which is a good sign. The Bank Nifty had a bullish gap, which got covered up completely. Banks remain weak. IT is oversold. We're giving a corrective bounce. I repeat, a recovery, not a rally. Maybe it goes up some more, maybe a couple of weeks more, but it's not going to sustain. The previous bottoms look like being tested again sometime in September. So as of now, like you said, it's a very stock-specific market. Okay, in terms of sectors, auto as a sector gave a breakout last week. That is sustaining. Metals are looking promising, but they haven't delivered. And if you take a slightly longer term point of view, Neeraj, maybe a year and a half, all the PSUs, the railway stocks, the defense, and the other stocks, they all look good so it's frankly all over the place. Plus, there's an expiry week, plus there's a holiday, plus we have Reliance AGM. So I think it's an event-filled week. But yes, having said that, about 25,002, the market looks like testing 25,212. Above that, things start looking better, Neeraj.
All right, okay. So, Hemant, what about the top picks for the day then?
Okay, top picks for the day. Firstly, I mean, this is frankly speaking a slightly no-brainer. IT is bouncing back. The ones which haven't bounced are giving you a chance. So I have a buy call on HCL Tech at 5 rupees lower at 1500. Stop loss 1475, target 1550. Oversold, positive divergence, cross for buys, retracing the fall from 1740 to 1440. So I think Infosys and TCS have led the move. HCL Tech is playing follow-up. The other stock is Tata Chemicals. It looks like bouncing back from current levels. Oscillators on the daily chart have slowly turned positive. Weekly, some of the oscillators are already in buy mode, has taken support on the 55-day exponential moving average, set for a bounce. Long story short, one can buy Tata Chemicals at 925, stop loss 925, target 985.
Okay. Hemant, what about some paper stocks that have been buzzing in trade today? There's JK Paper, West Coast Paper, even Andhra Paper doing very well in trade today. And a lot of volumes also coming in there. What is your view with regards to these counters where charts are concerned?
Unfortunately, we don't have a paper index. I wish it was there. It would have made things easier for you, me, and our viewers and investors. Having said that, as of now, I think JK Paper looks relatively good. Frankly speaking, most of them have given one year corrections. If you look at West Coast Paper, it's been off for not even a year, probably more than a year. So as of now, and if you look at once again getting back to West Coast, 800 plus to sub 400 Mahima. So it became half. So even if it comes to 600 or maybe 650, I don't think it's a big deal. But as of now, what we are playing out is a recovery, and this recovery, I believe, should take it past 580. So if you have a slightly 2-3 week point of view, I don't think it's a bad idea. The long-term charts will take some time to settle. So I would be more positive on a slightly near to medium term point of view.
Understood. Okay. Hi, Hemant. This is Harsh. Your take on an Infosys and a TCS, this kind of move sustainable on charts? How are you seeing it?
Hi, Harsh. I think sustainable, I don't think so. But a bounce nevertheless, because both Infosys 2000 to 1300, blue chip stock, it virtually fell off a cliff. So it's bouncing back. I believe more headroom is there. TCS has been laggard, so to speak, but nevertheless, recovery is underway. We are at what, 3142 Hertz. I think we are heading toward 3200. But I am still slightly worried about the bigger picture. I believe we are in the last legs of a decline, which might not yet be over. So yes, once again, if you have a view till September end or thereabouts, IT looks good, especially the ones which haven't moved. TCS, HCL Tech, both look like moving. So I would consider this as a trading buy. If you're looking at it from a longer term point of view, I'd say 1/5, not more at current levels.
Okay, thanks Hemain for that view, but Mahima standing by. The impact of GST on some of the QSR names, and some of those are really buzzing today, Mahima. Take us through that.
Right, so basically earlier what was happening was QSRs were charged a 5% GST and they did not get any kind of input tax credit, and for a lot of these QSR companies, the raw material that they were purchasing, 12% GST was charged on them without getting any input tax credit. So that was kind of impacting their overall margins. Now a lot of these raw materials that were being charged at 12% will now start to being charged at 5% once the GST norms, of course, reforms are announced, and that could possibly be a positive for QSRs because their input cost overall will go down and that will aid their margins. Overall, if we see raw materials constituting of that 12% GST mark are anywhere between that 10 to 45% for all of these QSRs. We've tried to break that down also for you. Let's try to pull up the table and see. So what we've done is this is the entire breakup of different companies with their revenues and the cost of goods sold and gross profit as of now. Now we've also tried to break down as to how much of this cost of goods sold comes from that 12% GST. If we can try to pull that table up, there you go. This is the breakup. Around 25% for Westlife comes from that 12% mark. For restaurant brands, it's as high as 45%. For Jubilant, it's as high as 40%. And for Sapphire and Devyani, it's 10% and 9% respectively. So once this gets implemented, the basis points in which the margins will improve is highest for something like a restaurant brands at 90 basis points, Jubilant Foodworks around 70 basis points, followed by Westlife at 50 basis points, and both Devyani and Sapphire by around 20 basis points. So this is the GST angle for QSRs and why, of course, they are buzzing in trade today. In terms of the overall view of these QSRs as to how they've performed in Q1, Bernstein has given their various views and target prices for all of these counters. For Devyani, they've retained outperform with a target price of 200. They're saying that buying expensive growth in a weak macro environment. For Jubilant Foodworks, again, they've retained outperform with a target price of 860. They're saying that overall Jubilant Food remains their top QSR pick, and it does better than peers and continues to do better than peers. In terms of Sapphire, it has retained market perform with a target price of 340, soft performance but promise of self-help on both KFC as well as Pizza Hut will augur growth going forward. And lastly, Westlife is where they are bearish on. They've maintained underperform with a target price of 640. They're saying it's a stable performance as to where Q1 stands, but overall there's positive commentary coming in from management that could possibly improve performance for Westlife going forward. So this is the overall view of what Bernstein has on QSR, and we are also joined by Jignanshu Gaur from Bernstein joining us now. Jignanshu, hi, a very good afternoon to you. Always a pleasure speaking with you. Before I go on to the overall outlook on how QSRs have been performing and what are you expecting in FY26, the first angle that I would like to discuss with you is the GST part. A lot of these companies will be getting benefits from that 12% in raw material to around 5%. How much do you think this will help aid their margins going forward, and how much of this is a positive factor to consider when QSRs are concerned?
Thank you so much for having me. It's always a pleasure to be here. There are two parts to the impact of the GST reforms that are proposed on QSR names. Part one, which I think is the more sustainable and the more impactful part, is the improvement in overall demand if the GST changes. And not just GST change on QSR on food, but in general at an overall consumption basket level. If the GST reduces the outflow for consumers, they will have more money to spend on discretionary. So I think that is what will be more exciting, because it is also more, it changes the base. On the margin, I do expect some part of the pressure that every QSR firm has been facing on gross margin to go away. But I would say a large part of that will be absorbed by the inflationary aspect of food, which they have not passed on to consumers so far, and the margin decline that they have been seeing in the last few quarters. So I'm not very, very bullish on margin impact in the short term. But I think the bigger catalyst should be that consumers should be able to go and buy more food if there is more discretionary item, if there is more money in the wallets.
Ignanshu, the last few quarters or years of this consolidation slash downward move that we've seen in QSRs, does GST or the changing dynamics or the consolidation in any way change the prospects for the industry for the next few quarters?
I think what changes perspective for or the outlook for the industry is consumer demand coming back. Over the last, I think, 5 years, they've broadly struggled to perform. First, because of the competition from the food aggregator platforms, and then the significant reduction that they saw in the demand situation. I think the aggregator platform peak competition is sort of behind now for QSRs. You are not seeing any new pizza chains, for example, emerge on Zomato or on Swiggy. But where QSRs have to find what they have to do is, I think, find growth for their fortunes to change. Jubilant remains our top pick because we think it started this journey of buying growth much earlier in its journey than the others, and it's now hence being able to show double-digit same-store sales growth. But the others are still early in their journey, and they have now started that self-help effort to buy growth. So I think buying growth or getting growth is what matters. And that can only be done by bringing more customers in. And that, again, can only be done by innovating on menu or differentiating your product versus others. So I would say those are the lead indicators for better performance by QSR firms going ahead.
Jignanshu, in terms of multiple things happening in terms of where government is trying to boost consumption and QSRs are set to benefit that. There's rate card, GST card, there's also income tax card that's going to come into play. Just want to understand because it's a two-mind battle. The one side there are people who are trying to eat healthy and the other side there's consumption boost that is happening. How do you think that both of these will play out together? And will this overall benefit QSR as a whole? And apart from Jubilant, because I know that Jubilant has been outperforming its peers, the other counter that you really like and you really think will outperform apart from Jubilant, which one would that counter be?
It's a very interesting question on whether consumers want healthy when they eat outside. I think in the larger context of Indian consumer, there are two types of people, two reasons why we eat outside. One is typically about celebration, enjoyment, marking a special occasion. Right? The other is where we do it far more frequently. And I think in the belly of the market, the larger part of India market, the main reason to eat out is still celebration, enjoyment, and not necessarily about daily eating out, and hence a very high focus on health. So I would say indulgence versus health. Indulgence wins. QSR targets those consumers who want to indulge and be and get joy from eating that food out. So they both are targeting sort of different segments, and hence I think both will continue to grow at their own pace. They will keep overlapping, but largely both will grow. Besides Jubilant, so our view is Devyani has sort of reached a bottom in terms of their performance for both KFC and Pizza Hut. And there are more positive triggers in terms of performance upside for that name versus Sapphire or Westlife.
Got it. Jignanshu, Harsha, hi. Great interacting always. Jignanshu, let me ask that this cut in GST, who is it expected to disproportionately benefit among QSRs? And would this give that much needed fillip to the industry as a whole? What's your quick thought on that? Is it realistic to see very, very strong growth come through?
I would say the growth will come through gradually, not very, very strong, very quickly. That's the one-line answer, because I think the translation of the GST impact into consumers coming back, there are quite a few hoops that we need to cross through to reach there. So it will be gradual and not sudden.
And your favorites within the space, Jignanshu?
So my favorite remains Jubilant, given their operational rigor. I think they need to demonstrate translation of growth into margins better over the next few quarters for the stock to react even more positively. The second is Devyani. I think they have more positive triggers in the stock ahead of them. Sapphire is market perform. I think Westlife can do better again. Its recovery will be sharp because its fall also has been very sharp in terms of performance over the last 18 months. But structurally, I think their ability to their addressable market and their profit potential isn't as large as pizza as a category. So I think that's a category call between burgers and pizza. I prefer pizza as a category more than burgers.
Jignanshu, just wondering, I mean, when you talk about triggers for a particular business, I mean, these triggers are expansion specific or some corporate event specific? Like I heard you speak about that for Devyani, for example.
Yeah, so I think it's a combination of their performance across KFC and Pizza Hut becoming bottom, and hence surprise in terms of either average daily sales per store or in terms of margins. And potentially corporate action, which we have written about as well, that if that comes through, it will be significantly positive for Devyani.
Last time when we spoke about these QSRs, we were talking about how each one of these QSRs are going aggressive in terms of where store expansion stands, but their area per square feet is coming down. Have you seen a trend as to whether revenue per sales square feet has been improving now, and will that improve going forward considering the kind of expansion that Jubilant, Devyani, etc. are doing?
So for QSRs, given that large part of their business is delivery focused, I don't think revenue per square feet really makes the right metric. But you're absolutely correct, right? They have been reducing store sizes, and the reason is they know that delivery is a way of life. They will not be able to pull back that into dine-in. For example, Jubilant, almost 73-74% of the revenue comes from delivery business, right? Versus only 26 for Domino's coming from dine-in. For the others as well, this number ranges from 55 to 65% of business coming from delivery. So I think that's why they have been reducing store sizes and focusing largely on kitchen. I think this will continue. I don't think they will become completely dark kitchens because that has other issues related to brand awareness and so on. However, the shift towards delivery is structural, especially in this price point, where consumers know that at this price point, they cannot get both good quality food and good experience together. So then if they're not getting a good experience, they would rather get the food at home.
Okay. Jignanshu, I am not sure whether you covered too many stocks on the premium side of consumption. But how do you see that side play out? Because again, the impact may be slightly different there. While we're talking GST rate cuts, but their likely rates will continue to remain elevated. What are the stocks that probably lose out as part of this entire consumption theme, and how bullish are you on the premiumization side of consumption?
I think that's a great point. So like you rightly said, while I may not be very stock specific, but in general, if GST rates for, let's say, premium apparel reduce, they will benefit a lot more than value apparel, because the difference in price points will reduce by that reduction in the GST rate, right? For example, if a 1,500 rupee article, 12% GST comes to 5%, that's around 100 rupees cheaper for consumers. And that increases the marginal customer base who wants to buy that product, right? And hence, you get growth largely from marginal buyers, which helps growth across all premium products. So whenever GST rates come down, I think over time, maybe it will take a couple of quarters for them to translate, but we should do better. We should expect better growth. I think the risk that a lot of folks, I think, are not talking about on GST, Harsh, right now, is if it gets delayed, there are people who have pushed back their purchase. So does Q2 get impacted if, in expectation of a GST rate reduction, consumers push back their decisions to purchase. And if that GST does not happen, let's say in the next 1 month or so, right? And Q2 numbers for some of the companies where high reduction is expected might be impacted. And these may be in the automotive space or in the insurance space, on the apparel space, footwear, wherever. I think all of those, that's one short-term view which we need to be careful about, specific for Q2. Because momentum was building in terms of customer behavior, and whether that momentum gets sort of halted in the run-up to the festive season. So that's the slight perspective which needs to be factored in as well.
Absolutely, and that's a valid point, Jignanshu. Thank you so much for taking out the time and speaking with us at NDTV Profit and giving us all those insights.
Thank you so much. My pleasure.
All right, now speaking of GST rates, the new reformed rates may roll out around September 22nd to boost festive demand. Shimi Chaudhary joins us with more details on this.
Well, absolutely. Government is ready to roll out the new GST structure likely around September 22nd. And in fact, what we are picking up at this point, that the GST Council meeting scheduled on September 3rd and 4th, they are going to deliberate on, of course, the two-slab structure which Centre proposed. And there they are going to take a call and take decision on this massive restructuring of the indirect tax regime. And in fact, sources also hinting at that soon after the meeting gets over, they are putting out the notification in the span of 5 to 7 days, and perhaps they'll try to implement the new rates likely around September 22nd. And that couldn't be more deliberate, keeping in mind the festive season is kick-starting with Navratri. And in fact, they are likely to sort of implement all rates so that it will have impact on boosting, of course, consumption and the overall festive demand. And as we have been reporting about it, that this two-slab structure where a lot of essential item, paneer, ghee, etc., which is currently at the 12% bracket, is moving to 5%, and then your small cars, your aspirational goods, white goods, etc., which is currently at the 28%, is moving to 18%. Now, of course, the special rate 40%, where we could see the sin goods and the high-end cars and the high-end bikes, and that is something is also deliberate upon, and the decision would be taken on the future of compensation cess as well, because there are the states which are pitching for the additional levy in place of compensation as the regime nearing to an end. And in fact we are also learning that government may perhaps able to repay the debt much in advance, even before a quarter, by October to November. So the tax incidence, however, remains the same. So we will kind of see to how they are going to implement the new levy, with the Centre pushing for it, and whether it could be on the high-end car also, because earlier the cess was on the high-end cars as well as the all the tobacco related items. So this is going to be a very high-end packed agenda for the GST Council meeting, and both Centre and State perhaps will push for rolling out the new rate and the new structure by around September 22nd is what indication we are getting.
Right, Shimi, thank you so much for giving us those details. But viewers, it's time to slip into a very short break, but we'll be right back with the most awaited segment, Heard on the Street, on the other side.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3-3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Thanks so much for tuning in to India Market Close. It's 2:30, so at that time of the show when we get you what dealing rooms are recommending in the session today on our special segment, Heard on the Street. Samit Sarkar is here with his chatter box. Samit, what are you listening?
Well, multiple stocks remain in focus. Firstly is the hospital stocks, Apollo Hospital and Max Health. Dealers are indicating that there are sell flows on large HNI desk on expectation of some negative news flow that is expected for the entire hospital sector. Dealers indicate that some news expected on a bill to regulate pricing. Now, this has been around for quite a while, but that buzz is again there on the street, and that's the reason we are seeing such kind of a negative reaction in Apollo Hospital and Max Health. In fact, Max Health should have seen a positive reaction given the fact that they were supposed to get included in the Nifty 50, because of which there is expected to be positive flows in this counter. The second stock on the list is Tega Industries. Dealers indicate that there's a buzz of a big corporate development here. The existing promoters might look to completely exit out of this company, so keep an eye out for Tega Industries in trade as well. For Force Motors and Carnex Micro, there's a buzz of some potential order win in both these counters. Force Motor could win an order from defense side is what dealers are indicating. For M&M and Indigo, dealers indicate that there are sell flows seen at higher level on institutional desk. For Sagility, there's some small sell flows on expectation of a potential block deal here, so keep an eye out for Sagility as well. And lastly, when it comes to AB Fashion, dealers indicate that there are buy flows on institutional desk. Both foreign and domestic institutions have been buying this counter in trade today, so keep an eye out for AB Fashion as well.
Okay. Samit, where is it that there is the highest conviction? Are people giving more on the long side currently in the dealing rooms? Because I'm sure you heard 10-12 things, right, and you narrowed it down to the 4 or 5 that you brought here.
Well, most of the calls that are coming in are for longs only at this moment is what I'm getting a sense from dealing room checks.
Okay, very interesting. Thanks a lot for that, Samit. Well, Hemen Kapade, of course, stays with us, and Sameer Dalal joins in as well on the show. So, Sameer, good having you. But Hemen, I'll come to you first, because there are some of these stocks that I wanted to check with you about. AB Capital, for example, right? The last stock that Samit mentioned. How does it look on the charts? Because it's come up as something that people are talking about now thrice in the last 3 weeks.
Well, Neeraj, frankly speaking, it's doubled in the last 7 months or so. We're at all-time highs. We don't have any known resistance levels. Things look just a bit stretched. I wouldn't be very...
Hemen, I'm sorry. I made a mistake. The stock was AB Fashion and not AB FRL and not Aditya Birla Capital.
Okay, no worries. AB FRL... Okay, Neeraj oversold. Very strong support at 70, and short-term bottom in place. You overcome the 55-day EMA. So I believe we are in the throes of a intermediate up move. So some more upside, yes. We've had a protracted decline for 8-9 months. So as of now, downside limited. We're seeing a recovery for the momentum above 85. Neeraj.
Samir, I would, before we get about the markets and specific pockets, but this one pocket, hospitals, usually hospitals have done very well. But I think what dealing rooms are recommending are saying that there are some sell flows on HNI desks because there might be expectations of some kind of a bill to regulate pricing. Have you heard anything to that effect? If something like this were to come about, could it be a big negative for hospital stocks?
So this has been a call that has been going on for quite some time that there needs to be some regulations. I'm not sure if you read recently in the news that almost about 15,000 hotels had stopped or are going to stop Bajaj Alliance's cashless services because, they were not paying the full amount. And that was likely because, sometimes what's happening is overcharging by doctors or by hospitals is happening. And there is some sort of regulation required. Honestly, at the end of the day, this is a very critical service. You cannot have it totally unchecked. So it is required. Is it a negative for hospitals? Yes, a little bit of a negative. Because that means, the prices can get capped. But I don't know how it's going to be possible to do because at the end of the day, if you don't allow doctors or hospitals to earn, then the capital investments that kind of need to go into this sector are so high that it's not something that, so it's a catch-22 how to play it. But any corrections in the stocks are interesting to look at. I don't see it being very, very negative. I don't see them being able to tell hospitals not to charge and, certain amounts. I'm sure there will be certain things, certain ways to play it. But I don't think it's going to mean the end of the hospital business, or not the end, but the profitability ending of the hospital business. I still think the hospitals will be able to make money. This news keeps coming. We need to see eventually what comes out of it and how it can be implemented without hurting the services of the hospitals. But I would be looking to buy any of the hospitals if they fall significantly because of this news.
Interesting. We've also got a host of changes. We had changes on the Nifty 50, but MSCI rejig now in the pipeline. Somit here with what to expect.
Unless the MSCI rejig was announced a while back, but then what is expected to happen tomorrow is the flows, that is the passive inflow and outflow regarding this amount is expected to come in trade tomorrow in the last half an hour. Stocks that are getting included, Swiggy, Vishal Mega Mart, Hitachi Energy and Vari Energies are expected to see inflows of anywhere between 230 to 293 million US dollars, which is nearly 2 to 8 times the 20-day moving average. On the exclusion side, only a couple of stocks, Sona BLW and Thermax, outflow amount is expected to be anywhere between 120 to 160 million US dollars, which is nearly 7 to 18 times the 20-day moving average. On the weightage increase, there's CG Power, which could see an increase in a weightage, and inflows are expected to be just 56 million US dollars. But on the downside, there is Eternal, which is expected to see a lower weightage owing to the FPI cap, and that amount is expected to be huge, around 571 million US dollars for Eternal, which is nearly 6 times its 20-day moving average. Apart from that, there is Asian Paints, JSPL, Havells. Outflows of anywhere between 40 to 100 million US dollars is expected, which is nearly 2 to 3 times its 20-day moving average. So these are majorly the changes that we are expecting when it comes to the MSCI Standard Index tomorrow.
Okay, so those changes expected in tomorrow. That's a quick correction. I want to quickly ask Himen, any of those stocks on your radar on the back of that rejig, and any suggestions on how to play them, especially in Eternal? That number looked large.
Well, Eternal is overbought. We're set for a correction. I'm not a fundamental analyst, but the PE ratio is scary. I believe that it does not look very conducive at this point in time, but 305 is important, Harsh. As long as it's sustained above 305, there is hope for things to remain positive. If it slips below 305 again, from a closing point of view, not intraday, ideally a weekly closing, I think things could start unraveling. We've had a phenomenal move from 45 to 320. There aren't too many reversal signs yet. It's just that the short term, the daily chart has started getting a bit heavy in terms of negative divergence, overbought, crossover sales coming in. Harsh.
Samir, what's your take on an Eternal? So while Hemen was giving his view, I was just looking at the numbers. At 23,000 crore in terms of top line, even if I were to take this top line maybe 3 years forward and double it, it's still trading at maybe 6 times earnings, which is certainly not cheap. And that also I'm penciling in 25% CAGR on top line. How do you view the stock? Just trying to understand how one should rationalize this.
So, as a fundamental analyst, it becomes very, very difficult to justify a buy on something like Eternal at this point of time, for the simple reason that they're not really making money, right? We can talk about sales, but I always believe that, top line is for vanity, but the bottom line is for sanity. And at the moment, if I were to look at that part of it, there is none. So let's assume that the top line does double. Let's assume that the profitability comes into the picture and they start delivering maybe a 4,000 crore profit. At that 4,000 crores, the stock would still be trading at extremely expensive valuations. And then once you've reached a particular scale, then to keep doubling your profit becomes more and more difficult. And if the returns start increasing, then competition. See, this is a business where it's very easy, I'll not say easy, but it's possible for competition to come in. And I would especially say not on the food delivery as much maybe, but on the quick commerce side. There are players like Amazon, with deep pockets, Reliance with deep pockets. If they feel this place is becoming very profitable, they can make a push for this, and then there is nothing stopping the margins coming under pressure. So I'm not in favor of buying in Eternal. I think it's a massively overvalued stock. The risk returns are not there. I think there are lots of other stocks in the market one can look to buy.
Okay, no bets for sector of the day though. It's surely definitely IT. The kind of zing that we're seeing on some of these counters is very, very strong. And of course there's tailwind because there's an indication of rate cuts which are on the anvil from the US, which surely means that spending in the US will likely get a bit of a boost, if not more. Let's look at what IT stocks have done and make a case as to why this is the kind of rally that we're seeing. They have significantly underperformed the Nifty on a year-to-date basis, which is IT stocks. Valuations are now at the 5-year low. It's led by slowdown in earnings and growth. In the last 3 years, we've hardly seen growth. Also, it's the lowest in terms of ownership across sectors. So we're seeing a far lower ownership, and there's been a big IT sell which has come through from domestic investors maybe, but especially from FIs. Let me quickly take you through some numbers. Let me start off with the top 5 IT stocks and what they've done since January of this year. Just look at that, 23% lower on a TCS. And another 18 lower for an Infosys as well. So, the top 2 IT names correcting significantly from those highs, nowhere close to where the Nifty is, right? Now, let's therefore add up the valuations and let's stack it up and see, compare it to the 5-year average. It's surely looking much, much better. And even if you don't pencil in any growth to the current price to earnings, it's still a sharp discount to what the 5-year average price to earnings is, except maybe an HCL Tech or a Tech Mahindra. Outside of that, you're seeing at least TCS and Infi trade at a significant discount to the 5-year valuations. Let's talk about the FIs selling. And FIs have sold over $4 billion of IT stocks since March of 2024. We've seen 15 months of continuous selling that we've seen where the IT space is concerned from FIIs. Assets under custody have fallen from 10.3 to 7.4 in July of 2025. Domestic ownership in IT is at an all-time low at this point as well. So IT sector has a potential for a weight up. That seems to be the call. What are brokerages saying? Kotak on IT services, they're saying Gen AI landscape has evolved in multiple ways, improved moderately, expecting a 2 to 3% annual revenue deflation on growth in the next 3 years. But they're saying AI tools with human in the loop to be the dominant AI adoption paradigm. The BPO, especially the CX BPO, which is the customer experience, business process outsourcing, and application development and maintenance are more vulnerable segments according to them. Persistent, Coforge, Hexaware are well positioned in this environment. Among tier 1, HCL Tech portfolio has lower revenue deflation risks is what they say, and TechM needs to manage higher CX BPO exposure. So that management will be required from a TechM, but essentially focus more on a TCS and an Infi at this point.
All right, Harsh, thank you so much for giving us those details. Samir, I'll come to you on this one. If you were to play the IT team right now, what would you do?
So I would not play. I would not be buying into it. I've been very clear about it. And that, just a 25 basis point rate cut is not going to drive the US market cycle significantly higher. It's not going to tell customers out there that, look, we need to start spending huge on IT, which we've, been wanting to do, but we are not doing for whatever reason. I don't see that 25 basis points. I think this is just optimism. I think the markets are jumping too much around to certain noises in certain places. Eventually, rationality will come in. IT is growing at very muted levels. US, especially US-focused IT companies like TCS, Infosys, who have heavy dependence on global markets. I don't see growth going beyond 7 to 10% on the top line and maybe 12% on the bottom line. Still trading at a PEG of 2. PEG of 2 is not expensive, but then the re-rating is not possible unless growth starts seeing an uptick, and we don't really see that happening on such a large base. Given all those factors, have been, and I continue to remain negative. I don't see funds suddenly saying, let's change our stance to positive from neutral or underweight. I think it's still going to be a wait and watch policy. This is just a bounce up and may even be used as an opportunity to sell by some people. You obviously have one view to it. I'm just trying to play devil's advocate here. Over the many decades, we've seen IT stocks being written off multiple times. Obviously, when valuations are most attractive and when some of these stocks are most written off, is the best time to probably buy them. Do you believe that maybe this could be one such situation despite you not participating in such an opportunity if it were the case? So there's always, when you look back in the rearview mirror, it's easy to say whether you were right or wrong. But look, the call that we are making is, yes, IT has always bounced back nicely, but there's been a drastic change in that what is happening. With the AI tools coming into picture, Indian companies have not been able to be at the same level that some of the international companies have been when it comes to developing tools for these companies. And if AI keeps accelerating, I think the companies in India need to probably reshape and redo how they're doing their businesses, right? So that is not going to be an easy transition. 2, we've seen in the past that yes, IT companies have bounced back, but if you notice over time, valuation multiples have always come off. So let's go back to 2001, where companies used to trade at 100 times price to earning because growth was 100%. So they were trading at 1 time PEG. Then growth obviously came off. Stocks took a while to recover. I think TCS after the 2001 fall, I think not TCS, Infosys after the 2001 fall only recovered to its lifetime high in 2000. I think it was 8 or 9. I'm not even exactly sure. But it took so many years for it to come back. But the PE multiple was low. I'm not saying that IT companies are dead. I'm saying these companies are great cash generating units. So if you're someone who's happy with dividends, if you're happy with a moderate return on your earnings, on your investments, maybe at 8 to 12%, IT is a no-brainer for the simple reason your dividends will make sure that you get your return. But the point is we are investing in the equity markets to get a return of 15%, and I don't see the PE multiples expanding. And if PE multiples are not expanding and growth is not there, then what is going to drive the stock up? So can I be proved wrong? 100%. Market has a tendency to prove everybody wrong. But the point I'm making is if I had to base my judgment on what I see in earnings, in what I see in growth, And what I see other sectors probably doing, I don't see IT being able to generate the same returns that maybe some other sectors and stocks in the market can do. So from that perspective, I'm choosing to avoid IT.
That's quite a comprehensive view, Samir, on the entire IT pack. Now, on the back of this entire GST, the GST reforms that are going to come into play, that's going on, Fada has written, the entire association has written requesting, instead of bringing out the GST reforms during Diwali, to prepone those reforms, and that's because Q2 will be impacted for them, because people will now be delaying their buying of cars, and that similar trend is observed in the consumer durable space also. We spoke to B. Tyagarajan also, and he said the same thing, that Q2 will be impacted because people might delay buying of big things, and cars and consumer durables probably are the two big things that will get impacted. And that's something that the Fada union has written to the government saying and requested if they can prepone the GST reforms announcement.
Yeah, so I think there are two things out here. One, our team in Delhi, the bureau in Delhi, Shrimi and team have have just today mentioned that there is a very high probability that the rates might come into effect September 22nd. It still impacts Q2, but working with an assumption that there are 15 days of a Shraddh period before that, where demand is typically low, not zero, but typically low, that might work in the favor. But there is also a very wide speculation that if the council meet happens on the 3rd and 4th of September, then does it come into effect immediately post that? Because that's how typically past duties have taken shape. So remains to be seen. Based on the information available today, the worst case scenario is September 22nd. The best case scenario is slightly earlier. But even if it's 22nd, I dare say, because there is the Shraddh period of 15 days out there, maybe the damage will not be as high as one would have thought otherwise.
And maybe the recovery thereafter could be sharper. But of course, the call from Fada seems to be justified, because you'll have almost a month where you'll have a very, very lean period.
But the other way to think of it is just very, very quickly is that, as the team City was telling us, right, that if you or Mahim are wanting to buy a car, you are postponing the decision, not cancelling it.
Yeah.
And Blue Star, so car is different and consumer durable is different, but Blue Star said that if there is a demand pump up post the GST cuts, we are very equipped to supply all of that. So I don't think that will be an issue.
Yeah, just the inventory levels might be an issue, and
that's the only thing.
Just a month of pain point that both these industries will probably face. In fact, we also spoke to Saharsh Damani, CEO of Fada, about this. Listen to what he had to say.
We are entering the festive period in next 4 to 5 days, with Onam coming up in Kerala and Ganesh Chaturthi in the western part of the country. As we have released in last month's press release, when we did the July auto retail numbers, industry was sitting on 55 to 57 days of inventory, which is almost 2 months of inventory in hand at this point of time. And as you know, festivals is a big period for automobile industry, and dealers generally keep a higher inventory at their disposal. Now, with the announcement coming on 15th of August by the Honorable Prime Minister, we have seen that even though inquiry and walk-ins have been extremely healthy, the conversion rates from inquiry to booking, that has taken a slight hit. And we are thinking that because of this, because of the new rate information which will come out very soon, and as per today's news, by 22nd of September.
Okay, so that's of course the take coming in from Fada. Samir, your take with regard to a couple of these auto counters which have really zoomed in trade. Is this going to be in your opinion, a demand which will be subdued in the short term but will recover pretty much fully and maybe even get fresh legs if at all the GST rates are rejigged, and even if it's rejigged maybe a month from now?
I love the optimism that you all have on a lot of things, right? Trying to make sure that something goes in a particular way. So let's be honest. So when we first spoke immediately to your channel as well, I think Mahima was there on the show. I talked about the fact that delay of these purchases is going to happen, which is going to affect Q2. I also remember discussing at that point that let us assume that you are planning on buying one car, right? You will postpone it, and yes, you will buy it post the reforms, whether it's 3rd or whether it's 27th or whenever the GST cut happens. Are you going to say because of a 10% or 12% cut in GST, you're going to go out and buy a second car? No, you're not. So are you saying that demand is suddenly going to accelerate because GST has been cut by 10% and your cost of your car is probably lower by 10%? No, I'm not going to do that. So to assume that just this tax cut of GST is going to drive consumption, I think that is being a little too optimistic. Yes, what can happen is maybe over time, maybe over the next year to 2 years, people could, if affordability is there, economy is doing well, consumption boost happens, then probably an uptick is going to happen. Am I expecting it to happen this year itself? Is suddenly everyone going to buy 2 ACs instead of 1 AC or 5 ACs instead of 4 ACs? I don't see that kind of jump happening because in your house, you have space for 1 fridge. You don't need 2 fridges, or you don't need 2 air conditioners in your bedroom. You only need 1. You're not going to increase the consumption. So I don't see this as a game changer over the near term. Over the long term, yes, it can be a beneficiary thing. But don't be so optimistic that everything is going to be hunky-dory the minute the cut happens.
Right. Okay. All right. So that's with regards to where Sameer's view on consumption stands. But sticking to that consumption theme and GST theme, the one stock that's been buzzing in trade today is Jubilant FoodWorks, and we've chosen this as a candidate for bull versus bear because there's a lot of optimism around the QS, and especially Jubilant being a preferred pick by a lot of brokerages as well. Let's try to take a deeper look as to what the bull versus bear case stands for this particular counter. Well, in Q1 itself, the margins. That is, gross margins for this particular counter were down by 200 basis points, largely led by promotional efforts. Now, this could probably be offset by the new GST reform that will, change in terms of the raw materials that they use, will reduce from 12% to 5% and will aid their gross margins. So that's the first point with regards to where gross margin stands. The next one is growth. In terms of where growth stands, revenue growth continues to be strong for Jubilant FoodWorks, and this is as compared to peers as well, even in terms of the same store sales growth that's been in double digit for the past 2 quarters for Jubilant FoodWorks versus its peers. But the growth for the 2 counters, that is Popeye as well as the turkey business, still remains uncertain. So they'll have to improve their operational metrics as well as their growth in terms of where both of these segments stands. The next one is then margins. EBITDA margins have improved and expanded by around 42 basis points in Q1. But management has said that going forward, their focus will be on growth versus margin. So management right now is not prioritizing any kind of margin expansion over growth. Their focus right now is both in terms of transaction as well as expansion, where growth comes into picture. Lastly, in terms of where international business stands, Sri Lanka did very well for them in Q1, 42% growth on YOY basis. But Bangladesh is still a pain point where the growth was merely 4%. Lastly, in terms of where ANR stands for this counter, well, right now in terms of where Bloomberg consensus are concerned, there are 16 buy calls, 9 hold calls and 7 sell calls for Jubilant with a potential upside of around 11%. So this is the holistic view of a bull versus bear case as to where Jubilant FoodWorks stands. Heyman, I'll quickly come to you on this one. What are the charts indicating for something like a Jubilant?
I'm oversold, downside limited, short-term bottom in place, volume action positive, 620 support was seemed over at least from a shorter-term point of view.
Okay, thank you, Heyman. Thank you, Sameer, for joining us. We'll let you both go on that note. And viewers, we'll slip into a very, very short break on the other side. We'll continue to take views coming in from guests, and we'll get you the BTST call for the day as well. Stay with us.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up.
Back with India market close right here on NDTV Profit. The IT index too is off from the highs of the day, but you would expect some bit of profit booking. I mean, it's still 2.43% high. You can't crib about this, right, per se. 0.5% for the Sensex and the Nifty as well. The global markets are also okay today, so no big shakes, if you will. Select names are kind of doing okay. Now, Himen, just before we get to our guests, I just want to first get in my colleague Vansh, who joins in to talk about the list of a few key stocks that make it to his radar for this afternoon. Vansh, what's on your list?
So let me start off with Mazgaon Dock. Now the center has given clearance to the Defense Ministry and the company to begin negotiations for a 70,000 crore deal to buy 6 P-75 submarines. Now the project is in consortium with Germany's Marine Limited. Now the company is responsible for construction and delivery of 6 submarines, and the order book positions of the company stood at 32,200 odd crores as of March 2025. So clearly this one is on my radar. Second on my list is Dr. Agarwal High Hospital. Now there is a board meeting on 27th of August to consider proposal to raise funds. Now they plan to raise about 70 odd crores, and the fundraise is to be equity shares to its promoter Dr. Agarwal Healthcare Limited. So clearly the fundraise is to issue shares to the promoter Dr. Agarwal Healthcare. Thirdly on my list is Bharat Bijli. Now the company has approved transformer capacity addition for additional capex of about 65 odd crores. Now the company is aiming to increase its transformer capacity at Navi Mumbai factory to 35,000 MVA from the 28,000 MVA. Now this is a strategic move by the company to cater to its growing demand for transformers. So these are some of the stocks that are on my radar.
Okay. Thanks a lot for that. Bharat Bijli is up 5. Mazgaon is up about a couple of percentage points as well. On that note, Bhavin Mehta of Daulat Capital is with us today. And Bhavin, good having you. Thanks for joining in. Before we talk about the index at large, some of the defense names, Bhavin, because I think we've had, and of course, Piyush Pandey Johnson, of course, of ICICI Direct as well. And thank you to both of you. But Bhavin, I'll start off with you. The defense names, the spate of ordering activity has really gone up, right? We saw post Operation Sindoor, large ones, then some more. Is it showing on the charts?
Thank you. So if we look at last couple of trading session, definitely we have seen good amount of action on the defense side of the market. However, a few stocks on our radar that has been consistently witnessing some amount of supply at higher level. So if you look at something like Hindustan Aeronautics, Bharat Electronics and Trade today, we are looking at supply at higher levels, and even earlier, wherein we used to see kind of a positive news flow, used to see these counters moving up by 3-4%. That pace of momentum has reduced significantly. So what we are waiting for right now is some amount of either a consolidation to take place before witnessing any major move on the upside or a breakout. So majority of these stocks have now started to at least trade below 20-day EMA, which was not the case previously. Our sense is that till the time it does not cross that level, the pain remains. Higher levels are looked as an opportunity to trim some amount of position. And till the time there is no significant consolidation, the move could be slightly on a negative side for these names.
Bhavin, what about your view on the Nifty 50 and the Bank Nifty?
Yeah, coming to Nifty 50, we believe. So if you look at rolls data, this time around rolls are slightly lower versus average, 3 month average, what we usually see. At the same time, we believe that these indices are now trading above short-term average. So if you look at Nifty, clearly quoting about 24,845 kind of a level, which is your short-term average for the index. We have seen good amount of move in today's trade led by something like IT as a sectoral indices. Our sense is that this implies if we cross and close about 25,000, we are again moving to that level of 25,200. But it would be very, very crucial for markets to close about 25,200 for any major move on the upside.
And what about your top picks for the day, Bhavin?
Yeah, coming to our stock ideas, what we are looking at is one, if you look at Shriram Housing Finance, we have seen a very decent consolidation in this stock around level of 620, 621. Our sense is that stock is placed for a move closer to 650, 660 on upside. Recommend long on with the stop loss of 605. Second trade idea is for Varun Beverage. This stock is, in fact, if you look at yesterday's move as well, the Friday's move as well, what we have seen is a very decent reversal from lower level of about 505 to 510. We are anticipating this stock to eventually move closer to 540, 550 on upside. Keep a strict stop loss of 500 on the downside.
Okay, Pankaj Pandey joining us as well. Pankaj, what's the take with regard to defense? And Mazagon Dock, of course, one of those in focus on the back of that huge order, if it were to come through, 70,000 crore. You believe fundamentally, does that change your view, if you had one, with regard to a Mazagon Dock and defense as a whole? Give us that perspective.
Yeah, hi, good afternoon. Thanks for having me. I think on the overall defense pack, we've seen a bit of a time and as well as price correction. Our view on defense is quite constructive. I think our sense is that with acceptance of necessity given to about 11.5 lakh worth kind of a project, in the next 2-3 years, we would expect ordering or tendering of nearly or 3-4 years ordering and tendering to the tune of about 5 to 7 lakh crore. Now, coming to Mazagon Dock, I think we have a target price of 3,160. I think what we are clearly liking is that in the next 18-24 months, besides this 6 P-75I submarines, there could be a possibility of another 3 more Kalaveri kind of a submarines, which could get ordered. So their order book can easily sort of go up in excess of 2 lakh crore, which again is a pretty good visibility. So mid-teen kind of a top line, bottom line growth, our sense is very much is possible, and which is why we like. And even for a company like HAL, I think it was sitting on 6-time order book to bill ratio, and with recent order it's sitting on about 8 times. And there also our sense is that while last 2 years execution has been sort of missing, but overall sense is that going forward the subsequent quarters, the execution is expected to pick up. In fact, if you sort of look at any kind of a defense name, largely order book to bill is somewhere in the range of about 5 times. And I think we have seen, while the valuations have been rich earlier, but our sense is that the visibility, there is no dent in the overall visibility. So I think bit of a time and price correction post that we would expect this sector again to sort of hog the limelight.
Okay, all right. So that's with regards to where this defense pack is concerned. But the other pack of stocks that are buzzing in trade today is paper stocks. And this is after the government that has set a minimum import price for select paper boards. Anushi joins us with more details on that.
You know, it's a strong notification that has come from Ministry of Commerce, and that's why we're looking at the stock impact on a couple of these paper names. Just to pull out some of the names wherein we are seeing majority of this impact includes the likes of JK Paper, West Coast Paper, as well as something like Andhra Paper as well. We are seeing gains of around 12 to 15% of each of these counters if we look at the intraday high levels. And this is with high trading volumes that we are looking at. In fact, if we just look at JK Paper, 23 times its volumes compared to its 30-day average. Even the other two counters, we are seeing about 7 to 8 times of higher volumes in comparison with what the 1 month averages are. Now, what is the key reason for this buzz? Now, what has happened is that government has now imposed a minimum import price in terms of where the virgin multi-layer paper board is concerned, and this contains about a minimum import price of 67,000 per MT is what we are looking at. This is in interest for the domestic paper manufacturers to save for better pricing power over here for the domestic manufacturers, as well as to save some margins as well. This is again in line with the government's move to safeguard these companies from cheap imports that are taking place. So some curbs over here have been imposed on that, and that's why we are looking at the strong buzz in a couple of these counters.
Right, Anushi, thank you so much for breaking that down for us. Strong buzz for sure. JK paper, West Coast paper, as well as Andhra paper. A lot of these counters buzzing in trade today. Bhavin, I'll come to you on this one. Any view on the charts for something like a JK paper or West Coast paper? What are you seeing? What is the support and resistance that you're observing?
So if we look at something like Andhra paper, we have a clear supply zone around level of 88, 89. Believe that if that level is broken out, move could extend up to level of 104, 105, but it needs to close above that level of 89. As far as West Coast paper is concerned, it is at a clear supply zone. I think the volumes today has been significantly higher. High probability that it will move above that particular range of 575, 580. If that happens, that could be fresh trigger on the upside, possibly towards level of 635 on technical fronts. Also on West Coast paper, the consolidation at lower end below 500 has been significantly higher. So believe that now 520 to 525 range should act as a very strong support on this particular name. That's all.
Okay. 14% higher, but papers is such a small subject per se that it becomes difficult to really call in big changes there and have a lot of people participate. What is rather easier, even though it's a smaller sector, is aviation. And Pankaj, I want to bring you in here on Interglobe Aviation. I trust you have coverage there, do you?
We don't have nearest.
Or you don't have coverage there. Okay, nothing in aviation or airports, is it?
So we've got only one stock, and then I think SpiceJet is still sort of.
So no airport stocks either. GMR or okay, fair call. Okay, in which case, Bhavin, can I ask you? Lot of expectations because the numbers were good. Now it's going to be a part of the Nifty as well. But somehow Interglobe is after 6,000 is kind of losing the zing. I mean, can it break out? What levels would you watch out for when you're looking at Interglobe Aviation?
Yeah, so definitely what we have seen over last 1.5 year is that whenever the deviation of more than 5% occurs on the Interglobe Aviation, we have seen a mean reversal kind of theme playing out in this particular counter. Now, a couple of days back, the stock moved to a high of close to about 6,200. Its short-term average was close to about 5,900. We have again seen some amount of consolidation that is helping averages to move higher. Our sense is that, possibly this stock is placed for a very strong move on upside. Add to that, we have a festive season ahead, which ideally should be a driver. Historically, that has been the case that whenever there has been a festival season, we have seen a very strong move in majority of this name. So I believe that high probability of a potential breakout above 6,200. If that happens, a move towards level of 6,450, 6,500 then cannot be ruled out. At the same time, on downside, we have a very strong base around level of 6,000. My sense is that anything towards level of 6,000 one should look to accumulate, or probably above level of 6,200. View continues to remain very positive on this particular name. If you want me to cover GMR Airport, against extremely range trade here, we are looking at a range trade between level of 82 on the downside to somewhere around 90 to 93 level. It needs to break out above this zone, before it gets into that momentum phase that we are all waiting for. So 92 will be the crucial level for this stock to break out.
What about Pankaj? What about some of the hospitality counters? And I talk specifically on ITC hotels. You had one brokerage come out and actually give it an unfavorable rating, if I can call it that, 12% downside is what they say. They believe valuations have run up. Your sense?
So on the hospitality, our sense is that we like the entire spectrum. So we have premium hotels like say Indian hotels, which we like. Beside that, ITC is another pick, which we continue to sort of like ITC hotel, I meant. And on top of it, chalet and even lemon tree is something which we like. So we like the entire pack. Our sense is that the demand will continue to grow at 9%. Supply at best is going to grow at 5%. And in case if there is some delay, then supply is going to be even more lower. So which means that your occupancy rates and even the ARRs would remain elevated levels. Valuations are on a higher side, but we don't see any dent to the overall growth. So from that perspective, I think this space looks quite better to us from a portfolio perspective.
Do you have a view? Bhavin, do you have a view?
Yeah, so coming to hotels, Lemon Tree this particular month has witnessed a very strong move. Sense is that there is a potential for a strong move on upside. The stock after 2024 May, it has broken that zone of 153. Sense is that move towards level of 175 to 180 very much probable on this stock. As far as Indian hotel is concerned, there is a very strong support around level of 775. If that stock drops another 810 INR from current level, sense is one should look to accumulate with the stop loss of 765 for a potential move towards level of 810 to 820 in an immediate term.
Okay, all right. So that's the view with regards to where the hospitality space is concerned. But onto our brokerage call for the day. Jefferies has upgraded Divis Laboratories to a buy, and Varsha is standing by with more details on the rationale. Varsha, what are you picking up?
Well, thank you so much for that. You know, Jefferies has come out with a note on CRDMO sector, wherein they say that Divis has a huge opportunity because CRDMO, you know, that sector is at an inflection point. What they say that Divis has evolved from being a chemical manufacturer to a strategic global partner, and Divis will benefit from China Plus One strategy, wherein global pharmaceutical companies are diversifying their supply chain to India, wherein Divis will have a huge opportunity. The other growth that Divis has is of course the GLP, that is anti-diabetic and anti-obesity products that are in the pipeline, and Divis is going big on that, and Jefferies is also betting on Divis for that. Also Divis has the other growth opportunities. One is of course the growth will be led by custom synthesis, wherein Divis has a huge volume over there, and also their generic portfolio, the growth will also come from the generic portfolio that the company has. Overall, Jefferies is actually betting on their generic portfolio, their custom synthesis projects, and of course the GLP products that the company is into, and because of that they have came out with a CAGR revenue growth of almost 14% sales growth, and of course 20% EBITDA growth over the next 3 years.
Okay, Varsha, thank you so much for giving us those details. Pankaj, with respect to where Divis stands, would you also kind of agree with the view that Jefferies has, and if yes, what is the target price that you would give to something like a Divis?
On Divis, our target price is 6,700. We continue to like, I think this company has been at the forefront from a CDMO perspective, and we continue to sort of like the business. Probably last quarter, there was some pressure on the generic side of the business, but I think custom synthesis continues to sort of do well. Company has been undertaking a regular amount of capex, and I think next few years, again, you have capex lined up of about 650 to 700 odd crores. So I think, except for generics being slightly under margin pressure, I think most of the things are in place for this company to sort of do well. And so nothing changes from a overall structural positive perspective which we are carrying on this stock.
Okay, all right. So that's the view with regards to where Divis stands. Bhavin, your quick view on Divis with regards to where charts are concerned?
Yeah, so what we've seen in pharma sector is there are a lot of news flow from US that continues to impact this particular sector depending on the news flow. So we do not have a very constructive view per se. We will wait for some development. However, as far as Divis is concerned, 50 DEM at 63.80 remains a very crucial level for the stock. The stock needs to close above this particular mark for any fresh momentum on upside. Till that time, on downside, watch out for 5,900 to 6,000 as a kind of a key technical support level for this counter.
Okay, all right. Bhavin, the other counter that's been buzzing in volumes as well as, the kind of uptick that we've seen in the counter, up 7% now as we speak almost, that's Safari Industries. Any view on the charts there?
If we look at the development on Safari industry, we have seen a very strong supply over last couple of months around level of 2,300. Stock over and over again has seen a very sharp spike in an intraday trades wherein multiple times stock has moved closer to 2,250, 2,300 range and witnessed a reversal. So I think wait for one more trading session. Let the stock move past level of 2,300 for any fresh long ideas. But as long as that level is not crossed on downside, the stock has historically taken support in the range of 1,900 to 2,000. That should be retested as far as it does not cross that level of 2,300.
Bhavin, BTST for today?
Yeah, so if we look at stock of Bajaj Finance, this has seen a good amount of development, good amount of strength in trade today. Sense is that stock ideally should move closer to level of 915 to 920 possibly by tomorrow. Stock is currently trading around 900, 901 range. On the downside, 892 should be your stop loss for any long position.
Do you like Bajaj Finance, Pankaj?
Oh yes, I think our sense is that Bajaj Finance will continue to deliver 25, 26 kind of a AUM growth, will maintain ROAs of 4% and around similar price to adjusted book value multiples. I think one of the key beneficiaries of GST rate realignment will be Bajaj Finance also, because a lot of these consumption categories could get a good amount of push. And which is why I think Bajaj Finance within NBFCs is looking quite attractive to us.
Okay. All right. The other counter that's been buzzing in trade today is R Systems, that's acquired Novigo for a 400 crore deal. And we had a conversation with the CEO, Mr. Ritesh Bansal, on what is he eyeing with this deal and how big is this going to be as a disruptor in the market. Listen in.
The way we are seeing it is AI has been a bigger disruptor and revolution than anything else we've seen in the recent past. And the budgets and the overall adoption is moving at a speed at which it is difficult for every organization to catch up. With the synergies that we bring together, not only will we be bringing a lot of that capability to our existing clients, but it is going to help us capture new market in a very differentiated manner. So not only do we see that it should, as a combined entity, give us the ability to post, market leading growths as we go forward, but more importantly, it should also be deepening our wallet share with our existing clients as they are spending more in those areas.
All right, Pankaj, any view on R Systems?
No, we don't have a view on our systems, but overall IT, we are quite selective. I think Coforge, which is trading somewhere about forward basis 35 times and Persistent somewhere about 41 times, are relatively attractive to us. Besides that, Newgen is another stock what we like. But in general, I think while in IT, overall order wins have been good, but conversion to revenue is still sort of needs to happen. And I'm not too sure even next quarter we'll have that confidence to sort of say that. So one needs to be very selective in IT. Again, perspective on US market is a big question mark.
Okay. All right. So, well, that's the take coming in on IT. But I want to also quickly try and cover some stocks which have been buzzers today in trade. And within that pack, you obviously had a lot of the paper stocks, but outside of that, you had something like an eClerx, a Godfrey Phillips. Bhavin, any of these names on your list? And what should traders do at this point with some of these names? Because some moves seen.
Yes. So today we have seen a very good amount of strength in IT. We have a couple of stocks on our radar. Eclux definitely is one of them. We have seen good amount of strength, and in fact, if you look at versus rest of the IT peer, this stock has outperformed big time versus majority of IT peers. Having said this, the stock is also breaking the crucial level above level of 41.20. Sense is that as far as this level, the stock manages to close above this level of 41.20. High probability of a move towards level of 4400 next. So remain constructive as long as this range is maintained. Overall, continue to be positive for this name, and also from rest of the spec, we are looking at something like Infosys, Wipro, wherein good amount of shorts are being observed. If we see a kind of unwinding of shorts, there could be a continuation of current momentum. So overall, for a short-term trading perspective, IT could be on radar over next couple of trading sessions.
Pankaj, your take on IT?
So I just mentioned that, see, in general, overall tier 1 IT names have continued to sort of give very weaker guidance. Tier 2s have been relatively better placed. And there we like Coforge and Persistent. But overall sense is that even next quarter also it's a bit challenging to sort of say that a lot of these deal wins will start getting converted to revenues, given the uncertainty which is there in the US market. So somewhere down the line, I think IT, we need to see follow-up happening because see, while we have seen decent amount of time and price correction, I am not too sure whether we are going to see a similar follow-up. So not a level to sell, but again, difficult to say that things have improved for the sector to sort of lap it up in a big way.
There's some stocks which are flying around, I think, in the last few minutes of trade. So Imagica is one which has had a zoom up in trade, so should bring up that one right there, the spike. I think it's dying as well, actually. But yeah, it's certainly a stock that moved up higher in trade in the last few minutes. And there is also Apollo Micro, which by virtue of the move done in the last few minutes has hit a fresh high right there. Look at that buzzing, and look at the volumes there on that stock. Over nearly 6 crore shares traded on a single exchange in Apollo Micro. So really sharp up move higher. Bhavin, any luck? Any thoughts? Apollo Micro, Imagica?
So if you look at Apollo Microsystem, last 2 days, very strong volumes, very strong price action. The stock is also broken above level of 215. That was a very crucial resistance. However, given the kind of move that we have seen in last 2 days, I think one should wait for some amount of consolidation before getting into this counter. As far as Imagica is concerned, we are consistently seeing a supply at higher level. Really not sure about today's move, but again, it seems to be drifting lower. Sense is that as far as that level of 60, 62 on closing basis is not crossed, higher level should continue to act as a supply for Imagica per se.
I wonder, Pankaj, 124, 125 times, so it's not a cheap stock, and yet people are buying it and taking it to new highs. Apollo Micro.
So I think Neeraj, we need to sort of see some of the stocks not from the near-term earnings perspective. So, for example, we have something like Azad. So that stock, again, our sense is that will continue to deliver 35% plus kind of a growth. But yes, valuation current looks cheaper. But I think a lot of this is going to sort of unfold, say, probably 2 years, 3 years down the line. So I think sustainability of growth becomes a key thing, and which is why you can't really look all the defense stock from a P multiple perspective, because a lot of these stocks hold good amount of niche capabilities, which can be replicated. I'm not too sure about Apollo Microsystem, but we know we cover some of these names. So even Dynamic Technologies, their air division is sort of doing very well. So similarly for Azad. So I think similarly Astra Microwave, again on the radar side, our sense is that can do very well. Data Pattern is another stock. So some of these names are niche. Solar Industries, you really do not have a parallel for this, and which is why it trades somewhere about 65 times on FY27 basis. You can't really compare some of these names with or evaluate just P multiple basis.
Okay, Pankaj, Bhavin, thank you so much for giving us those insights and taking out the time and speaking with us at NDTV Profit. We're a minute away from market closing. Let's take a look as to how markets have fared throughout the day. The Nifty 50, let's try to pull that up. Up by about 0.4%, of course off from its day's high point, but and also down from that 25,000 levels, trading around 24,977. With regards to where Bank Nifty is concerned, closing almost flat there, hovering around that 55,100 odd levels. Let's try to pull up the Nifty heat map. IT continues to lead that chart. Infosys, TCS, HCL Tech, Wipro all leading the pack with about 2 to 3% of gains. Some counters like Hindalco, Indocent, Coal India, as well as Tech Mahindra and Hero MotoCorp and Eicher Motors are also the top gainers and did well in trade today. But something that's been under pressure today, some names like Nestle, Asian Paints, BEL, SBI Life, as well as ICICI Bank, some counters in the red. Let's try to pull up the sectoral heat map. Nifty IT leading the pack, followed by Nifty Realty and Nifty Metal, both seeing gains of about 0.7 odd percent. Nifty Consumer Durable also fairly doing well. Nifty Auto, Nifty Pharma also up about 0.4, 0.3 odd percent. But something that's not done very well today is Nifty Media, down by about 1.9%. PSU Banks in the red, down by about 0.3%. Nifty Defense also seeing some profit booking, down by about 0.3% there. Let's try to pull up the broader markets and see how broader markets have done. Well, the mid-cap 150 is closing in the red, down by about 0.08%. So benchmarks have outperformed the broader markets today. The small cap 250 closing largely flat at its day's low point. Let's try to pull up the BSE 500 and see how the counters have fared in the broader end of spectrum. JK Paper, a lot of paper names in fact, JK Paper, West Coast Paper, a lot of those names did very well. JK Paper closing 16% higher, followed by eClerx, Vodafone Idea, Mastek, Jubilant Foodworks and HLE Glasscoat. Significant run up for HLE Glasscoat specifically. Some counters that did see a lot of selling pressure today includes Imami, CSB Bank, KRBL, as well as Pfizer and Delta Corp, down by about 3 to 4 odd percent. Let's also try to see as to what are the factors that you'll go out and watch out for today post market hours, and what could those factors be. Let's try to pull that up. Some corporate actions there, trading ex-dividend. Vedanta will be a big one to watch out for. JBM Auto, Imami Paper Mills also, all these counters will be trading ex-dividend. Bonus issues, Karur Vysya Bank and HDFC Bank. Here the ratio is 1:5 where Karur Vysya Bank is concerned, and HDFC Bank 1:1. In terms of where listings are concerned tomorrow, a lot of IPOs that opened last week will see listings tomorrow. Patel Retail, Vikram Solar, Gem Aromatics and Shriji Shipping Global, with Vikram Solar seeing exceptional subscription as well. In terms of the IPO opening tomorrow, there is Anlon Healthcare that opens for subscription tomorrow. It's a small IPO of around 177 odd crores, but that opens tomorrow and closes on 29th of August. Vikran Engineering will also open for subscription tomorrow and close on 29th of August. It's an EPC company mainly into water infrastructure and EPC engineering. In terms of the MSCI index rejig that we're expecting tomorrow, exclusions include counters like Sona, BLW and Thermax. On the other side, the weight up includes counters like CG Power, and in terms of where weighing down is concerned, counters like Eternal, Asian Plains, JSPL and Havells will see outflows in terms of where weightage is concerned. So this is with regards to everything that you need to keep an eye on post market hours today. But with that, we're completely out of time on this edition of India Market Close, but lots lined up on the other side, so do stay tuned.
force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict,
welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. Viewers, benchmark indices recovered from initial hour losses to end trading near their intraday highs. While the Nifty 50 wrapped up just shy of 25,000 levels, the 30-pack Sensex sustained above 81,000 levels. IT heavyweights like Infosys, TCS and HCL Tech uplifted the Nifty by the highest number of points. On the contrary, banking majors like the ICICI and HDFC dragged down the index. Selling pressure pushed down the broader markets, thereby underperforming the benchmarks. The sectoral picture looked mixed with almost equal losers and gainers. IT was the biggest gainer of the day, followed by realty and metal. On the other hand, media, PSU, bank and defense emerged as the top three sectoral laggards. The overall market breadth ended skewed in favor of the bears. Citi predicts a third year of slow growth for Indian IT in FY26. The slowdown stems from the multiple factors, not just economic issues. AI spending rises, but IT services see limited benefits. Growth and margins also face challenges, with caution advised for investors. The brokerage house prefers Infosys, HCL Tech, Hexaware and Emphasis, and that also makes it the sector of the day. Kotak reports moderate progress in the Gen AI landscape for IT services. AI agents will drive 2 to 3% annual revenue deflation over the next 3 years. Software development is a key AI focus, but mainstream adoption is unlikely soon. Persistent, Coforge and Hexaware are well placed, while HCL Tech faces lower risk than Tech Mahindra. MOSL recommends buying KPIT Tech with the target price of 1600 rupees. It advises selling Tata Tech and Tata Elxsi with targets of 580 rupees and 4600 rupees. KPIT benefits from growing vehicle software complexity. So Tata Tech and Tata Elxsi face challenges with lower margins and structural issues. Paper stocks surged with high trading volumes today. JK Paper, West Coast Paper and Andhra Paper saw sharp gains. The government set a minimum import price of 67,220 rupees per metric ton on virgin multi-layer paperboard. Now this move shields domestic firms, boosting their pricing power and margins. Jefferies reports India's government is set to rationalize GST rates to boost consumption. Preparations are underway for potential US tariffs with hopes for better ties. India-China relations are improving steadily. The government plans more reforms and expects further rate cuts without growth concerns. Global brokerage firm Jefferies has upgraded Divis Laboratories to buy from hold with a target price of 7,150 rupees. Now, this move is driven by the company's strong growth prospects, led by its custom synthesis segment. Divis Laboratories boasts the best GLP-1 pipeline in Indian CRDMO and is well positioned to benefit from the China Plus One strategy. Now, the company's generics division is also showing signs of growth, with new launches expected to drive recovery. Jefferies predicts 14% sales and 20% EBITDA CAGR over FY25 to 28. Goldman Sachs keeps a neutral rating on TVS Motor, raising the target price to 3,430 rupees. Now, the new N-Torque 150 and electric two-wheeler launches are expected to boost the market share of TVS. Now, the rare earth metal shortage has eased for now. No upside from the potential GST change is also included yet. Mascot Orc has clearance to negotiate a 70,000 crore rupees deal for 6 P-75I submarines. Now, the project partners with Germany's Thysenk Rupp Marine. Now, Mascot Dock will build the submarines while Thysenk Rupp will handle the design. So, the deal will boost the Indian Navy with advanced submarines. Transrail Lighting secures 837 crore rupees in new transmission and distribution orders. FY26 order inflows reached 3,157 crore rupees, which is up 57% from last year. Now, orders include a major domestic deal and international product supply. The unexecuted order book also grows 44% to 14,654 crore rupees. Signpost India wins exclusive advertising rights for 67 key BMRCL metro stations. Now, the deal lasting until 2034 could generate 600 to 700 crore rupees in its revenue. So, it targets 3 crore monthly riders. This strengthens Signpost's national transit media portfolio as well. Yes Bank gets RBI approval for Sumitomo Mitsui Banking Corporation to buy a 20% stake. SMBC will now acquire shares from State Bank of India and other major banks. It may also purchase an additional 4.99% stake. The approval is valid for 1 year with no promoter status for SMBC. R Systems, an IT company specializing in AI and analytics, has acquired Novigo for 400 crore rupees. Now, Novigo, a profitable IT services firm, boosts the R Systems digital and product engineering capabilities. The acquisition, valued at 6 times Novigo's adjusted EBITDA, is also expected to enhance earnings from year one. It also expands R Systems' market reach to the Middle East and strengthens delivery in southern India. Rekha Jhunjhunwala exits Nazara Tech in June ahead of the online gaming bill. She sells her stake in tranches, earning 770 crore rupees with 4 times returns. Nazara shares plunged 19% in a week, erasing 1,700 crore rupees in investor wealth. The new gaming law hits Nazara's indirect exposure to real money gaming. UBS has maintained its neutral stance on Eicher Motors with a target price of 5,900 rupees. The brokerage firm expects Eicher's tax rate to drop to 18% from the current 28%, as most of its key brands, including Royal Enfield, have engine capacities below 350cc. Now, this change is likely to positively impact the company's profitability. However, UBS notes that the stock has been underperforming due to the ongoing GST confusion. Welspun Corp sells its entire stake in Nuan Shipyard. The company offloads its remaining 6.1% equity shares to Noyan Tradings, a Reliance subsidiary, for 45.32 crore rupees. Now, last month, Welspun sells a 9.9% stake for 55 crore rupees. Now, this completes Welspun's exit from Noyan Shipyard. Seat OH Sri Lanka, a Seat firm, a Seat arm, signs $171 million investment pack with Sri Lanka's Board of Investment. Now, the deal, one of India's largest in Sri Lanka's manufacturing sector, boosts off-way highway tire and tracks production. Now, facilities in the Midigama and Kotugoda focus on export-led output. RBI Governor Malhotra expects minimal impact from US tariff on some sectors. The central bank has local currency agreements with 4 countries, reducing forex risk. Now, measures are in place to boost fund flows to NBFCs, with more planned. The RBI is also prioritizing fintech growth, refining frameworks to support progress without obstacles. Fitch Ratings has affirmed India's credit rating at BBB- with a stable outlook. So the rating is supported by India's robust growth and solid external finances. Fitch forecasts India's GDP growth at 6.5% for FY26, which is driven by solid demand, government capex, and private consumption. However, US tariff pose a moderate downside risk to India's growth forecast. Fitch also notes that lagging structural metrics constrain India's rating. So proposed GST reforms are expected to aid India's consumption and offset growth risks. The Federation of Automobile Dealers Association has urged the government to expedite the proposed GST rationalization reforms, with customers postponing car purchases in anticipation of a GST cut during the festive season. Fada has warned that delaying the reforms could actually turn the festive sales period into a whitewash. The association has requested that the GST Council meetings be held earlier and that the proposed lower GST rates on small cars be implemented before Diwali. NDTV Profit reviewed the letter. The GST Council is set to meet on September 3 to 4 in Delhi to discuss the centre's proposed 2-slab tax structure. The new GST rates are likely to be implemented around September 22, coinciding with the start of Navratri. Now, this move is expected to boost the festive demand. Notifications for the new rates will be rolled out 5 to 7 days after the Council's decision. The proposed 2-slab structure consists of 5% and 18% tax rates. Over 15,000 hospitals across North India will suspend cashless services for Bajaj Alliance general insurance policy holders starting September 1 of 2025. Now, this decision was made by Association of Healthcare Providers India, citing outdated reimbursement tariffs that have not kept pace with rising medical costs. Hospitals claim that Bajaj Alliance has refused to revise tariffs, instead pushing for further reductions. Policyholders will still be able to receive treatment at these hospitals, but will need to settle bills upfront and apply for reimbursement later. Quick service restaurant stocks like Restaurant Brands Asia, Jubilant Foodworks and Westlife are positioned to gain from the proposed GST reforms expected by Diwali 2025. Although the GST rate on QSR services remains at 5% with no input tax credit, lowering GST slabs on raw materials, which is like 10 to 45% falling under 12% GST, will now cut costs, boosting margins by 20 to 90 basis points across the key QSR players. Now, this structural reform aims to reduce the input cost without changing output tax rates, potentially improving profitability and investor sentiment for QSR companies amid a strong consumer demand environment. The Board of Control for Cricket in India, that is the BCCI, has ended its partnership with fantasy gaming platform Dream 11. Now, this is following the passage of the Promotion and Regulation of the Online Gaming Bill 2025. Now, this decision was confirmed by BCCI Secretary, who stated that the board will refrain from associating with similar organizations in the future. The partnership worth 358 crore rupees was set to run until 2026. With just weeks left before the Asia Cup, the BCCI is now racing against time to secure a new front of jersey sponsor. The government has reduced the minimum export price of natural honey from $2,000 per ton to $1,400 per ton effective immediately until December 31st of 2025. Now, this move announced by the Directorate General of Foreign Trade aims to boost the honey exports. The minimum export price was first introduced in March 2024 to regulate the export of natural honey. SpaceX postponed the 10th test flight of its Starship rocket on August 24 of 2025. Now, due to an issue with ground systems at its Texas launch site, the delay announced about 30 minutes before launch marks another setback for the massive vehicle, which has faced multiple explosive failures during previous flights earlier this year. SpaceX aims to reschedule the launches as soon as possible, with Monday, August 25 cleared as the next potential launch date. Now, the test flight is critical for SpaceX ambitions for deep space missions, including NASA's Lunar Artemis program, though significant engineering challenges still remain. OYO is gearing up for its initial public offering with plans to file its draft red herring prospectus in November. Now, the company is targeting a valuation of $7 to $8 billion, with sources indicating that the proposal will be placed before its board next week. So, the IPO valuation is expected to be in the range of 25 to 30 times of the company's EBITDA, with a potential share price of around 70 rupees per share. SoftBank, one of OYO's largest shareholders, has engaged with several banks to assess the market sentiment and also gauge the interest in the IPO. A shocking update in the attack on Delhi Chief Minister Rekha Gupta. The prime accused Rajesh Khimji Sakaria, a 41-year-old from Rajkot, admitted to planning a knife attack during the public hearing on August 20, but abandoned it due to tight security. His accomplice, Tehseen Syed, was arrested for funding the plot. Both face attempt to murder charges. Delhi Chief Minister is now under Z category CRPF protection. With heavy to very heavy rain likely to continue on Monday and Tuesday in several parts of Rajasthan, the state government announced that schools across Jaipur and other districts will be closed as a precautionary measure. According to the Meteorological Centre, Jaipur, an orange alert for extremely heavy rainfall has been issued for Rajsamand, Sirohi and Udaipur districts for Monday, while a yellow alert warning of heavy rainfall has been sounded in about a dozen districts. The department noted the intense spell is likely to continue over the next 2 to 3 days. Traveling on the Delhi metro just got costlier as the DMRC announced its first fare hike since 2017, that is 8 years. Now, ticket prices have risen by 1 rupee to 4 rupee based on the distance, with the Airport Express line seeing a 5 rupee increase. The minimum fare is now 11 rupees and the maximum is 64 rupees. The DMRC cites rising operational costs, but commuters are frustrated, citing overcrowding and service issues. Smart card users still get a 10% discount. US President Donald Trump escalated tensions with Maryland Governor on August 24, threatening to deploy National Guard troops to Baltimore after Moore invited him for a safety walk to address the public safety. Now, Trump, via Truth Social, called Baltimore crime-ridden and referenced his DC deployment of 2,000 troops, now armed as last resort. Moore on CBS's Face the Nation criticized Trump's ignorant remarks, noting Baltimore's 24% homicide drop in 2024. Democrats, including Illinois' Pritzker, call the deployments an abuse of power. US media also reports 1,700 troops may deploy across 19 states, escalating concerns over militarized policing. Typhoon Kajiki struck southern China island with strong winds and heavy rains on August 24 before heading towards Vietnam's central coast. Now, in response, China has evacuated around 20,000 people, while Vietnam ordered mass evacuations of over 5 lakh residents, closed schools and airports, and cancelled the flights. The typhoon, packing winds up to 166 km per hour, is expected to make a landfall in Vietnam's Thanh Va Aningay, bringing risk of flooding, landslides and storm surges. Vietnamese authorities deployed large military and paramilitary forces for evacuation and rescue operations as the region braces for the most powerful storm this year. Israeli airstrikes hit Nasser Hospital in Gaza today, killing at least 15 people, including 3 journalists, Palestinian health officials report. Now, among the dead was Reuters contractor Hussam al-Masri. A cameraman, another Reuters photographer, Hatem Khalid, was wounded. The Israeli military has not commented on the strikes which targeted the hospital's 4th floor. This attack adds to the ongoing violence in Gaza, with over 240 journalists killed since October 2023. Kylian Mbappe was the star of the show as Real Madrid cruised to a 3-0 win over newly promoted Real Oviedo in La Liga. The French striker scored twice, with his first coming in the 37th minute, followed by an 83rd minute strike set up by Vinicius Jr., who sealed the victory with a stoppage time goal. Madrid's dominant performance keeps their perfect start under coach Xabi Alonso. Manchester United's winless streak persists after a draw at Fulham. Bruno Fernandes missed a crucial penalty. And despite Rodrigo Muniz's own goal giving United the lead, Fulham's late equalizer secured a point. Meanwhile, Everton marked their new Bramley Moore Dock Stadium opening with a 8-2-0 victory over Brighton, powered by Grealish 2 assists. A heartbreaking tragedy has struck Jammu and Kashmir's cricket community. Young cricketer Farid Hussain from Poonch lost his life in a road accident on August 20. CCTV footages show that the 23-year-old colliding with a suddenly opened car door while riding his scooter. Despite being rushed to the hospital, he succumbed to his injuries. With that, viewers, it's a wrap on this edition of Market Express, but please stay tuned and don't go anywhere.
Pulling us into this country. They argue, I conclude. They deflect, I drill down. Stop. This isn't a free-for-all. It's a reckoning. No filler, no fog. Only the facts and where they lead. Every night at 9, the case closes because the buck stops here.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold
CDSL
for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict,
Benchmarks end higher with Nifty gaining 7 out of 8 trading sessions. Nifty IT outperforms the sectoral indices to finish more than 2% in the green. Nifty Media loses the most, broader markets underperform. The GST Council is expected to implement the revised tax slabs from September 22nd. Sources indicate that formal notifications will be issued within 5 to 7 days following the Council's meeting scheduled for September 3rd and 4th. And in the wake of the online gaming bill, real money gaming platforms diversify into new businesses. While Dream11 is preparing to enter financial services, Winzo launches a short video platform. And it's a setback for Bajaj Alliance Health Insurance's customers as the Association of Healthcare Providers advises its members in North India to stop cashless services for the insurer due to long-standing disputes. The Supreme Court pulls up stand-up comedian Samay Rana and others for jokes mocking persons with disabilities, says when you are commercializing speech, you cannot hurt the sentiments of a community. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Let's move on to our top focus this evening. It appears that festive season will arrive earlier this year with a likely GST rate cut around the 22nd of September. Prices of goods are likely to fall by 10%, giving shoppers a reason to splurge. Both online and offline retailers are jumping in early. Flipkart's Big Billion Days and Amazon's Great Indian Festival are scheduled mid-September, offering discounts of up to 80%. Meanwhile, Shoppers Stop, Nykaa and Myntra are already luring customers with special festive sales, while brands are pushing easy finance schemes and faster deliveries to cash in on the surging demand. From GST relief to bumper bargains, this Diwali is shaping up to be a festival of spending. And on that note, let's go across to my colleague Shrimi, who has more details on the rollout of the new GST rates.
Well, absolutely. Government is ready to roll out the new GST structure likely around September 22nd. And in fact, what we are picking up at this point that the GST Council meeting scheduled on September 3rd and 4th, they are going to deliberate on, of course, the two slab structure which Centre proposed. And there they are going to take a call and take decision on this massive restructuring of the indirect tax regime. And in fact, sources also hinting at that soon after the meeting gets over, they are putting out the notification in the span of 5 to 7 days, and perhaps they'll try to implement the new rates likely around September 22nd, and that couldn't be more deliberate, keeping in mind the festive season is kick-starting with Navratri, and in fact they are likely to sort of implement all rates so that it will have impact on boosting of course as consumption and the overall festive demand. And as we have been reporting about it, that this two-slab structure where a lot of essential item, paneer, ghee, etc., which is currently at the 12% bracket, is moving to 5%, and then your small cars, your aspirational goods, white goods, etc., which is currently at the 28%, is moving to 18%. Now, of course, the special rate 40%, where we could see the sin goods and the high-end cars and the high-end bikes, and that is something is also deliberate upon, and the decision would be taken on the future of compensation cess as well, because there are the states which are pitching for the additional levy in place of compensation as the regime nearing to an end. And in fact we are also learning that government may perhaps able to repay the debt much in advance, even before a quarter, by October to November. So the tax incidence, however, remains the same. So we will kind of see to how they are going to implement the new levy, with the center pushing for it, and whether it could be on the high-end car also, because earlier the cess was on the high-end cars as well as the all the tobacco related items. So this is going to be a very high-end packed agenda for the GST Council meeting, and both center and state perhaps will push for rolling out the new rate and the new structure by around September 22nd is what indication we are getting.
Thanks, Shrimi, for that. Meanwhile, the Federation of Automobile Dealers Association, also known as Fada, is calling on the government to fast-track the rollout of GST rationalization reforms, citing a slowdown in festive momentum. Now, according to Fada CEO Saharsh Damani, dealers have ramped up inventory ahead of Onam, anticipating strong demand, but are now witnessing a sharp drop in conversions, with customer inquiries not translating into bookings. But first, let's turn to my colleague Danish Anand, who's tracking the industry's push to advance the GST Council meeting, currently slated for September, as auto dealers hope for clarity and relief well before Diwali.
FADA India has written a letter to three key ministries, Finance Ministry, Commerce Ministry and the Heavy Industries Ministry, seeking the early implementation of the proposed norms. So like last week, the GOM on GST rate rationalization had met, and they had recommended that the GST of 28% that is currently applicable on small cars, that should be reduced to 18%. And similarly, GST on luxury vehicles would be charged at 40%. So basically, the GST Council will have to take the final call. But after this information has come out, the general public is now delaying their purchasing plans of cars, and the FADA has clearly said that this is creating some kind of pressure on the dealerships, as many people are just either postponing their bookings or they're waiting for the GST to come down. And the concern of FADA India is the fact that the festive period is at least 4 weeks away. So in the run-up to the festive season, the dealers anticipate like really slow sales, and hence they have sought early implementation of the proposed GST norms. The GST Council meeting is supposed to take place on 3rd to 4th September, and they're seeking that before the festive season, the reduced GST rates should be implemented so that they don't face any losses.
We are entering the festive period in next 4 to 5 days, with Onam coming up in Kerala and Ganesh Chaturthi in the western part of the country. As we have released in last month's press release, when we did the July auto retail numbers, industry was sitting on 55 to 57 days of inventory, which is almost 2 months of inventory in hand at this point of time. And as you know, festivals is a big period for automobile industry, and dealers generally keep a higher inventory at their disposal. Now, with the announcement coming on 15th of August by the Honorable Prime Minister, we have seen that even though inquiry and walk-ins have been extremely healthy, the conversion rates from inquiry to booking, that has taken a slight hit. And we are thinking that because of this, because of the new rate information which will come out very soon, and as per today's news, by 22nd of September.
Earlier today, we also sat down with Kuldeep Singh Rathi, Chairman and Managing Director of Ask Automotive, who shared his perspective on the upcoming GST 2.0 reforms. Now, he sees the new framework as a catalyst for growth in the auto sector, offering a much-needed boost to efficiency and competitiveness. Here's what he had to say.
The two-wheeler sector has not even touched the volumes that it touched in 18-19. After that, COVID came and the other after effects came, and then the BS4, BS6, and the prices kept on increasing for the common man. And the two-wheeler, which used to be about 65,000, is now nothing is available less than 90,000 rupees. So there has been not a healthy demand, and as you know that in the quarter one also, our two-wheeler sector grew only by 0.7%. But this GST is such a wonderful news, and I'm an optimist, and I feel that this financial year itself, we will be able to cross in the two-wheelers the last highest numbers of 18-19. That's one part. So all of us who are supplying to the two-wheelers are going to gain extremely because of the higher volumes, number one. Number two, our parts, luckily or unluckily, whatever initially they were all being 28%. So now all those parts which we supply to the independent aftermarket, which is also a very big revenue for us, amounting to 400 crores. So that part was 28%. Which will now also become 18%. So there'll be very, very big boost in the independent aftermarket, where there are so many grey market operators are playing even in a safety item like brakes.
And let's head straight to Khan Market in New Delhi, where Aishwarya is tracking the early festive buzz. I'll also be going to my colleague Charu, posted outside the Nykaa store, watching how online and offline retailers are racing to cash in on the season's shopping surge. But first to Aishwarya in New Delhi. Aishwarya, what's the general vibe on ground? Are shoppers already in festive mode?
Well, Navratri is just around the corner, and of course the GST rate cut is good news as well. What we're picking up currently is that big bargains can be seen across malls. Here at the High Street in New Delhi, Khan Market, you do have certain stores as well, but Shoppers Stop, of course, what we are picking up so far is that they are offering sales up to 50%. Myntra, on the other hand, as far as the online sales are concerned, Myntra are running Ganesh Chaturthi as well as Onam offers up to 80% across different categories of products. Besides that, Amazon and Flipkart also, some of the flagship sales will also begin very, very soon. Around mid-September is what you will see. So ahead of course, the GST rate cut discounts and the festive period also setting in, the mood is, of course, peppy and positive.
Aishwarya, thank you so much for that. We'll continue tracking all of the discounts and offers. Let me quickly go across to my colleague Charu Singh, who is joining us and visited the Nykaa store in Chembur in Mumbai, where the festive spirit is already picking up steam. She spoke to some shoppers and staff and got a sense of what's driving expectations this season and how beauty and fashion brands are gearing up for a retail rush.
The government is expecting to come out with GST rate rationalization cuts by September 22. Now, this is expected to increase the consumers' consumption on online retail stores and aggregator apps. We are also expecting to see an increase of about 25 to 30% this festive season, when the retailers are going to be announcing their big sales and inventory is being updated accordingly. So, what are we supposed to look forward to? Several retailers on like Flipkart, Amazon, Myntra are going to be coming out with their annual flagship events. For example, the Big Billion Days or Indian Great Festival. In fact, the discounts up to 80% are going to be offered to consumers on this. Other brands and other retailers who are going to be offering such discounts include Myntra. They're also going to be increasing their services under M Now segment, which includes delivery in an expedited manner. Shoppers Stop is also going to be announcing some major sales. And apart from that, we are expecting a lot of disruption and activity on the online retail platforms.
Thanks so much for that, Charu. Moving on to how the markets fared today. Benchmark indices wrapped up Monday's session on a strong footing. The Nifty closed right at the 25,000 mark, while the Sensex surged 329 points to settle at 81,600, riding on upbeat global cues and sectoral momentum. Now, IT stocks have led the charge today, rallying 2.3% with heavyweights like Infosys and Tech Mahindra fueling the rally. We saw realty and metal indices also posting solid gains, buoyed by renewed investor interest and infrastructure optimism. But on the flip side, FMCG, media and PSU banks came under pressure, capping broader market gains as profit booking and valuation concerns have weighed in. So for a deeper dive into today's movers and shakers, let's hand it over to Harsh, who's tracking the pulse of the market. Harsh, over to you.
Well, the Nifty had a relatively good outing today to start the week off. We were up around 0.4% thereabouts. We were steady, came off the highs for sure, but there wasn't a meaningful decline from the highs. So it was a decent kind of day. We breached 25,000 for a brief period of time during the day, and thereafter we cooled off and we've closed below it though. What led really the rally was IT. It was at the front of the kind of rally we saw. And IT stocks like TCS, Infosys led from the very front. We saw some of these show very good traction in trade. The Nifty IT index was up 2.5% and did very well for the day. As a result, you also saw some positive impact on the Nifty 50 as a result, because you had out of the top 5 gainers on the Nifty, we saw 4 of them being IT stocks. So some bit of zinc clearly visible. What also did relatively okay in trade was something like a pharma index did okay. What didn't do as well though was more of metals, more of defense. So some of those sectors didn't do entirely all that well. Overall, when you're looking at the breadth as well, we were tilted towards the declines, just 900 advances to around 1200 declines. But for a better part of the day, we did fairly well on the breadth as well. The Nifty mid-cap and small-cap indices slipped from their highs over 0.5%. We closed marginally in the red where those were concerned, but that slip at the end of the trading session was obviously something of a concern that we saw, and they of course therefore underperformed the benchmark Nifty 50. Broadly, it was a good day of trade with the broader markets seeing a bit of negativity on the back of that last hour or so where those indices saw a bit of a slip.
Thanks for that, Harsh. Meanwhile, SEAT has just rolled out its new Secura Drive Circle tires, India's first road-ready passenger car tires made up with just 90% sustainable bio-based materials. Designed for both passenger cars and electric vehicles, these tires mark a major leap in eco-conscious mobility.
Are aligned with the entire space of innovation. We recently launched a run flat tire. We've added it up with multiple technologies like CALM and Zera 21. We wanted to take the entire world of innovation one step ahead, and we're very happy that we have an absolutely road-ready 90% sustainable tire. While the rest of the world definitely speaks of concept tire, we wanted to go one step ahead. Today there are consumers in the country who are highly discerning and who definitely want to not just buy a sustainable vehicle but also buy everything that's around the vehicle to be sustainable. And for that customer, we wanted to build an interest. And the reason why we wanted to take the opportunity to also celebrate Rohit Sharma, I think he's given us one of the best memories in terms of 264, the innings of 264 runs. And we wanted to club it together, and we have 264 tires, a limited edition, available on one particular size for the market to kind of and for consumers to kind of adopt to.
You mentioned 264 tires and this being limited edition. So just talk us through what is next for you, because you're with this particular launch. What is your current aspirations as well as expectations from learnings of this, and how quickly do you think that you will be able to roll this out at scale as you mentioned?
The fact that we have 264 tires on a particular size speaks of the capability of the plant to scale up. So we can scale up from a manufacturing perspective, and we are absolutely ready. Of course, the idea of keeping it limited edition is to see the audience and to see how consumers are interested in this particular space, and that gives us an opportunity to kind of build that awareness, build that interest, and when we see the right opportunity, we will have an absolute wherewithal, either from a sourcing perspective or a manufacturing perspective, or even from a fitment perspective, across the country to scale up into any form and manner.
Meanwhile, RBI Governor Sanjay Malhotra is striking a note of cautious optimism amid rising trade tensions. Speaking at a FICCI event, he addressed the potential fallout from the 50% US tariffs on Indian goods, saying that ongoing negotiations could soften the blow and that the impact on most sectors is likely to be limited. So what's the road ahead for India's trade and monetary policy? Let's listen to what the governor had to say.
The RBI has always been, very proactive in whatever needs to be done for the betterment, for the advancement and the growth of our country. Insofar as tariffs are concerned, we had post the April announcements by US of increased tariffs of 26% at that point of time. We had projected downwards our GDP growth by 20 basis points. And now we await. After that, there has been another additional 25% tariff, making it 50%. It is yet to kick in. Another couple of days, we are hopeful that the tariff negotiations, the tariff will play out, and the impact will be minimal.
And there's big trouble brewing for Bajaj Alliance health insurance customers. The Association of Healthcare Providers India has asked over 15,000 hospitals to suspend cashless treatment for Bajaj Alliance policyholders starting September the 1st. What does this mean for patients and policyholders now? Pallavi joining us with the full picture, including what hospitals are saying, how Bajaj Alliance is responding, and what customers should do next.
So the Association of Healthcare Providers, which essentially represents roughly about 15,000 hospitals and healthcare institutions across the country, has advised its member hospitals to stop providing cashless treatment services for policyholders of Bajaj Alliance General Insurance, and this is set to come into effect from September 1st. Now, the advisory essentially follows complaints which the AHPI says it has received from member hospitals regarding Bajaj Alliance's refusal to revise hospital reimbursement rates. Now, the AHPI has also said that they are likely to meet representatives from Bajaj Alliance on Thursday to discuss the suspension of these cashless services. Members of the core committee of the AHPI are likely to meet representatives from the company, and assuming the talks go well, we could see a withdrawal of this advisory. Also, the AHPI is also in talks with Care Health Insurance, and they're also likely to meet Care Health Insurance soon regarding the same issue.
When you commercialize speech, you cannot hurt the sentiments of a community. That's the strong message coming in from the Supreme Court as it pulled up comedian Samay Rana and several others for making jokes that mocked persons with disabilities. The court was hearing a petition filed by the Cure SMA Foundation of India, which flagged offensive content from Rana's show India's Got Latent, including remarks about a child with spinal muscular atrophy. NDTV's Nupur Dogra joins us now with more on the court's observations, the influencers' response, and what this means for content creators going forward.
When you are commercializing speech, you cannot hurt the sentiments of a community. These were the remarks Supreme Court today made while pulling up Samay Rana and several other comics on jokes mocking persons with disabilities and rare diseases. The bench of Justice Suryakant and Justice Joy Malabakchi in very clear words today made their stance clear that they would not let this issue go easily. they have now asked the comedians to file unconditional apology and publish it across their social media channels and podcast. The Supreme Court also expressed concern about the kind of statements made especially against persons with disability and rare diseases. The Supreme Court today has given the time till next hearing to these stand-up comics, including Samirana, to course correct and to show how what steps they are taking and how are they using their social media platforms and followers to influence and take forward the cause of persons with rare diseases and disability. The Supreme Court has also asked them to reply on their capacity to bear penalties for their remarks and insensitive jokes against persons with disability. The Supreme Court today made its stance very clear that it won't let this matter go easily. The top court also asked the centre to frame guidelines, to come up with guidelines for comics and influencers using social media to commercialize their speech. The top court said that when it comes to commercialization of speech, freedom of speech cannot be used as an excuse to hurt sentiments of a particular community. So these were some very important observations and suggestions made by the Supreme Court today. The Supreme Court has sought response from centre and especially the ministry, concerned ministry, over the steps they propose to take to ensure that there are guidelines to regulate speeches by these social media influencers.
Thanks, Nupur, and that's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit for more news and updates.
Pulling us other opposition parties. They argue, I conclude. They deflect, I drill down. This isn't a free-for-all. It's a reckoning. No filler, no fog. Only the facts and where they lead. Every night at 9, the case closes because the buck stops here. They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
They're the force behind some of India's most respected business empires. But you've rarely heard them speak. Now, for the first time, these leaders open up on succession, conflict, governance, and inheritance. Join me as we step inside boardrooms and living rooms of India's most enduring family businesses for real stories, raw conversation, resilient legacies.
Hello and welcome. You're watching KYC. I'm Harsh Saita, and when a company worth 1500 crore in terms of market cap wins a potential 600 to 700 crore in top line, it certainly rolls a few eyes, and it ought to, right? It's understandable. We're going to be speaking to Signpost India today. It's a very, very small company in relative terms to the companies we speak with, but it's an interesting one because of what I just said. And what I want to know in particular is with regard to, one, their win today, which is around 700 crore in terms of revenue potential over the next 9 years. Even if I broadly extrapolate that to 70 to 80 crore, they've also done another, or rather they've had another big win, which is the Karnataka win. So it's the Karnataka plus the Bangalore Metro wins, which are cumulatively adding around 150 crore in top line annually. That's the broad-based ballpark that is being penciled in. So you want to wait and watch as to whether that actually plays out like the way we're thinking it will. And what after that, what the margins on the business that they are winning is going to be like. So that's number two that I want to know. What are the margins like on the wins? They do 20% plus typically. I'd want to know whether they can maintain that kind of a clip. The third one is, of course, you've won Bangalore as a big metro, but could you win Mumbai and Delhi? Because those could be larger wins, given that the new Mumbai metro is coming in thick and fast. Those could well be potential wins for something like a Signpost India, and it could add to the potential top line and the growth that one is penciling in. And mind you, it's a 450 odd crore top line that you're all talking about. So already a 30% growth that we're seeing, and with the potential of that this might hold, and I want to understand how realistic that is. It could well be a tilter in favor of the way one looks at the company. The fourth one is what will take it to win. So say one is that they come out and they say that they are super confident about winning this. How is competition looking at it? How strong is competition in this space? And what will it take? What is it? What are the key factors that they are looking at which give them the confidence that that win is possible? Because for you, the viewer or the investor, or for me, the analyst, it's important to understand what the risks are as well. The fifth piece is understanding the working capital cycle in the business. It's been a bit choppy where cash flow is concerned. We'll talk about that. While the last couple of years has been decent, but I'd want to know whether we can really see an ironed out cash flow coming straight through, or is there something which will get locked in working capital as they start to win these large contracts. The sixth piece is with regard to capex. Does their business require it, and therefore what's the funding outlook? Because I've started to see debt increase in the system. So I'd want to know whether that could continue or not, or will we see actually a pay down with regard to where debt is concerned, and then just overall trying to get a sense of what the risks in the business are looking like. So and that is also a bit with regard to how the conversation goes and what's the pulse we all get as part of that conversation. So we'll try and understand that, because mind you, it's a 1500 crore market cap company, so you want to be careful, right? Just blindly considering it will be a tough one. Now let's look at the company itself. It was incorporated in 2008. Signpost India is a merger of two companies in 2023, thereafter listing in 2024. But it was incorporated originally in 2008. It's a digital out-of-home and integrated advertising company. The company focuses on long-term government contracts currently. It combines advertising with public amenities like bus shelters and the like, and I'll talk a little bit about that. And it currently manages around 33.9 million square feet of ad space. So that's the broad brush understanding. Now let's talk about specific services that they provide. One is the digital out-of-home advertising, as one should call it. This includes largely dynamic digital boards. You would have seen it on highways, and it's a slightly high margin kind of a business, uses AI and data analytics. It's used across, say, airports, metros, city centers, highways, as I did mention. The second piece is transit advertising. That is advertising on bus shelters, inside buses, at airports. It's slightly medium to high margin is the sense that we get. The third piece is mobility advertising. Campaigns on moving vehicles, like bicycles, vans, stuff like that. And that advertising also is something that they handle. And Uber having a small billboard at the top, you might have seen that on a few Ubers and certain other vehicles, and that also is part of advertising. Now you look at the conventional out-of-home service. This is a slightly lower margin business. It includes static billboards, street furniture, traditional formats broadly is what this one deals with. And then there's design and content lab. This is more custom creative solutions which advertisers require. So they deal with a whole host of things, but the largest chunk of it is the first one, which is the digital advertising, which is out-of-home advertising. Now let me talk about the business model broadly. It wins long leases or ad rights through tenders that they give, and this is generally to governments and municipalities that they generally work with. And then they install and maintain advertising infrastructure which is handed over to them. They sell ad space also to large brands, agencies, and ensure that that tie-in happens, agency to government. And then thereafter they ensure that there is monetization via display occupancy, asset scale, price optimization. So all of that is what they kind of work around. That's the broad brush understanding of how the business works, and you would have seen it in real life and therefore able to relate to it far better than those graphics which are on your screen. So broadly, that's the way to take it. Now let's talk about the key metrics that we'll discuss today. Now it's a very, very small company, but nonetheless, we'll pull out the metrics that we'll look at: income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, outlook. So we'll try and cover all of that. We do have the valuation picture, but it's tough to determine, right? It's not exactly as easy to figure out the valuation. So broadly, that's how we'll take it. Let's start off with the income statement, and that will also give us a picture on how the valuation has evolved. Around 40 crore odd of profit after tax, which they've clocked in FY25, leading to approximately 40 times earnings. Broadly is the valuation at which they trade at. Your revenue has grown fairly okay. EBITDA also around 30% growth over the last 2 years, maybe cumulative. But you look at the margins, they've shrunk just a wee bit. Net profit though absolutely flat, and I'll talk a little bit about that trend, which is what may just be a bit of a concern. It's actually the increase in depreciation cost which has led to a lid that they've had to keep with regard to their profit after tax. So this is a non-cash expenditure which is leading to a shrink with regard to the profit before tax, which is impacting the profit after tax as well. So that's something you want to keep in mind, that it's actually depreciation which is hurting profitability. But broadly, that's how it shapes up. This is Q1 FY26 performance of a very, very low base. That's the QOQ growth number. The YOY growth also decently healthy, and an annualized 60 odd crore of profit after tax. So it's gotten slightly better where Q1 FY26 is concerned. You want to understand sustainability of that kind of number. Again, this 38% revenue growth looking quite healthy in that sense. But we've given this a neutral only from a perspective that this ballooning of debt cost is leading to profit outcomes which are far from ideal. So you want to wait and watch as to how that plays out and what the reasons for that could be going forward. Mind you, there is no guidance that this company has given, and hence difficult to kind of extrapolate what this could look like going forward. So we'll probably be one of the first few to understand this better. Let's also now go to the balance sheet, and you're looking at equity capital plus reserves, which are decently healthy in that sense. Let's pull out those numbers if we can. So there you go. So you've got that book value of around 221 odd crore. The borrowing number has gone up, as you can see, visibly gone up over the last couple of years. I'd want to know where this goes. But what is the reason why I'm not too worried? One is you've got a healthy cash balance of around 50 crore, which is a third of the borrowing number. So it kind of takes care to some extent of that borrowing. Also, the EBITDA, the annual EBITDA number, sits at around 90 odd crore, which is operating profit before interest and taxes. If I remove interest and I remove taxes, which is typically the cash element of this entire picture, then you're broadly getting a 50 crore odd number. So not looking bad per se. 50 crore cash, 50 crore annual EBITDA, which or rather post interest and post cash expenses kind of earnings, and therefore this gives you a decent picture as to how borrowing is going. Now the only possible risk here is if your working capital need balloons all of a sudden, which is why that big question on working capital, and that will also have an impact on the balance sheet. So we've again been conservative here, with great difficulty given this a neutral, but broadly that's the way one ought to think about it. Borrowing could become a problem. Mind you, companies only start facing huge issues even in bad cycles, largely because of borrowing. So if that borrowing number is elevated, you have to be worried. Again, we'll ask that question to management and get a better perspective of that as well. Let me talk about cash flow now. And when you're looking at cash flow to profit after tax, largely the ratios are quite healthy. There's been a large reversal which has happened in FY24. You can see how CFO to PAT has just doubled, 2x of what the PAT is, which is positive, but that's largely because of the drag we've seen in FY23. So FY24 has gotten much, much better. FY25 largely steady state, around 80 odd %. That's the broad take with regard to how CFO to PAT is. But given that you've seen a large ballooning of depreciation, you would ideally have expected that your cash flow from operations, even in FY25, was far healthier than profit after tax, right? That's generally the norm. 20 crore worth of depreciation expense, and we're not seeing the benefit of that on cash flow from operating activities. So that might also be a bit of a concern, trying to understand all of that. But it's largely because working capital needs have really ballooned, and that's where the concern lies. I'd want to know whether that is realistic and sustainable. Now, the fourth piece, or that's just part of the business, how should one look at it? Now, let's talk about return ratios. Return ratios are in that 15 to 24% band at this point. Again, you want to start to understand sustainability of this over a period of years. So I'd want to wait and watch even with regard to return ratios. A large part of that will be linked to profitability, of course, and capex. So both of that will be slightly more important to understand, and we will try and understand that. So that's on return ratios. Now let's talk about shareholding. 75% promoter owned, no concerns there, and therefore we've given this a thumbs up. The number of shareholders also largely has gone up. It's on an upward trend. from 11,000 odd shareholders in FY24, it's up to around 16,500 shareholders currently. So the number of shareholders has gone up, something that you want to keep in mind broadly. Now let's talk about street cred. It's been choppy for a shareholder who's holding this. 24% 1 month, but year to date the stock is down. 6 months the stock is up. And when you're looking at the 2-year performance, which is since listing, which is Feb of 2024, again it's been difficult. So we've again not been able to point a direction, but the returns and the fluctuations have been strong. So you want to be careful, and therefore we've given this one a neutral as well. Let me talk now about what the street coverage looks like. There is one very, very small brokerage which is covering this one, and therefore there's nothing meaningful here. We of course have to therefore give this a thumbs down. Unfortunately, this is the only one, and it's understandable. 1,500 crore market cap, generally not covered by too many analysts, and it's understandable, and therefore we've given this a thumbs down. Last, on the outlook piece, and there's plenty to do with regard to where the outlook is concerned. I did speak a lot about it already, but they've received exclusive advertising rights for all 67 metro stations by the Bangalore Metro. It's an SPV, or rather a JV form between the government of Karnataka and government of India, and the expected revenue potential is around 700 odd crore. It will attract around 3 crore of monthly ridership, and the company has gained exclusive advertising rights for a 9-year tenure. So clearly positive with regard to this one. Also, let me talk about some developments in July of 2025. Now, in that regard, they've had a strategic exclusive agreement with Comor NB Tech Solutions Private Limited. The highlights of this is they've been granted exclusive rights for advertising and promotional activities across city flow buses, right? And this is of course a premium bus network. They've been granted interior branding rights. It's an exclusive 5-year agreement. It's all positive in that sense, and the agreement commences with the deployment of 350 buses across key urban markets, including Mumbai Metropolitan, Thane, Hyderabad and Delhi. So it's multi-city as well. So that's the second big win. The third one is where the High Court has allowed the company to resume operations. The company has received an order enabling resumption of advertising operations in Bengaluru. The High Court nullified notices prior which had directed the company to dismantle advertising structures. All of that again positive. This should add another 70 crore to top line. So outlook looking good, but I want to try and understand this better and deeper, and we have with us Shripad Ashtekar, who's the managing director at Signpost. But just before that, let's quickly rate it on our KYC rating parameter, and what you'll see broadly is neutral ratings, but we've explained some of those ratings to you, and of course we'll have a better lens into that once we speak with Mr. Ashtekar, who's the managing director at Signpost. Let me go straight to him. So great having you. So let me start off with some of the wins you've had over the last maybe 2 to 3 months. Give us a clear picture. How much does this add annually to your top line, and how quickly does this revenue potential start to translate?
Thank you for having me. This recent wins, which includes more about the transit advertising, which we call in OOH, which is impacting the top line and even the bottom line. The addition has given a growth of around 25-26% the last quarter, and the similar pattern we see from the recent investment what we did in Bombay or in other markets in the country. So our focus area would be always around the transit, which is a more networked and more data-driven approach.
Got it. So how much should it add to top line? Sorry, sir, trying to understand that. And does it come in FY26? Do you expect 150 crore plus in terms of top line addition?
So this revenue, which we have projected for 9 years, will definitely start giving the yield from the second half of the year, and definitely it will be around the same number what you are talking about.
Understood. So maybe H2 onwards, so may not be the full 150 crore in year 1. So what about the Bangalore High Court order? How much does that add to your top line? Give us that perspective. That should add around 60-70 crore to top line as per disclosures.
Yeah, you're right. So basically, we should look at these all the projects which is the High Court which has given the green signal to start with, which is around the traffic booths we have already installed, and the digitization of the panel around the junctions, and plus the Bangalore Metro. What we are talking about, we recently signed the contract with BMRCL. So it is more about the traffic commuters. Currently is around 7 to 8 lakhs daily commuter in the Bangalore Metro, and which is going to double as the phase 2 started, which will be around 15 lakhs. So if you and the implementation and the sweet spot is about the tech savvy and young traffic, which will be in the metro commuters. So ideally, we would see the same growth which we have projected for around 700 crores within 9 years.
Got it. So what about the City Flow contract? How much does that generate annually?
So it's a small contract as compared to the fleet what we operate nationally, which includes Chennai, Bangalore, Calcutta, Mumbai, Pune. But definitely the data-driven approach of City Flow will be adding a lot of value in terms of the delivery part to the brand to get the more precise ROI. So the value proposition, it will be small because the number of buses operating, but it is growing right now. Like Hyderabad also has seen the growth in number of buses. So it's a small number, but it's around 2% or 2.5% to our total last year revenue.
Okay. So that's relatively smaller in comparison. So what is the potential coming in from Delhi and Mumbai Metro? Are those at all up for grabs? Are you in the running for it? And what is competition looking like? How likely are you to win it?
So Bombay already 4 lines are operating, out of which 2 we are already having the rights for 15 years, which is a line number 7 and line number 2A, and we have the exclusive rights for 15 years for the 2 lines. And upcoming lines, definitely we will be participating, which is more towards the exterior part of the infrastructure of metros in Mumbai, and Delhi also will be focusing on to improve.
When did the revenue for this start to come to you? Was it Q1 FY26 or before?
No, as I say, in out of hope, whatever we start, see, it's a contract for long term, right? So whenever we implement the phase-wise implementation, the revenue starts from that spaces. So suppose out of 67 stations, if we start implementing around 10 stations within 3 months, so the revenue from 10 stations will start coming, and subsequently the same phase-wise we will be completing that.
Got it. Okay. What is the margin typically that you operate at, and what is the revenue potential from the likely wins you can have from a Mumbai or a Delhi? Just give us those 2 numbers broadly.
So overall transit, which has a projection of 4,000 crores revenue by 2027, and currently what we have is around 10-15% out of that. So the growth pattern, what we see with the recent wins and the other contracts which are operating, where the investment has already gone, the bus shelters network in Mumbai, you see the huge difference in terms of quality and the implementation what we did, including the design part, which has been recognized globally. But as you see the projection or the growth as a DOH market in India will be around 25 to 30% because of the digital and technology and the what we call it as a phygital also. So this growth pattern will definitely add the numbers to the contracts where we have already invested in last two years, and the same pattern what we are talking around the Bangalore or Mumbai will be under the same umbrella.
Trying to understand margins and profitability, would your margin number broadly be 20 to 22% across cycles, or would you see choppiness on the margin front? Also on profitability, what's the kind of growth expectation given that you already have very good visibility with regard to your top line?
So pattern will be the same what we have achieved in Q1. It will not be a model which we have seen, the numbers which we have seen in last year Q4 because of the implementation and the buyouts of the projects which were under the implementation and started giving the revenue from Q1. So you will see the similar kind of a growth which we have already achieved in Q1, which is
Okay.
which is normally expected as a low